T-minus 90 seconds and counting. All systems are go. We're about 90 seconds from the launch of Space Shuttle Discovery. T-minus 60 seconds and counting. We are transferring to orbiter internal power at this time. Discovery is now running off its 3 onboard fuel cells. Coming up on a go for auto sequence start. And we have a go for auto sequence start. Discovery's onboard computers have primary control of all the vehicle's critical functions. T-minus 17 seconds and counting. 15. 12. 11. 10. 9. 8. 7. 6. Start. 2. 1. Booster ignition and liftoff of the Space Shuttle Discovery, returning to the space station, paving the way for future missions beyond.
Discovery's onboard computers commanding the main engine nozzles to swivel, aiming the shuttle for its precise target in space for main engine cutoff.
Okay, you sound good.
Discovery Houston, negative return.
Copy, negative return. getting cold, you're needing a shoulder. Puff out your chest and be a little bolder. All we do is we buy and hold. There will be shills who wanna steal your thrills. There will be friends who hold till the end. There will be doubt, fear and cloud, but it's all in your head. Those hedges are dead. Panic and fear really are near, but it's not ours to own. We have shown that all we do is buy and hold. Oh, there will be shills who wanna steal your thrills, and there will be friends who hold till the end, and there will be doubt, fear and cloud, but it's all in your head. Those hedges are dead. So when the night's getting colder, you're needing that shoulder. These apes got your back. We got each other. All we do is we buy and hold.
Good morning, you filthy apes. Welcome to AMC and APE, where we buy, we hold, and we screw the hedgies. That's right, this is where we like to fling poo and eat crayons for breakfast. Rock strong. Oh man, it's another good morning, guys. Today would be the day. Today, I know so many people have said, what if it breaks underneath $1? Well, what if it breaks underneath $1? Today would be the day. Today would be the day where Ape would break under $1. SSR trips today at $9 or 0.945. So 94 cents, 94 and a half cents is where Ape would trip SSR for the day today. So if there was going to be a day where you would imagine that this would be the case, today would be that day. I'm not worried about it. It doesn't scare me. It doesn't bother me one bit. I know what price is. I know what we hold. I know we hold a royal flush. It does not matter whether they drop the price to whatever it is they decide to drop it to. It does not. I have no fear. Keto's coming in with price prediction already this morning. 813 to 1113. Keto, I got you down. Same numbers as yesterday. Gotcha. Yeah. So Nikki said I want the big tramp back. I had Pantheon working on the big tramp, and I think there was a little bit of confusion between me and Pantheon about how to restyle the big tramp back into what it used to look like, and instead I got this somehow. So I don't know what this thing does. I don't know. Maybe we're gonna have to go back to the future or something in order to figure out what this is. Yesterday we did a little bit of that Back to the Future. We went back and we looked at GME and what happened during the squeeze. A lot of people seem to have this misconception of how fast or how slow a squeeze play will look like. A real squeeze, not just one of these quick pump and dumps that a lot of people have been conditioned into believing that's what a squeeze will look like in a single hour or something. John Hannaford says 1.21 gigawatts. Oh wait, I gotta say gigawatts. It's gigawatts, right? Didn't he say it with a J? I think he said gigawatts, if I'm not mistaken. You gotta put the J in there, John, because it's so much more official that way. And I saw Ed. Hey brother, how's it going, man? Good to see you. Good morning to you. Let's see who else is in here. Griffin's mom. Good morning. I'm just gonna start from the top of the page that I can see right now. Point Break Thor. Good morning. What's up, Nana? Love that you love the song. Let's see here. Andy says, should we buy Ape for, let's say, 98 or better AMC today? That's up to you, man. It's your money. It's your choice. Easter Beast, good morning to you. And Andy, thank you for the thank you for liking the song. It sounds so weird to say. Oh, and greetings from Germany. Wow, nice. Belarke is saying Peloton. I know, Belarke. I know. Uh, just FYI, last night I was going. I don't know why it popped up on my feed, but that whole Key and Peele skit popped up on my feed last night, and I swear to you, when he said "Hey, Ron," he goes, Aaron? Or he's like, actually goes, and he's like, why didn't you say you were here the first time? It's pronounced Aaron. Son of a. And I start laughing every single time, man. Made me think of you. Let's see here. Blake. Richard says, don't go 88 miles an hour. Good morning, Douglas. Good to see you this morning. Great Caesar's Ghost. Great Scott. Roadster Guy, good morning to you. Chris, good morning. Jay, good morning. Steve Peterson, good morning. I should say Steven. Sorry, there's an N on there. I missed it. I don't have my glasses on. Maybe I need to put my glasses on real quick here. But yeah, if there was any specific day that I would say that Ape would break underneath $1, today might be that day. As in order for them to continue to create more short exempt volume legally, they would have to drop that price down to that 0.94 cents to get that to trigger. So be on the watch out for that. I do believe, I haven't actually looked at it yet this morning, but I think the markets are heading green for the morning here. Let me just check it real quick. Yeah, they're showing, the futures are showing positive open somewhere between 0 and 0.5%. So we are looking at a green, at least as of right now, we're looking at a green open on the marketplace. Happy, Andy says, happy midday, happy hump day, as we like to refer to it over here. Happy hump day to you. That is the question, Tano. I'm gonna have to sell this Peloton, I think. I don't want to. But I want to buy more shares though. Oh, Jay, I'm sorry to hear that, man. Jay's sick as a dog today. Rest up, brother. Take it easy. Get those fluids in you. Get the meds in you. Lots of rest. You're gonna be all right. You'll make it. The glasses are clean. Let me put them on, and we can take a look at our numbers because it is 6:20, and it's time to take a look at our numbers. Chad says, why today? It's simply because SSR trips at 94 cents. And when they trip SSR, legally they are able to create short exempt volume on days like that. So it would make sense. They tripped SSR 2 days ago. Sure. So the short share exemption rule was in effect 2 days ago and yesterday. So now the short exempt rule is not in place. So essentially, in order for them to continue to be able to do that, they would have to create liquidity, especially with heavy buying pressure. Then they would have to drop the price at least 10%. Mr. Mills, good morning to you. Nikki says, "Back to the Future, love it." Nikki, I was just mentioning you a little bit ago. I said, you wanted me to break out the big tramp. I had Pantheon working on a vehicle in the garage. I had him working on the big tramp, and I said, hey, let's go back to the original. And this is what he gave me. So we're going back to the future here. We're going back to the future, and maybe next time I'll have better communication with Pantheon about what I need for a vehicle. I think when I said let's go back to the beginning, I think he thought, oh, Back to the Future, we'll go Back to the Future style, and so this is the sweet ride that he popped out of the garage for me overnight. And that's not really a true story, by the way. he's actually been working on this in the garage for quite some time. Salty Dog says, if they trigger SSR every 2 days, where would the bottom be? The answer to that question, Salty Dog, lies in the failure to delivers, and so you have to watch those to find out where those are stacking and where they're going to be forced to buy at. That's going to be the answer. Uh, Blake says, Casey, do I need my tinfoil hat for the ride? It helps. It helps. Last bit of the coffee is sucked down. I'm ready for the numbers. What do the Bears and Michael J. Fox have in common? They both are trying to get back to 1985. Oh, dang, man. You're hitting them right in the feels today, Mr. Mills. All right, let's take a look at our numbers. I'm going to take you guys over the other screen so when you can't see the DeLorean tramp. The DeLorean tramp on the page, hold those thoughts until after you see the DeLorean tramp back up on the page. And let me log into my broker and we're going to take a look at what we got going on here. Two-factor authentication, guys. If you don't have it for your account, you may want to get it as it could help keep somebody out of your account that shouldn't be in there. When you do set that up, make sure and submit a secondary phone number that you can send that code to in case something happens to your primary. You'll still have access. Not a bad thing to have backup for your backup. Alrighty, starting in the top left-hand corner, price prediction tallies for yesterday. I had 750 to 1050. Eric had 720 to 1020. Keto had 813 to 1113. Einstein had 799 to 1099, and our alternate Apex had 7 to 10. Price closed at 743 for AMC. We all got it. We all got a point. But it was 743 for AMC and 1.05 for Ape. So the grand total was $8.48. Man, I was Apex was probably the closest to that, but the price prediction points goes to everybody. Everybody's going to get a point for the day. Let's stack up the points here. Don't forget, guys, this is just four of us trying to figure out what combined price of AMC and Ape is going to be within a $3 range on a daily basis, and it's not meant as some kind of financial advice or any way that you should be trying to pick a position based off of it. It's just simply us trying to stay sharp on where we think price is going. So I don't read into it too much. Let's see here. Taking a look at short exempt volume for AMC was at 132.4 thousand shares, a little bit lower than it was the other day. Ape coming in at let's see what we got here. Give me a second here. This is the painful one because I actually have to pull up the data. Let's see here. Ape sitting at 600. All right, that's a decent number right there. 620. 620.3 thousand shares. That's a decent number. That is a very, very decent number. AMC was up 1.36% yesterday. Ape was down, I believe. How much was it down by? It was down 7.89. And let's see what the utilization was. Utilization showing 100% on AMC. And let me just verify the date on it to see that it's actually showing yesterday's date. 11/29 should be the day. I am seeing 11/29. That is accurate. So day number 205 straight trading days of 100% utilization. On Ape, looks like utilization showing up at 94.12. They are keeping it right underneath that 95%, like it's death for them. That's pretty funny. 94.12%, so it did go up 0.01% day over day. Let's see. Let's take a look at what's next on the list here. We got Max Payne. Max Payne is $7.50 going into the day today. It was $7.50 almost all week. Last week, I think we had $7.50 going into this week, and I would imagine it's still $7.50. It is still indeed $7.50. Off exchange, let's take a look at that. For AMC, off exchange is showing 55.61%. For AMC, EDGX was at 10.04. Grand total between the two was 65.65%. That's about 1.5% higher than what I would expect for a normal day. CHX volume was up yesterday. We had usually CHX volume runs about 0.25% of our total volume traded through that exchange. Yesterday it was 0.68, so it was more than double. The total amount of shares on it was 105,023 shares. So it was definitely elevated. There was some large amounts of volume going through CHX. That's now 2 days in a row where we've seen CHX numbers high. If we have a third day today in a row, look out. We got some price movement coming. I already think we do have price movement coming even with just 2 days in a row like that. Taking a look at Ape. Total amount of volume going through off exchanges yesterday was 52.09. Some very strange activity yesterday brought the total numbers for price movements. We had, for example, IEX was more than double what it normally sees going through it. NYSE ARCA almost double. NASDAQ GSM had elevated volume. CBOE BZX had double the amount of volume that it normally sees going through it. Everything else was pretty much standard. So it was very it was a very interesting day yesterday that you saw a bunch of different exchanges getting it's almost as if they were kind of repositioning shares and through different markets for whatever reason. I have no idea why that would be the case, but there did seem to be a bit of a shuffling yesterday. But the combined total between off exchange and EDGX and off exchange for Ape was 61.06%. That's about 3% less than what a normal day would look like. CHX volume, nothing to report there on that one. GME CHX volume was 0.15. That was pretty normal. And HYMC showing up as 0.09. That was very slightly elevated. Normally it's 0.08. Taking a look at institutional ownership. Yesterday it was 140.194 million. Today it is showing up as 140.185. So slight decrease, 10,000 shares or so. And taking a look at options. Highest amount of open interest as of yesterday was at an $8 strike with 12.5 thousand contracts. Today is $8 still, and it's gone to 16.2 thousand contracts. Highest amount of puts yesterday, strike price, open interest was $7. It is still $7, and it went from 15.5 thousand contracts to 15.9. Not much of a change there. Market still indicating a closing price for AMC somewhere between $7 and $8. Considering that max pain is $7.50, seems pretty normal, if that's the word you could use. Taking a look at, actually, I'll move a couple screens around here, and we'll take a look at the rest of the data. Starting with combined price of AMC and Ape at $8.51. We did break out of a small descending parallel channel upwards yesterday. We had a much bigger ascending parallel channel, which I wouldn't even say we broke out of. We just kind of traded sideways out of, and almost closed out the day almost exactly where we broke out of it at. But $8.51. They're holding the position here right where it's at. If you'll notice this white line that I've got kind of drawn up here at the top, if I pull back out to a 10-minute interval here, what you're going to see is there's a much larger level of resistance that's coming down. And as time moves forward, I would suggest that we're we're looking at what appears to be a bearish triangle. And I'm using the $8.37 level of Fibonacci support that we've seen from the past as this triangle. I do believe that on the my breakout box that I've got in here is going to be today, but it's going to be more than likely either in the aftermarket hours or potentially pre-market hours of tomorrow morning. I don't think that we're going to be. There may be a test of this retest of $8.37 down here. One more retest before seeing this break out, but I think this is actually going to go north. Normally on a bearish triangle, it would be breaking out going down. I don't think that's necessarily going to be the case though. There's too many indicators for me to believe that that's not going to. I don't believe that this signal is going to move the direction that everybody would probably tend to think that it would move. And the reason for that is I see falling volume and I see falling price, and I think that's going to lead towards a move to the upside. Let me go ahead and delete these. Ortex data. Short share interest of the free float sitting at 21.35% for AMC. We are at 110 million shares, 110 million shares of short interest. So that's probably going to mean that the utilization is, or the amount of shares on loan has probably gone up. Yeah, it does look like it's gone up here. Let's take a look at the numbers and see what they actually look like. Here's your utilization for, hold on a second, I gotta clear my throat. Here's your 100% utilization for 205 straight trading days. Let's go ahead and zoom in on this just a tad bit here so we can see our on loan amount increasing. There's our on loan amount increasing from 179.36 to 180.27. So we're just going to call it 900,000 shares of new loans. Kind of rounding off a little bit. Normally, 1/3 of that ends up being new short interest based off the estimations on that Ortex makes. So I'm going to guess about 300,000 shares of that's new short interest. Let's see what Ortex is reporting on. They rised. I don't know. The estimated short share interest of the free float went from 21.29 to 21.35. So we're looking at 0.06% of the float. Oops. Which ends up being 309,000 shares. So it's real close. Taking a look at on loan average age per day, so 900, almost 1 million shares in newly loaned shares. Probably won't cause the on loan average age per day to drop any. Should still be shooting straight upwards, and it isn't shooting straight upwards, but it is still on an incline here. It went from 94.13 to 94.3. Security lending volume day over day, a little bit down. It went from 8.46 million to 5.3. On Ape, also seeing some rising numbers on this as well over here. It looks like we've got short share interest of the free float at 9.88%. Let me kind of zoom in on these numbers here. There's your utilization not changing a whole hell of a lot day over day. It went from 94.11 to 94.12%. On loan amount decreasing ever so slightly from 51.83 to 51.53. So we're talking about 300,000 shares in returned shares in short interest. And let's see here. With 300,000 shares having been returned in short interest, let's see if they were old or new loans. Looks like they would have been newer positions that were closed out, as this is absolutely still rising quite a bit here. Went from 22.83 days on loan to 23.8 days. And security lending volume day over day decreased from 10.47 million to 7.05 million shares. Estimated short share interest of the free float changing from 9.9 to 9.88. Very, very similar numbers. Only 300,000 shares returned. It's not a whole lot. Let me see if these. Okay, so it looks like starting yesterday, Fidelity's starting to report the last 4 minutes as a total of the whole day, instead of just the last 4 minutes, because you can tell based off the amount of orders that they're putting through on the board here. So luckily they're not just showing just the last 4 minutes anymore. So for the total for the day yesterday, Ape was midway down on the list here of the top 30 most heavily traded stocks in the market through Fidelity, and it had an 80% buy to 20% sell ratio. So it's looking really, really decent yesterday. I like the numbers that I saw all day long. AMC and Ape, I think they both were on the list at some point or another yesterday and then fell off the list due to low volume. Trigger price for SSR for the day today would be at $6.69. For AMC, Ape is at 0.945 or 94.5 cents. Shares available to borrow there. I think there was like 400 and something yesterday and 15 in the ETFs. It looks like 450. They returned 500. They borrowed 50,000. Returned the 50. Borrowed the 50. Borrowed all basically 400,000 of the 500,000 that were there, and then 10,000 out of the ETFs. So we're looking at 450,000 shares. Let's see, I think, yeah, 50 here, 400. Okay, 450. It's 460,000 shares, but I'm going to just round to 450,000 shares since I only count in increments of 500,000 shares a time. The last 2 days, the most amount of borrowing that we've seen was around 100 to 150,000 shares. So looks like they're planning on either some large movement upwards or trying to short the price down. Not sure which, but they're borrowing more than they normally do, with 450,000 shares so far this morning. Fees are very high right now at 39.5% rate. Currently this morning we have 75.6 thousand contracts out of the money on the calls versus 5.6 thousand contracts in the money. 41,000 contracts are out of the money on the puts versus 8.8 thousand contracts that are in the money. Futures in the market are looking a little less better than they were just when I first started the stream. We were looking at like 0 to 0.5% up on most of the exchanges, whereas now most of them are looking like somewhere between 0 and 25% up. The VIX is showing, the futures on the VIX is showing up 0.7. So those are in conflict of each other. Normally the VIX would be down if the market's up. So it might be a fake out this morning. To the top side. NASDAQ is down 0.59. Dow Jones is, I'm sorry, I'm not looking at those. We're looking at the other side of the world. What happened on the other side of the pond? International markets were mainly up. Let me just refresh this and make sure this is right. International markets were mainly up. There wasn't really any down markets at all. So we may see a green day today in the market. The US dollar currently showing down 0.08%. So market open up would be more likely the case than not. Pre-market, we have Tesla up 0.72, Amazon up 0.27, Cinemark up 0.67, Doge is up 3.57, Bitcoin up 2.51, almost breaking. It's getting close to breaking 16.7, or I'm sorry, 16. Looking like it's heading towards 17 K a coin. GME is up 0.82, HYMC is up 3.72, Hood is up 0.76, CS is down 2.43, NCMI is down 5.34, Ape is up 0.95, and AMC is up 0.54. Inflow versus outflow yesterday on AMC, we had approximately 700. I'm just gonna go with $700,000 more inflow than outflow for the day yesterday. So far traded this morning, we have about 7,500 shares traded in volume on AMC. Not very much volume this morning. On a 1 hour time interval, we have more buying pressure than selling pressure with an RSI of 57.69, which is slightly above average. On a 30-minute time interval, we have more buying pressure than selling pressure with an RSI of 57.37, which is slightly above average. And on a 5-minute interval, we have more buying pressure than selling pressure with an RSI of 63.11, which is above average. On Ape, yesterday there was approximately $800,000 more inflow than outflow. 14.54 thousand shares having been traded so far this morning on Ape. That's double what Ape or AMC has traded so far. On the 1 hour time interval, there's more buying pressure and selling pressure with an RSI of 39.88, which is below average. On a 30-minute time interval, we have more buying pressure. Well, it's hard to say. Actually, no, it's not. It's more selling pressure than buying pressure with an RSI of 44.73, which is slightly below average. On a 5-minute interval, equal amounts of buying and selling pressure with an RSI of 47.71, which is slightly below average. Let's see. Let's go ahead and take a look at the Ichimoto and see what that's looking like here. On the 1 hour, for Ape, the lagging line is below price line. Price is above conversion. Conversion is below base. No real strong buy signals here on the 1 hour chart. We do have a thinning portion of the cloud both today and the early portion of tomorrow. And mostly just red cloud showing for the future. Price does like to move up through thin portions of clouds. If price were going to move up on the 1 hour time scale and become a buy signal, we would likely need to see price rise above 1.19 for the day today. So I'm just going to call it 1.2. That for on a 1 hour chart, 1.2 would turn this into a very hefty, strong buy signal. Taking a look at the 4 hour, and that's and getting up to 1.2 is going to be quite the feat, considering that it closed at 1.05. That's going to be a substantial increase in value. But the reason that it needs to hit 1.7 and not some kind of lower value underneath the cloud over here is this lagging line has to get above the price line, and you can see at $1.17 is right here. So in the futures, when this goes up, it's got to get above the price line, and so it's by the time price were to get up that high, it would be inside the cloud. So the first buy point would probably end up being above the cloud. On a 4 hour time interval, in this particular instance, I think you could get a price above the cloud or below the cloud that would turn into a strong buy signal. The price for that movement, in order to see that, to get the conversion to cross the base, get the lagging line above price line, is likely going to be somewhere above $1.30. So 120 and 130 would be huge push points. There would be a stall out point, like price may stall inside the cloud on trying to move up, starting at around $1.34. So once it starts moving from if price were to make it up to $1.30, once it makes it up to that point, it may stall out inside the cloud or never make it quite into the cloud. On AMC, price has moved up quite nicely. We've got conversion above base. We have price line above the price line below the lagging line. So lagging line is above it. The price that we're going to want to see today to get through the cloud and moving into newer highs is going to be $7.55. So let's just call it 760. Holding 760 or higher will generate additional buying pressure. That'll generate a buying signal on a 4-hour time interval. Let's see here. We're in a green cloud right now. Oftentimes it's difficult for price to drive down through big areas of green clouds. So seeing price get back up to that 760 range would push us up above the green cloud again. It would keep the lagging line above price line. It might 760 might. I don't think 760 is going to get that conversion line above the baseline, which is really where you're going to need to get it to in order to drive price up. That price level for that conversion line is going to have to hit about 753, which means we would have to see a price probably a little bit significantly higher. I would say around $8. So seeing $8 or breaking $8 would be a huge buy signal. Do note that there is a red cloud forming in the futures. That usually will indicate that there's going to be some downwards pressure in price. More than likely, what they'll try to do is try and keep the price from going up too far. They don't want it to be above $8 because if it does, there's potential gamma squeeze in there. So the sweet spot for keeping the price in control is going to be keeping it just slightly above the cloud or just slightly within the cloud, leading into next week where there's less buying pressure forecasted. And I think that's it. Do we have our pokey stick of volume? Wow, I'm early today. I got another full 10 minutes before we even get our pokey stick of volume. Usually I'm like getting done and it's like, it's ready. I'm gonna get my Bollinger Band back up here on Ape. So last night, somebody shared with me a video. That video is about 20 or so minutes, and I think that video is definitely worth a watch. It's so good. It's so good that I reached out to the YouTube content creator to find out if it was okay with them if I played their video on the live stream today. So after our 7 o'clock pokey stick of volume, and we get volume predictions for the day, which I can almost guarantee you right now, just based off of what I'm seeing right now, it's not going to be very impressive. I'm going to go ahead and play that video for you guys to watch. I'll provide the link for you guys as well, so you can check it out. But I think it's ironic that I don't know how many of you guys have been around. How long? I don't want to make assumptions as to how long you've been here watching this live stream, but you know that for about a year, a little over a year actually, I've been talking about CBDC. It all stemmed, and I can't remember who asked me the question, but somebody originally asked me. They said, "Casey, how would you reduce inflation if it were up to you?" And the answer I had was, you'd have to create a new currency, and then that would allow you to generate more printed money. So you would basically have to devalue your current currency, start making a new currency, and basically just have a reset. And I didn't know what to call that. Had no idea what it was, and then we started looking into it, and there was something called CBDC, or central banking digital currency, and it was already in the works. I'd never even heard of it before. It wasn't on my radar. No idea. But that's how I would, if I was a government and I wanted to try and reduce my inflation. That's how I would go about doing it. So we've been talking about it for over a year. This guy has taken it all into one video and put it down into one video, and it's a really good breakdown of everything that's been happening and how the FTX event. I don't know if we should call it an event or what we should call it, but how basically the FTX crippling of FTX, let's call it that. the thievery of FTX is starting to be a catalyst of pushing the market towards a more regulated cryptocurrencies. And because I don't know if you guys have been listening to a lot of different space. I've been listening to different space calls and people talking about cryptocurrencies, and people are basically almost like begging for regulations now. Some are begging for it. Some are saying like, no, 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 that's everything that we stand against. And so it's almost as if the government planned to do this event or have this event take place in order to facilitate the move of the government pushing a uh, regulated digital currency on the marketplace. So it is an incredibly well put together 20-minute video. I'll list it here for you guys to look at because I got permission from him to play it. The content. Hold on a second here. I gotta pull it up and find it here. Hold on one second. I gotta pull this. Upper echelon is the content creator. He's got quite a few views. I've never really seen his videos before. This is the first. I think this might be the first video I've ever seen. I don't know. It's been a long time, but the title of the video is "This is the Dark Future of Finance," and he's got CBDCs as the in the title here. This is the Dark Future of Finance, CBDCs. It's actually 22-minute long video. I will post the link for it here for you guys to watch in case you wanted to just start watching it now instead of waiting 5 more minutes for me to get the pokey stick of volume. But it is probably it's probably one of the best well put together videos of somebody who's showing how a case can be made that this is the push. This is the push that they're using to drive us towards that CBDC that we've been talking about for so long. And it's finally getting to that point to where we're seeing all the cards fall into place like I've kind of been seeing things kind of falling into place, and I think one of the major catalysts that would be the final one would be a market crash. I think a market crash and exposing the amount of deliberate manipulation within the market would be the final stage at where people would say like, well, look, this is why it went all bad. We had all this manipulation in the marketplace and things weren't being properly done the way they should have been done. And so therefore we need to do it right. And this is going to be blockchain. And so we'll be able to control that kind of stuff. We'll be able to monitor it better. And so we need to move to this digital currency because then we can have control over the manipulation in the marketplace, and we can make it more fair. So as they've done to cryptocurrencies, they're going to do the same thing in the marketplace and cause people to go like, we need more regulation. People are going to start crying for regulation because people are going to see, with a market crash, you're going to see people just absolutely in an uproar as they watch their 401ks and their pension plans and all their money just disappearing out of the market. And so this is I think where we're heading. I think he's really really right on what he's got for the video. Mr. Mill says, I seen it. It's great. It is great. I agree. Blake says, studied your video on the back part of a squeeze last night. Helped a lot. Even more ready now. That's awesome. I'm glad it helped you out, Blarkey. You know what the hardest part about that is, Blarkey? I had like putting together that video. I tried to keep the two videos that I made for that. What is an SPF and then what does the backside of a squeeze look like? I tried to keep those as short as I possibly could. I could really take like an hour kind of diving into the dissecting of what the backside of a squeeze looks like. But I knew that if I was going to get people to watch it, I need to keep it relatively short. So I tried to keep the videos under 20 minutes apiece. One of them, the SPF one, was actually really easy to do, or I think actually I don't know which one's the short one. Maybe the short one is the backside. I don't know. But hopefully it's helpful, and I mean, it sounds like it is based off of what you said, so I'm glad it helped you. Keith says, if the government has a plunge protection team, they for sure have a team that is monitoring this portion of the market. I would agree. Keith says economy collapse would be a national security issue. Absolutely, it would, and not only that, but they would, they gives them even more of a ability to be able to say, like, we need to put a stop to this, and we're going to control it. Mr. Mills says Casey also has a video that connects SBF to others who are connected to the WEF, the WEF. I haven't seen it. I haven't watched that video. I just when I do see good content, and I'm not saying I'm not going to watch it or anything. I don't really even know if I care about that whole. I probably should, but you know how I feel about cryptocurrency. I really don't understand it. I don't understand how people can even invest money in it. It doesn't make sense to me. And it's one of those things where I just kind of like I go like I don't really care. All right, we're getting our pokey stick of volume here. So far this morning in volume on AMC. Let's see, do I have the right screen up for you guys? I do. Okay. Very low volume, guys. I mean, this is really, really low volume. We had about 7,000 shares going into the pokey stick of volume this morning, and we're getting about 10,000 shares traded through the pokey stick, which is a little more than doubling of the pre-market volume. For those of you who are kind of new to the channel, this is what it used to look like. On a regular basis, we would see a doubling or thereabouts, very close to doubling of the total amount of volume traded going into the pokey stick of volume. However, this is really, really stinking low. I mean, this is bottom of the barrel low, like only 18,000 shares going into 7 o'clock in the morning. I don't even know if we've ever seen this low. This is beyond unusual. So much so that I think I'm gonna have to lower my. I don't normally go less than 10 to 30 million on a volume prediction on AMC. All right, yeah, I'm not gonna do it. I'm gonna leave it at 10 to 30 million on a volume prediction for AMC, but just because I don't know, there's something wrong with this. There may be a large spike in volume in the mid to late day, unexpected volume that just comes out of nowhere. This is unusually low. Taking a look at Ape, on the other hand, over here we've got Ape. Ape had about 64,000 shares having traded in the pokey stick of volume. About 20,000 shares going into the pokey stick, so it gave us 84,000 shares traded. 5 to 25 million shares is what I predict normally for this kind of volume. I think I'm going to raise it today, just because I'm feeling a little ornery, and I'm going to go 10 to 30 million on volume prediction and give myself just a little bit more leeway. Part of the reason for that is that yesterday, I think, let me go back and check the data here real quick. Yesterday's total volume may have crossed, I said 5 to 25 million yesterday, and we may have actually hit more. No, we didn't. We hit 22.2 million. There is a chance with this elevated volume today that we might actually see a little bit more volume coming out of Ape than usual. And I'm starting to think maybe I should go 1535. Yeah, I think I'm going to do that. I'm going to go 15 to 35 million on Ape volume for the day today. It's not very, it's kind of an unusual number for me to put out. Alrighty, let's get Upper Echelon in here to do his 22-minute little presentation and I know I don't normally play other people's content, but I did get his permission to play the content. And that's, that's one of my big things, and that I really and actually he was really kind in his approval, because I asked, I kind of told him who I was, and what I wanted to do, and why I wanted to post it. And he said all my content is free to use in whatever way you or anyone else would like, positive or negative. And I think that's really, that's really kind of cool that he was willing to just allow me to restream it. He didn't have to. So, but I agree with everything that it's being said in this video here, and I think it needs to be heard. So I'm gonna go ahead and take myself off the screen here and put his work up on for you guys to see. I'll take over this one. Hopefully this doesn't cut down too much of the screen. Let me just see how this looks for you guys. Yeah, it should be all right. It cuts off the left-hand side of the screen a little bit, but you should be okay with that. Do you have any clue as to what crypto backed by metals versus crypto not backed would look like, global economy speaking? I don't, man. I tell you what, Gorilla Gardener, I'm with everybody else on this. I don't want to see cryptocurrencies at all ruling this world, and they got to be backed by something. And if it's Fed backed, and that's it, just like a fiat currency is, then it's just no different than a dollar. It's just a different form of a dollar with more control and more ability to monitor where it's moving to, or where it's coming from and going to. Nana says no more cocaine and hookers, guys. That's right. Deborah says central bank digital currency just sounds wrong. I know, I know it. All right, let's listen to this, guys, and I'm going to try not to blast you out here because I don't know how his settings are set. So I'll do a little bit of a sound check here right off the get-go.
This video is brought to you by Guardio. Stick around to hear more about the discount they're providing to the entire upper echelon community. Also, there are only 4 days left to purchase limited edition holiday merchandise and support the channel. Links are down below if you like the shirts.
He does have a section in here where it's actually less than a 20-minute video because you get to skip through some of his advertisements. So I will skip his advertisements when we get there. There's no need for us to sit through all that, but I just hopefully he can forgive me for not playing his advertisements.
Okay, before diving in, this video is predicated on extensive information that I discussed with and was given by a prominent source in the legal field of securities regulation. To verify authenticity, I was given access to this person's bar number in multiple states. I was allowed to examine prior work history and a series of other benchmarks as well to validate what was being discussed. Having reviewed everything at my disposal, I am confident when I say that this person is not only real, but that the video they have now helped me construct is extremely important. To start with, we need to establish a premise. In the aftermath of FTX, that is the downfall of a multi-billion-dollar crypto exchange / fraud scheme that sent shockwaves through the financial system, in the aftermath of all this, accusations have begun to swirl that regulators were asleep at the wheel, and that the SEC, the Securities and Exchange Commission, led by Gary Gensler, is somehow partially to blame. That idea is not too far off base, but there's quite a bit more to the story. As the tangled web of connections is slowly unraveled, very slowly I might add, information and fallout from this collapse will be processed for months, maybe years into the future, but as the tangled web slowly unravels, bits and pieces of a wider story have begun to take shape. One of those revelations is that Gary Gensler, chairman of the SEC, and Sam Bankman-Fried, former billionaire crypto founder of FTX and Alameda Research, the two companies embroiled in scandal right now, had private Zoom meetings, several of them, in the preceding months before FTX ultimately collapsed.
I think that's crazy. I don't know how he's getting this information. I mean, he does say that he's getting it from a source that it's a validated source, but the idea that Gary Gensler was having private Zoom meetings with SBF just blows my mind. I mean, the idea that I don't know. I'll let him continue to build his case, but every once in a while I might stop this and just kind of throw in my 2 cents.
Sources familiar with those meetings have said, in statements to various different media outlets, that FTX was seeking a regulatory monopoly, and that the SEC, under leadership of Gary Gensler, was at least partially open to that discussion. In fact, as the controversy surrounding FTX came to a head, Republican House of Representatives member Tom Emmer took to social media publicly, accusing Gary Gensler of running to the media, while reports to his office indicate that there were back-channel deals taking place, utilizing legal loopholes, to grant FTX a regulatory advantage in the crypto space. Regardless of what the truth actually is, a singular narrative has begun to form, especially on social media, centered on the idea that regulatory agencies were inadequate or deliberately unwilling to regulate FTX, thereby preventing, or at least mitigating, some of this now widespread damage and fallout. Here's the thing though, I believe that narrative is wrong, or at the very least, partially incomplete. I believe that there is a massive underlying story at play here, and that FTX has served as a useful incitement event, catalyzing a long-planned governmental takeover of mainstream cryptocurrency. Alright, before going further, I'd like to once again talk about this video's sponsor, which is Guardio. I talk a lot about cybersecurity, proactive defense, and responsible on.
This is the part where I'm going to skip past his advertisement.
Alright, setting the stage here, we need a couple more key bits of information. First, FTX itself was under legal scrutiny before its final implosion in early November of 2022. United States prosecutors from the Southern District of New York were pursuing an investigation into violations of the Bank Secrecy Act, which is critical to remember moving forward and will tie back in heavily later on. Second, CIA Director William Burns has now publicly acknowledged, in early 2022, I believe, that the CIA has a number of different projects focused on cryptocurrency, and that they are helping their colleagues in other parts of the US government.
This is something I inherited. My predecessor had started this, but have set in motion a number of different projects focused on cryptocurrency and trying to look at second and third order consequences as well, and then helping with our colleagues in other parts of the U.S. government to provide solid intelligence on what we're seeing as well.
These two factors combined are necessary to establish a foundation that governmental operatives and agencies might not have been asleep at the wheel, but there's more. Crypto, legally speaking, is a capital asset, which may sound meaningless, but actually holds a lot of important distinctions. Established by IRS rulings on two separate occasions, multiple years ago, crypto was defined as a capital asset or investment property, which carried a certain set of limitations. Such a classification meant, in no uncertain terms, that Bitcoin and other alternative tokens could not be listed on foreign capital exchanges, which would have treated the token as money or legal tender. In truth, there could be some sort of alternative explanation here, but the most likely reason for this is to prevent competition with the US dollar, should the crypto market grow large enough to do so. That's important because it begins to alter the current narrative that regulators were somehow asleep at the wheel. The CIA had ongoing projects in crypto, the SEC had meetings with FTX behind closed doors in the run-up to the eventual disaster, the IRS had ruled that crypto was a capital asset years ago, possibly to prevent competition with the US dollar, and FTX had been under investigation regarding the Bank Secrecy Act in the Southern District of New York. We can say they didn't do enough, or we can say they did the wrong things, but regulators certainly were doing something. Expanding on this, we can look at court cases such as Fidance v. Harris, where case law was established with regards to ICO tokens and their classification. ICO, meaning initial coin offering, which is comparable to a traditional stock IPO, initial public offering, where shares of a company are sold on the open market. Recently, there has been a lot of discussion about contemporary cases such as the SEC versus Ripple or the SEC versus Library, but Fidance v. Harris is very often overlooked in that discussion. Simplified, it's obviously more complicated than this, but for the sake of time, I'll boil it down to the core premise. Fidance v. Harris established that an ICO, or at least the token offered during that process, was a security because it fulfilled all four prongs of the Howey test, which was established after a Supreme Court ruling with regards to SEC versus W.J. Howey on what is or is not an investment contract. Basically, the idea that crypto regulation does not have case law is effectively wrong. It might not be every ICO or every current token, but the vast majority of them, seriously, almost all of them, are easily defined as securities. And if we compare the token referenced in Fidance v. Harris, where a movie platform was created with a native token that allowed for viewers to watch, but was also designed specifically to increase in value as content was added to the platform, we can see that it has identical functionality, in a legal sense, to the FTT token from FTX. All of this is to say, again in very simple terms, that the SEC was never asleep at the wheel. They may have done less than they should have, or less than most of us think they should have, but governmental agencies have been closely monitoring and manipulating the world of crypto regulation for about 5 to 7 years. This requires a very specific question. To what end? Why have they done this? Why have they neglected certain aspects of regulation despite relatively clear case law? And why have they allowed this to happen when the results of that neglect are so damaging? Answer: because the government is creating their own crypto project called CBDC, or Central Bank Digital Currency, which will be just about as dystopian and authoritative as our feeble mortal brains can possibly even imagine. Here's the thing. This is not a new concept. Many figures in the crypto world have been warning about this for quite some time, but very rarely do they back up those ravings with anything other than, "Trust me, bro." Most of the time you will hear the idea of central bank digital currencies in a drug-fueled conspiracy rant, or inside a rambling tirade against the United States government. Perhaps true, perhaps not. You never even get the chance to evaluate things accurately because of the unhinged, unsubstantiated method by which they communicate with you. But today, I want to take some time and try to outline, from start to finish, where modern finance is about to go. To do this, I have to outline a series of administrative steps that occur when new laws are passed, because that process is what allows us a great deal of insight into what comes next. When a new law is passed, let's say something to do with securities or currency and regulation of that particular space, it starts with legislators. The first step towards regulation is the law itself, but after that it gets a whole lot more murky. Once a new law is passed, basically saying what to regulate, the process moves on to relevant agencies. These agencies, whichever ones happen to be the most relevant, such as the SEC or the CFTC, now create rules based on those laws, which have a significant degree of interpretation. Effectively, the law needs to be enforced, and defining how they are going to enforce that law is just as important as the actual law itself. During the period of time where agencies are composing these rules, let's call them, there is what's called a notice and comment period, where people, corporations, anyone really, can write in and comment on what the agency is putting forward.
Now, we've seen that. We've seen that. We actually remember, I don't know if you guys remember, but we've been making comments on a lot of the different rules and regulations that SEC has been proposing quite often. In fact, these are the kind of things that I think nobody really ever even pays attention to whatsoever. And a lot of these laws and regulations are mainly commented on by institutions, and that's about it. But since the ape community has been involved over the last year and a half or so, we have been involved in commenting on some of these new rules and regulations way more heavily than we have in the past. So, I mean, we know exactly what he's talking about.
They actually want this. This is a big part of the process, often with specific questions asked by the agency to acquire feedback from interested parties. Well, it turns out that there have been not one, but two notice and comment periods already spurred by a presidential executive order pertaining to the adoption of a central bank digital currency by the US government. There are many different relevant sections to read here, but one of the most important ones seems to be a comment submitted by MasterCard, which effectively thanks the Federal Reserve for keeping in place a two-tiered system, which would effectively allow their business to continue operation. Quote, "We strongly concur with the Federal Reserve's view that provided the creation of a CBDC is determined to be warranted, an intermediated two-tier distribution model is preferable for the needs of the U.S. economy, as it preserves the role of financial intermediaries and payment service providers while utilizing existing resources." End quote. Basically, entrenched financial institutions with far-reaching political power are commenting that they support the implementation of a central bank digital currency because the current version of that idea is built in such a way as to continue supporting their business model. To me, that indicates that the idea is very serious and likely has almost no institutional barriers to cross whatsoever. Here's another comment, for example, from Liberty Bank, stressing the need for existing banks to be the only intermediaries between the Fed and American consumers/businesses. However, none of this really explains why the future of our financial system is dark or even grim. To explain that part of the puzzle, we need to go back to the official Federal Reserve notice about CBDCs, because that is where we find an extremely important detail. Quote, "While the Federal Reserve has made no decisions on whether to pursue or implement a central bank digital currency, or CBDC, we have been exploring the potential benefits and risks of CBDCs from a variety of angles, including through technological research and experimentation." End quote. That's interesting. They have made no decisions yet, allegedly, but still offered two separate notice and comment periods to the public, where major players in the United States financial economy came forward with ringing endorsements, which is very interesting. However, there's one more detail to examine, which reads as follows. Quote, As a liability of the Federal Reserve, however, a CBDC would be the safest digital asset available to the general public with no associated credit or liquidity risk. End quote. And that.
All right, so you need to hear this next part, guys. This next part is crazy because by labeling it as an asset, and he's gonna outline this for you right here. But this is where it gets like super sketchy right here. This is crazy.
That right there, ladies and gentlemen, is a bingo. This is important for one reason and one reason alone. Digital asset means that a central bank digital currency would not be a banknote, a reserve note, or a note of any kind, where note is a specific legal definition. Assets and notes are very different things. Digital assets fall under the classification of investment assets and are thus governed by a different set of rules, such as the ability to be access restricted for specific parties at any time. Right now, US dollars are technically classified as Federal Reserve notes, which are much less controlled. However, a central bank digital currency, defined as an asset instead of a note, would be open to a nearly unimaginable amount of control, far surpassing any monetary system we have ever seen in human history. Example, with all data flowing through the Federal Reserve on all transactions, and the currency classified as an asset instead of a note, they could place restrictions, as an example, easily on things like geographic location. This kind of control could mean that individuals they create parameters for, and they can create an untold number of parameters for anyone at any time, could be barred from spending money in certain states, or beyond a certain distance from their own home. And it can also mean that they set distinct parameters on how much central bank currency is even allowed to be held by individuals of the population at any given time. To demonstrate this, we can once again look at the second notice and comment period for central bank digital currency adoption, where financial analyst Michael Wozni says the following, quote, "It is not inconceivable that the amount of CBDC that can be held by a single consumer will become another tool in the Federal Reserve's arsenal to affect monetary policy. It would be natural to allow the Federal Reserve to vary this amount to affect monetary policy as it does currently with interest rates." End quote. Central bank digital currency would track every single transaction individuals make. It would be fully programmable and allow for nearly any rule set to be created within it, targeting criminals, persons of interest, political opposition, dissenters, conspiracy theorists, etc. This is where I will inevitably lose some of the more docile-minded viewers who think, yeah, so what, modern-day credit cards and digital transactions do the same thing, and the government would never do anything that bad to control the people. I don't buy it. Not true. And for those people, I have this. Jerome Powell, chairman of the Federal Reserve, stating that a United States central bank currency would not be anonymous.
We think that there are four characteristics of, if we were to pursue a CBDC, it would at a minimum have the following four characteristics. First is intermediated. Second is privacy protected. But third is identity verified. So it would not be anonymous. It would not be an anonymous bearer instrument. And fourth is transferable or interoperable. So we would be looking to balance privacy protection with identity verification, which has to be done, of course, in today's traditional banking system as well.
The word privacy here is critical because it's a sham. In the current financial system, you are protected from unlawful or unreasonable search and seizure by the Fourth Amendment, which specifically mentions papers. That's important because it therefore applies to banking records and other financial transactions that you make. Without reasonable cause, a court-certified search warrant, and a series of judicial benchmarks, your records cannot be taken, searched, or seized, but with a digital asset from the Federal Reserve, not a note, where all transaction data routes directly through them, you no longer have those protections. Remember the Bank Secrecy Act? FTX was being investigated for violations of the Bank Secrecy Act before it fell, but the rabbit hole of what that is and how it affects the future of central bank finance is far more troubling. The Bank Secrecy Act aims to curb terrorist activity and prevent money laundering. Noble causes, in theory, but after dramatic updates in a post-9/11 regulation world, the Bank Secrecy Act now provides far-reaching ability for the government to access financial records. If you combine this ability with a fully programmable central bank currency, what do you get? Answer, you get a monetary system where anyone that they brand as a person of interest, terrorist, or danger to the public can have their entire financial world immediately shut down completely. Once again, doe-eyed viewers with no common sense might think that's fine, that's a good thing, those people are bad anyway, but consider this. The right side of the political aisle, as in conservative Republicans in the United States, have, on occasion, attempted to brand Black Lives Matter and associated groups as a domestic terror organization. The left side of the political aisle has likewise attempted, on occasion, to brand the Make America Great Again MAGA movement as a different terrorist organization. And if either of those attempts were to be successful while dominating policy in a central bank digital currency world, for whichever party was successful, it would mean that the Federal Reserve can unilaterally set entirely new guidelines for those groups to make it impossible for individuals to buy, sell, transact, or engage with almost any financial service in the country. That right there is a financial hellscape, but the world of fully controlled, non-anonymous central bank currencies is approaching faster than we think. The BIS Innovation Hub, an organization meant to foster collaboration between central banks around the world, is openly pursuing the concept of CBDCs. The New York Fed in America is running a 12-week pilot program with major banks. Japan is running a trial of their own, and so is Russia. In fact, dozens of countries around the world, more than that, with a supermajority of industrialized nations participating in this, are researching, developing, or currently piloting central bank digital currencies right now as I make the video. This is the intended future, a central, digital, highly trackable currency that is programmable for any set of rules that the government decides. And it's not a conspiracy theory, it's reality. On one side, major financial institutions support the concept because the government is making deliberate efforts to preserve their critical role in the process. But on the other, consumer advocacy and rights organizations are understandably appalled by what this could mean. In the second comment period that was opened, the National Consumer Law Center noted that the foundational control of this new currency model would mean that if the government dispersed unemployment payments to individuals, they could program those payments to be unusable for certain purchases. Quote, a government-issued CBDC would allow the government to dictate how, where, and when currency holders spend their funds. As an example, consider unemployment money issued in the form of a CBDC. The government could restrict the funds to not work at businesses categorized as liquor stores or bars. End quote. In essence, central bank digital currency would be an evolution on the Bank Secrecy Act to an unimaginable degree. CBDCs would be a method of population control unlike anything we have ever seen in history, and to make this possible, there need to be sweeping regulations of stablecoins and other crypto assets that currently exist to prevent competition and control market share. The prevailing narrative is that regulators were asleep at the wheel for FTX, but I would like to propose a different theory. Regulators knew what FTX was and simply allowed it to happen. The resulting devastation opens the door for extremely well-timed regulatory changes, while the underlying infrastructure has already been building, for quite a long time, on a government-controlled digital currency that will radically expand their control of population behavior, economic stability, and more. There's actually a ton more to go over here that I haven't even addressed, but the rabbit hole goes deeper than I care to risk exploring. For the sake of time and the fact that if I say the wrong thing on topics like this, I can quite literally be deplatformed, I'll cut it there. But the world of crypto was not blindsided by a lack of regulatory awareness. It was smashed open, wide open, by a useful idiot who ran a fraud scheme, back-channeled tens of millions of dollars to politicians, Democrat and Republican alike.
Billions. Billions. Not millions, billions.
And created an opening for one of the largest power grabs in human history to begin moving forward. The dark future of finance is a fully controllable, down to the individual person, central bank digital currency that circumvents the rights you currently enjoy. The Fourth Amendment, in particular, allows unparalleled control of a population and came about as a direct result of financial disaster that was not unseen or unknown, but rather allowed to happen as a sort of catalyst behind the new age of digital economies. Sure, some of this is speculation, but hopefully the evidence provided will serve as a thought-provoking look into the world of central bank digital currencies, which are poised to become a much greater part of our lives compared to what many people think. That's it. If you want to support, please check out the links down below. Remember, only 4 days left to get the limited edition holiday merch if you like the content. Also, Patreon and locals, the video sponsor, social media, etc., etc. But I'll cut it there and stop rambling. As always, thank you all for watching, and have a nice night.
I don't know why he's got a giraffe in there at the end, but yeah, that's so that's upper echelon. That's probably. It's probably like a 20-minute video after you take out the advertisement that's in there, but what a video! I mean, that I don't know if that doesn't just kind of like wake you up a little bit and go like, holy crap, FTX was. As I've been sitting through a lot of these live streams and listening to just I don't think I've partaken in talking in any single one of the uh, crypto space calls, and there's been a very specific reason why that is. Um, I don't think everybody fully realizes the full extent of what it is that's been happening, and how cryptocurrencies have been used. And one of the things that I think it would be very, very wrong for me to do is to go in and speak in one of those, because in a sense, um, those cryptocurrencies were kind of used as leverage against our position. So in a roundabout way, what I guess I'm trying to say is that anybody who um, anybody who holds a position in cryptocurrencies that were affected by any of this, um, are in direct conflict with us as owners in the marketplace, owners of securities, actual securities. And so I think it's, for me, I feel like there's a lot of risk in talking in any kind of those forums, because it's pitting retail against retail, and anything that I would say in one of those situations would potentially put me at risk of um, either creating fear mongering, or causing people to maybe feel a certain way about a certain position. And so it's just kind of wind DeLoreans today's we're going back to the future. But man, I tell you what, guys, that video is a really good video. If you haven't seen it, I'll probably play it once more later on today, just because I want to make sure everybody has a chance to see it, and I know that's kind of painful for you all. But I'll probably play it towards the end of the day, at some point, um, just because I know there's a different group of people usually listening at the end of the day versus the beginning of the day. So I apologize, but I think that's one of those videos that I think everybody needs to hear. Uh, I truly and honestly believe that the FTX event was orchestrated. There's no way that it wasn't. You don't have smart people who well-seasoned investors just dumping money into something that they know that they're going to get screwed on. It just doesn't make sense. And when something doesn't make sense, and you follow the money, and you start to understand that there is some orchestration to what's been going on as a major plan, uh, it all kind of falls into place, and you see it, and you're like, holy crap, that's crazy. That happened for a reason. So I don't know. Tech We Love says, any way to stop this? They want to be able to control our money, and could tell us where we could put our money in stocks, and because they want to spend money on clothes or whatever. I don't know. I don't know, Tech We Love. I really don't know. I don't know how to stop it. I don't. I don't know how we could stop it. I mean, I do. Actually, I do know how, but it's not something I'm willing to talk about. I don't know if any of you guys are willing to talk about it either. But I mean, yeah, there's really truly only one honest to God. This is why voting is so important, guys. Making sure that we kick everybody out of office, and that we get new people in offices, that we can try to avoid this. People who aren't tied to the normal government system, people who can make better choices for our future. I guess that's probably the very first step. you have to get you have to get people to understand that we've got to get the old uh, filing ranks out. We have to get them out. If we don't get them out of office, then they're going to continue to push down this road. So if you don't like what it is you're hearing, it doesn't matter what party line you're down. You got to get the old people out and get new people in. People who aren't supporting that kind of a future. That's really what it comes down to. If you want to try to avoid that, that's what you're gonna have to start looking towards. Yeah, Maggie, that's what I've always kind of compared it to as well. Digital currency being like a banking card, a debit card essentially. But it's not going to be exactly like that. Especially if they don't consider it a note and they consider it an asset, it's going to be a little bit different, and there's going to be more control. Yeah, see, I don't want to talk like that. I mean, I really it's more about us being more proactive and making sure that we're taking a stand in our government, and it doesn't mean that we have to go uh, necessarily protest. I think we can do it more passively by just simply electing new people into offices, getting the old people out, and making sure that we're getting the changes that we want to get instead of just being satisfactory. Maybe getting people to understand what it is that we're seeing for the future. The major majority of the people out there right now have been put into a position to where they're happy with getting government bailouts. So if you have a market-wide crash and things are out of control, and the general consensus is that the only way that we're going to be able to save everybody is if we move over to this new system, this new digital asset, then everybody's going to, there's going to be a lot of people out there who are on board with it because they're just used to taking handouts. I don't know. Fork says time for a real tea party. Well, I mean, I don't know. We got work to do ahead of us after this is over. That's for sure. I'm telling you guys, I've got a future. I've got a future in store here for all of us. I don't think our work is done yet when we're done with this. I think there's much more to our future ahead of us. But it's gonna take a lot of people, and it's gonna take a lot of forward-thinking people who can see what the future holds, and whether or not they want to continue down that future, if they want to change their future. Do you want to go back to the future, or do you want the new future? Which is it? Because that's what you're facing. Gorilla Gardner says, "Prepare to rise from the ashes. There's nothing we can do to stop this from coming." I mean, that's kind of how I feel, Gorilla Gardner, but I'd like to believe that we could change it maybe and still have things work out okay. Midget, thank you very much. I like the ride too. Dana says, "I love the Mad Max outerwear." Oh man, yeah, I don't know. I guess you like that whole like spray paint on your face look going too, huh? Oh man, nothing like huffing a little bit of spray paint. Look, I'm not calling for this is not what I'm not calling. I want to make sure that you guys understand I'm not calling for like some kind of like massive like we got to go raise the pitchforks kind of thing or anything like that. I just want you guys to be prepared for the future. Be prepared for the future and know what it is that you have to look forward to. I know that it doesn't look very comforting or awesome or anything like that, but if we're going to make changes, we're going to have to start making them. And we probably should have started this last elections, but and we kind of sort of did, but didn't do a great enough job. I think we really need to make a huge impact in making sure we get people out of offices that are sitting in office that have been there way too long. It's time to start kicking out the old trash and start putting in the new trash because that's really what it stands. That's where we're at. We're at that point right now. Every single election that goes by where we continue to put more people into offices that are just part of the regular move forward and make things happen group um, that are just willing to follow orders is not what we want. Not what I want. Darren said 100%. American Trader says, what's a pitchfork? Forks says there's a portion of the population that won't be okay with. Forks, do you understand? Do you understand that the boomers just watched 30% of their portfolios disappear? What do you think they'll say? What do you think they'll say when they watch 60% of their retirement funds disappear? What do you think they're saying right now at 30%? Because what they say at 60% versus what they say at 30% are going to be two totally different things. And I know that sounds really drastic for me to say, but I do think that that's a possibility. I think it's a very strong possibility. And how do you force people? How do you force boomers to start singing in a different tune? You take away their money. I mean, I can't think of a better instance. I've read articles out there that says that boomers are so attached to their money that they're not even willing it down to their family members. That's how attached they are to their money. So if they're that attached to their money and you take away 30% of it, what do you think they're going to start saying when it's 60% gone? I think they're going to start singing a different tune. And it's just a matter of time and pain. Harry Parrott, my stance of accepting CBDC has never been, I don't want to accept CBDC. It's just that I don't know that there's any other alternative to pain, like massive amounts of pain without it. I think the financial institution that we know it of America could be destroyed in this kind of without CBDC it could be utterly destroyed. And I'm not the amount of pain that would bring to the general public is not something that it's difficult for me to stomach. It's really difficult for me to stomach. Yeah, I know. I understand that, Harry Parrot, but it's I don't know about you. I got kids. I got kids, and seeing them have to go through that kind of pain, it doesn't make me happy to know that that's how they get to start their life out, in the workplace, going through that kind of crap. It just doesn't make me feel very good. It's I don't know where you stand on that, but it doesn't the future doesn't look very bright. You have choices. What kind of future do you want for your kids? And taking that the hard road less traveled is it's difficult when you got kids involved. I mean, think about it like this. With and I was having a conversation with somebody about this just earlier, and it's time for me to take a break here, guys. But uh, my conversation was is if there's a young couple out there right now who just got married, perhaps maybe they finished college, they've got bank loans. Hopefully, those are getting the loans for the school loans are getting paid off for by the government. But if they're not, then they've got some kind of school loans that they owe on, and now they're trying to buy a house or something like that. What are the chances that they're actually going to be able to buy a house? Where's that family dream of owning your own home and being able to afford a place that you can have and call your own? Or are they just going to be stuck in apartments? What does the future look like for our kids? And Deborah says, too late. The bank's already bought up the homes. Yeah. I mean, they're literally, you're not wrong, Deborah. You're absolutely right. Not only did they buy up the homes, but they bought them up at really large. I mean, BlackRock was buying up homes last year at huge prices, and it didn't make sense to me back then a year ago. That was the one major, Deborah, out of all the things that I've seen over the last 2 years in doing all this, the one thing that confused me the most was trying to understand the reasoning behind BlackRock picking up homes at the cost that they were picking them up at. Because with everything that I saw in the future for where we were moving towards, the purchasing of homes at those prices did not make sense to me. Why would you buy homes at top level value when you know those institutions know that a market crash is coming in the future and that they could buy those homes at a much cheaper rate, uh, and potentially even get the government to write off their losses on people forfeiting on their payments for their homes. So it really didn't make a whole lot of sense to me. That was the one factor that I really couldn't quite understand was how does that fit into the grand scheme of things? But Donkey Kong says it looked to me like they were trying to prop up the housing market. That's what it kind of looked like a little bit, but why would you do that though? Anyways, I gotta take a break, guys. Sorry for making your sorry for waking you guys up the way that I've woken you up for the day today. Your eyes wide open now, right? Hopefully you guys have those eyes wide open. Like I said, I'll be playing that video again in the later half of the day. So if you missed it, also the link is at the very top if you want to go see that. That's Upper Echelon. Is the YouTube channel. It's the first video I've ever seen. Sam sent it to me and told me I got, I should. He didn't even say I needed to watch it, but I pulled it up and watched it, and I was just like, or I think it was Sam. I don't know who it was. I thought it was. Maybe it's not Sam. I don't know. Could have been. I don't remember who sent it to me. But it's a good video. The way that he put all the information together. Alrighty, guys. I will see you guys 15 minutes before market open, about a half hour from now. And here comes the music in 3, 2, 1. It's gonna be wait, hold on a second. Oh man, I almost played that music with the volume way up. All right, here we go. Music coming in 3, 2, 1. All right, sorry about that, guys. I had a phone call I had to take there, and it didn't finally get done until just now. We got about a minute left here before market opens. I'm going to go with the same price prediction that I had yesterday, which was 750 to 1050 combined price of AMC and Ape. We are currently at 852 as a combined price. Crystal's asking a question, says, I have not been looking at Ape or been in YouTube in a while. Is Ape shorted the same as AMC? No, it is not. It's less than. Probably about 4 times less than. Dana says, Casey, my 2-week calendar is so much thicker than the standard 12-month ones I used to buy. Alrighty, guys. I will see you on the other side of market open. Let me get. I'll get the message off the screen here once I get this started here. But I'll see you guys on the other side.
T-minus 90 seconds and counting. All systems are go. We're about 90 seconds from the launch of Space Shuttle Discovery. T-minus 60 seconds and counting. We are transferring to orbiter internal power at this time. Discovery is now running off its 3 onboard fuel cells. Coming up on a go for auto sequence start. And we have a go for auto sequence start. Discovery's onboard computers have primary control of all the vehicle's critical functions. T-minus 17 seconds and counting. 15, 12, 11, 10, 9, 8, 7, 6, start, 2, 1, booster ignition, and liftoff of the Space Shuttle Discovery, returning to the space station, paving the way for future missions beyond. Discovery's onboard computers commanding the main engine nozzles to swivel, aiming the shuttle for its precise target in space for main engine cutoff.
Should have a good forward link now and
Okay, you sound good.
Houston, negative return.
Copy, negative return.
Someday, when my life has passed me by, I'll lay around and wonder why you were always there for me. One way, in the eyes of a passerby, I'll look around for another try. Say better things will come our way, no matter what they try to say. You were always there for me. Some way, when the sun begins to shine, I hear a song from another time. Getting cold, you're needing a shoulder. Puff out your chest and be a little bolder. All we do is we buy and hold. There will be shills who wanna steal your thrills. There will be friends who hold till the end. There will be doubt, fear and cloud, but it's all Those hedges are dead. Panic and fear really are near. It's not ours to own. We have shown that all we do is buy and own. Oh, there will be shills who wanna steal your thrills, and there will be friends who hold till the end, and there will be doubt, fear and cloud, but it's all in your head. Those hedges are dead, so when the night's getting colder, you're needing that shoulder, these apes got your back, we got each other. All we do is we buy and hold.
Good morning, you filthy apes. Welcome to AMC and APE, where we buy, we hold, and we screw the hedgies. That's right. This is where we like to fling poo and eat crayons for breakfast. Rock strong. I think it's really, really funny, guys. Like it's always the negative comment, but I own many shares, and next thing you know, it's kids. This is always the same three. I know I've seen that name in here before, though. I know. You're Duke of Wall Street. I'm pretty sure I've seen you in here before, at least once or twice, maybe a couple times even. But you know, it's always those comments that I think that are just kind of interesting. Tony, welcome to the channel. I haven't seen you here before. So it's just I think it's really funny how like the comments come out, and it's just kind of like you come in and your first thing that you say is like, oh, I wonder if Adam Aaron's still thinking checkmate with it at $1, and it's just kind of like one of those things where it's like, I don't know, what kind of hand is it that you believe that you're holding on to? If you don't believe that you're holding on to a royal flush, why even comment on it? Why not just sell? Why not just leave? Because it doesn't make any sense, right? Like if you're going to be afraid of a dollar, or if you think that there's doubt, you have some kind of doubts in a dollar. I mean, imagine how you would have felt if it went down to $5 last year. A lot of people watched the price drop all the way down to $5. It was the total value. The total value of AMC was $5 a share at the time, and it's really it's more than that right now. We're not even close to that price point yet. We still have a ways to go before we even get there. And after the $5 ended up hitting, we started launching in price. Yeah, I thought it was a really good video too, Keto, and I thought it was very well put together. So, I mean, look, guys, I said it right in the very beginning of the morning. I mean, the title for the day today would be the day to break Ape under $1. SSR trips at 945. We've seen what they've been doing over and over and over again. It's a very repetitive motion. It's nothing new. They're simply trying to complete orders, and in order to do so legally, they've got to drop that share price down 10% to trip that SSR in order for them to continue to complete orders and creating more short exempt volume. When is that going to start stacking into massive amounts of failure to delivers? It depends. It depends on if people are selling shares on the way down, and it also depends on whether or not those failure delivers are if somebody's actually finding shares to be found in the marketplace. So if we take a look at failure to delivers on Ape, the last numbers that were being reported, give me 1 second here while I pull them up. One of the last numbers to be reported was, is that right? 134. About 157,000 shares back on October 27th. The new report, there should be, today's the last day. Yeah, today's the last day of the month. So we should be getting the new report for failure to delivers within the next day or two here. if not today. And when we do get those failure to delivers for the futures, it's going to show you, what's needing to be purchased, and those are the things that really cause catalyst and movement in price. So it's costing him to continuously drop this price like this, and it does. Those short exempt volumes do come back and bite him in the butt, and especially with FTX and a lot of the way that I believe, and probably a lot of other people believe, that they were hiding some of the short exempt volume was probably through these tokenized cryptocurrencies has kind of been stripped away from them. And so essentially what you're going to having is you're going to have stacked failure delivers, especially when we had that 18% run up in price when Adam Aaron sold some shares on I believe it was the 20th of, what month was that? October. So you'd be looking at potentially pretty large amounts of failure to delivers that would probably be stacking pretty close because we had an 18% run in price that day. Elite Gaming, we probably do. Yeah, so Annie, part of the reason why I wouldn't have voted for dilution of AMC in the first place ever is that with dilution of AMC comes relief from short interest. And that's why I was always against dilution, because I didn't want to see relief of short interest. Short interest is what causes a squeeze play to occur. So if you go back and you look at what happened on June 1st and June 2nd, 51.5 million shares were introduced into the marketplace and stopped our squeeze. We were dead in its tracks, absolutely dead in its tracks. And so when Adam Aaron offered the Ape shares, it allowed him to be able to do dilution without diluting AMC, which is where the short interest is. And so he's diluting any dilution that occurs is going to be happening on AMC, which is great. It's segmented, it's partitioned, and now the short interest can remain on AMC while he can do dilution over there on Ape. And so one of the things that by what you're proposing is you're saying, like, well, what if he were to transfer or suggest that we transfer those shares all over to AMC? It would first off, it would take a vote by all of us in order to do that. And I don't think anybody would vote for the transfer of those shares over to AMC, especially if you knew that the dilution of AMC would cause that short interest to go away. Short interest is what causes a squeeze play, so it doesn't seem to make a whole lot of sense. Not if that's what you're looking for, anyways. Big Tramp says, Casey, if they pay with CBDC, how and who will get it, and how will everyone get? Will get it? There's certain brokers out there, Big Tramp, that have already released documentation on some of their current digital currencies that they're creating for their own companies. For example, like I'm with Fidelity. I know I've already received information or documentation on their new digital currency that they're putting into play. That's, I don't know. Maybe each broker is going to have a digital currency that they can issue, and that's how you're going to get it. I mean, I'm throwing out possibilities. I have no idea though. Lucas, it's all about failure delivers, man. Left wing wacko, you're only losing if you sell. There's no workaround on that vote, Doug. I know there's been people out there who've been trying to spread that misinformation, but it's not true. Casey, what if? I love these what ifs. All right, here we go. What if after AMC is done with Ape, there was a recall instead of a conversion? How would they recall shares? There's only like one or two instances in which you can have a recall. and that's one is dissolution, basically the company getting shut down, or the other one on that would be potentially like a sell of the company, a sale. So not really a possibility. Blake says, "How funny how all the lines up to FTDs come out today or tomorrow. It's always about the failure to deliver. It really is." Casey, sing us a song. Yeah, I like the ride too, KL. Thanks. Pantheon made it for me. Let's see. Did Ape Trip SSR? Let's see. Oh, 0.947. I think it's got to get to 945. I think it just missed it. It was almost there. Not quite. Don't worry. They'll get there. They'll bring it back down to that. Lucas, it's not over yet, man. I don't think that it failed to do anything other than put them into a really. Look, here's the thing, Lucas. If why would they try so hard to push the price down? And the answer to that is because they are afraid. They're afraid of what could happen if Ape starts to take off in price. So in regards to it failing, it's actually, I think, working even better than you could possibly imagine. This is costing them a lot of money, and a lot of it's. I can guarantee you, there's a lot of pain involved in this. Because with this downwards pressure and price movement comes more and more buying pressure, more and more and more. It just gets heavier and heavier. Man, left wing wacko, you're still in Robinhood? That's crazy, man. After everything they did last year, it's kind of nutty. Activists saying failure to delivers are out. Hold on a second. Let me. I feel like Ortex is always last to get them. I always find that they show up other places first, and Ortex is always last to get them. Nope, there they are. There is nearly 1 million shares in failure to delivers for November 14th. Nearly 1 million failure to delivers for the 14th, and it is on an increasing amount of failure to delivers. There is, let me see here. Starting on the 20th, right about the 21st, actually, the day after we rose in price 18%, failure to deliver started stacking from 367,000 shares all the way up to nearly 1 million shares in failure to delivers by the November 14th. If those numbers are still stacking, then you'd be looking at the T plus 35 date from probably starting from October 21st. So let me go over here and see where that's going to line up with. Let's pull it off of. I don't think I have the page open. Give me 1 second while I pull up the right page here. Nope, that's not it. Oh, I know what I'm looking for here. Okay, so the normal site that I pull up for T plus 35 isn't, is it reporting? Oh, it is reporting it. So let's see. So the 21st failure to delivers that started stacking, and our first million show up on 1025, putting the largest amount of pressure showing up on a T35 date that would have been starting right around yesterday. So we should be seeing some pressure, additional pressure, buying pressure applied in the very near future, unless there are people who are selling into this price drop. If there are people who are selling into this price drop, then they're going to be able to find shares to cover these positions. 21st would be the 25th. Okay, so 1024, 28, 29, 30, 12-1. So 12-1 is going to be the next day. That's a 1027. There's about 500,000 shares there in failure to deliver. So the last reported failure to deliver amount that I'm seeing right now is on 1031 is about 500,000 shares. Koya is asking about a tactical nuke on Wall Street. Probably not. T90 I don't think is really a thing, Woodstock, unless it would be based off of the shares Adam Aaron would have sold into the marketplace. Yep, that's right. Paper hands, Apex. That is correct. We got about 6 more minutes, guys, before we take a look at the numbers. Posted to the top today, guys. I've got a video from I've already forgot his name. I think it's Upper Echelon is the name of the channel. Yeah, Upper Echelon is the name of the channel. That's a really good video. I'd highly recommend checking it out. Minus the advertisement that's in the middle of it is probably about 20 minutes worth of video time talking about CBDCs. And I think it's a highly well put together video and definitely worth a watch. I will be watching it. We watched it earlier this morning. I'll be pulling it back up again later in the day. Guys, I don't know if you're seeing this or not, but there's an exceptional amount of volume occurring right now on Ape. 10.17 million shares traded so far already. So there is quite a bit of volume occurring right now. Well, Doug, I mean that's if that's how you feel, it's how you feel. No, I don't think everybody sold at $1, Scott. And I actually think that there's quite a bit of holding that's actually going on as well. Because they know they can't, Jim. The problem is that they know that the shares were issued. They know that those shares were issued to the shareholders. And if they were to buy, let's just say that they invested $500 million into buying all those shares, there would be a lot, there's no way that they would be able to take over the company because they would have to prove that they own half of the entire float or 51% of the entire company, which even if they owned all of the Ape shares, they still wouldn't have that. They would have 50%. So they would have to have more than that. So they'd have to buy some AMC shares to go with it. But even if they did do that, let's just assume for a second that they did do that. There's no way that they could legally take over the position of ownership because there's enough people out there who could make the claim or the counterclaim that they own enough shares to counter the ownership of those positions. No company in their right mind would go into a position like that without knowing for a fact that they would have complete 51% ownership. And since every company out there knows that there's tons and tons of synthetic shares involved in this, nobody will take that position. Nobody, no company in their right mind would go up there and try and claim that they have 51% ownership when 99% of the shares are owned by retail. Not a single company would do something crazy like that. It would be a waste of money. It would be a waste of $500 million, or it'd be a waste of $600 million just to try. Man, they're making it look like they actually hit Ape onto just underneath a buck. Because as it stands, the way I see it, they hit 0.947, and they should have had to have hit 0.945 in order for them to have hit that SSR trip at 10% down. Somebody might want to verify that for me. But the closing price of Ape yesterday was $1.05. If that's correct, my math should be right on this. 1.05 minus 0.105. Yeah, 0.945 is what I'm getting for a 10% drop in price. From what I'm seeing right now, it looks like they hit 0.947, so I don't think that they tripped SSR. Numbers, please, Blake says. I'm getting 0.947 right now. All right, let's take a look at the numbers real quick here, guys. It is time. I'm going to take you guys over to the other page since I what was I going to say? Oh yeah, since the DeLorean tramp it is that you guys are writing, so hold those thoughts until you see the DeLorean back up on the page again. Also, two-factor authentication. If you don't have it, you may want to consider getting it, as it could keep somebody from being in your account that shouldn't be there. While you're setting that up, make sure you have two-factor authentication with a secondary phone number. In case something happens to your primary, you can still get into your account. All right, let's take a look at our numbers here and see what it is that we've got going on. Starting in the top left-hand side, everybody got a price prediction tally point from yesterday. So this is just 4 apes that are trying to guess combined price of AMC and Ape, and it's not meant as financial advice in any way whatsoever. It's just us trying to stay sharp on where we think price movements are heading to. So far, everybody's got a point for the week for every day that we've traded so far this week. And today, I'm saying the same number. Actually, me and Keto are saying the same numbers as yesterday. I said 750 to 1050. Keto said 813 to 1113. Eric's got 7 to 10. Einstein has 769 to 1069, and Apex is going 712 as an alternate's going 712 to 1012. Short exempt volume for the day today is at 132.4 thousand shares for AMC. Ape was monstrously high at 620.3 thousand shares going through on short exempt volume. Those are big numbers. I usually think that when we hit 1 million shares going through short exempt volume, that's something to behold. Considering the fact that yesterday we had very little, well, what I would say is very little volume compared to what we've seen from the past. 620,000 shares in short exempt volume is extremely high, very, very high on such a low volume day yesterday. So there's a lot of pressure just with that number alone. I think it should convince you that there's a lot of pressure on them to keep this price low, and they're struggling. They're struggling really, really hard to complete these orders. Utilization for AMC is at a 100% ratio. Ape has 94.12, which is up 0.01% day over day. They're desperately keeping it under 95%, and that is the target number that I'm kind of looking for. Once it breaks at 95%, I think they're going to have a very difficult time controlling price on this. Day over day price increase. Yesterday, AMC was up 1.36%, and Ape was down 7.89%. Max pain for the day today, it was 750 yesterday. It's 750 again today. Off exchange volume, let's take a look at what that's going at right now. We've had 2 days in a row of elevated CHX volume for AMC, and I've kind of mentioned on a couple different occasions that I do believe that's forced settlements that are going through. We'll see if that continues to be the case again today. So far, it's not. Off exchange volume. Oh, by the way, I would expect to see about 44% of our volume going through off exchange this morning by this time of the day, and EDGX to be somewhere between 10 and 11%. Off exchange is currently at 51.02. EDGX is at 11.76. Combined, that's 62.78%, and about almost 9% higher than where it should be at this time in the morning. So a lot of price suppression through off exchange volume. Taking a look at Ape, 61.24% of the volume going through off exchanges. EDGX at 11.39%, and that's the grand total between those two is going to be 72.63%. That's about 18.5% higher than where it should be by this time in the morning. So a lot of volume suppression already. It does seem like there's some very heavy buying pressure. Also, CHX volume is normally about 0.08% of our 30-day average is about 0.08%. Today, right now, as it stands, CHX volume is at 0.14. So it does look like there are some forced settlements that are being pushed through on Ape at this time. GME has CHX volume in the range of 0.14, which is normal, and HYMC has it in the range of nothing special to report as well. It's actually 0. Taking a look at institutional share ownership, it was, I think, down like 20,000 or something like that. Let's see if it's changed any since I looked at it this morning. Nope, still the same. 140.185 million shares owned by institutions. Let's take a look at options. Highest amount of volume so far this morning for calls is at a $7.50 strike. Yesterday it was $8. So that's down 50 cents. And there's currently 3.9 thousand contracts for 7.5. On puts, highest amount of volume is at a $7 strike. That's where it was yesterday. There's 1.9 thousand contracts. Market kind of insinuating maybe a closing price somewhere between $7 and $7.50 by the end of the day today. And let me move a couple pages here and we'll take a look at the rest of the data. Alrighty. Taking you guys over to the other page here. Here's our price, combined price of AMC and Ape at $8.28. Everybody's freaking out. Oh my gosh, the price! You know, it's these numbers. The funny part to me, guys, is that when you look at the price of AMC or Ape alone, you can't really do that. It's the valuation you have to remember from AMC was part of that valuation was given to Ape. And so you have to look at the combined price between AMC and Ape and look at it as a whole and say, okay, what is the valuation between those two together? And together it's at $8.27. So we've only moved down like 20, maybe 25 cents since earlier this morning. I think since market open, we were like 8.52. Now we're down to 8.27. So yeah, we're down like 25 cents. It's really not a huge amount. But it seems like a lot because everybody's just focused on the $1 mark on Ape and going like that's some kind of significance to that when there is no significance whatsoever. It's really the combined price that matters more than anything. So we're sitting at $8.28. We did break past this a couple different levels of fib retracements at 8.37 and 8.25. We did break under 8.25, but then came back up and broke above it, and we're finding some support at 8.25. Currently, I'm not going to draw anything out just yet for this and don't see any specific pattern. I do have a breakout point coming up in the near future over here. That I think this is going to be the potential breakout, potentially moving upwards. We are starting to see a little bit of increased amounts of volume, especially on Ape. I would not be surprised to see if there's an eventual run up in value with that volume increase. Taking a look at Ortex data. So far this morning, it's showing 151,000 shares having been borrowed so far on AMC. That's going to have the very little effect on short share interest of the free float, which is currently being reported at 21.36%. Cost borrow average is at 56.69, max at 62.25, and min at 43.38. Shares on loan for the day today is up about 900,000 shares at 180.27 thousand shares, or million. I don't know why I said thousand. Let's take a look at what this looks like, though. Here's your utilization for 100 or 205 straight trading days of utilization being 100% on AMC. Here's your on loan amount increasing day over day by about 900,000 shares from 179.3 to 180.2. Then you've got your on loan average age per day also still rising. So more than likely, I mean, 1 million shares isn't really enough when you've got 110 million shares on loan. Or sorry, 180 million shares on loan. It's not going to be enough to really kind of decrease this in any kind of meaningful way. On loan average age per day rising from 94.13 to 94.3. And then your estimated short share interest, the free float, rising due to that extra 900,000 shares on loan from 21.29 to 21.35. And security lending volume day over day decreased from 8.46 to 5.3 million. On Ape, so far for the day today, yesterday there was a return of about 1.6 million shares. So far for the day today on Ape, there's 1.53 million shares having been borrowed. That's going to put the estimated short share interest of the free float rising to 10.02. I believe this might be the first time since AMC first opened up, the first couple days when we had like huge amounts of short interest that was occurring. This might be the first time that we've crossed that threshold of 10% again. Cost to borrow average is very high right now at 10.15, high for what we were used to seeing. Max is at 10.49, a min at 7.94. Here's what that utilization looks like. I'm going to zoom in just a tad bit here. Here's what that utilization looks like, increasing by 0.01%. You can't even tell. On loan amount decreasing 300,000 shares day over day on loan. That's all in new short interest that was closed out. On loan average age per day is still rising. It rose from 22.83 to 23.8. Security lending volume decreasing day over day from 10.47 to 7.05. Let's go ahead and throw up those failure to delivers in there. There's your spike in failure to delivers to nearly 1 million shares in failure to delivers reported on November 14th. The spiking nature of these failure to delivers, which you can see on a very obvious trend upwards, is going to play out as upwards price momentum. Typically speaking, what ends up happening is, and today might be the first day of this starting to show up here, especially with 1.53 million shares borrowed already this morning. Usually what happens before the price increase movement occurs, you see a lot of borrowing happens. The reason for that is they want to be able to sell those shares at a higher price and make a profit off of the borrowed shares that they borrowed at a lower price. And then collect those shares back at a lower price later. So that's typically what you'll end up seeing happening is a lot of borrowing going on. It looks like today might be the first day for that starting to happen here. We'll see how the day continues to progress. If you do continue to see borrowed change amount going up further and further and further, that amount right there is, as it gets larger and larger, is going to cause the on loan average age per day to start dropping. And that's one of the very first indicators that I tell you guys a lot of times that, tells you or kind of gives you an indication that there's going to be a price rise soon. Let's see here. Taking a look at security lending volume. Did I look at that one? I did look at that one. Okay. Moving on. Taking a look at orders by Fidelity customers. Ape is very, very high on the list here. Let's see. 3, 6, 9, 10. I think we're 10th. 10th most heavily traded stock with an 89% to 11% buy sell ratio. Very, very strong. Other than what most people would want you to believe. I mean, if you go through the list of the most 10 most, or sorry, not most 10, 30 most heavily traded stocks on Fidelity here, and you just go through and you look at the ratios, look at the green line in contrast to every single one of these other movements. Most of these are all sell-offs. Most of them, not all of them, but most of them are sell-offs. But you've got Ape sitting there at an 89% buy ratio. GME also made the list here, 30th on the list here at 62% buy to 38% sell ratio, which is good because 60-40 is the bare minimum I like to see. AMC must have low volume as it's not on the list, and let me tell you, the pre-market volume on AMC was absolutely ridiculously low, to the point where I almost felt like I needed to change my I don't normally go less than 10 to 30 million in volume prediction for a day. But man, I'll tell you what, it was sure looking like it needed to be adjusted down to maybe like 5 to 25 based off the volume we had. Trigger price for SSR for the day today on AMC is at $6.69. Nice. Ape is at 0.945. It looked to me like we had already, we were really close. It hit 0.947 right at market open. But we didn't get there, I don't think. Shares available to borrow is at 100,000 shares. There was excessive amounts of borrowing going on this morning compared to usual, but nothing having been borrowed since then. The fees are at 39.5%. Lately, what we've been seeing is somewhere like around 200,000 shares or less borrowed in a single day. But today on AMC, there was 450,000 shares having been borrowed for the day. So there's definitely some activity going on there. Out of the money calls, 75.6 thousand, 5.6 thousand contracts are in the money. 41,000 contracts are out of the money on the puts versus 8.8 thousand contracts that are in the money. Next week is looking very, very shallow on the options chain, and we tend to see rips on weeks where that happens. And my theory behind that is that if you were an institution and you weren't making a whole lot of money on a position, the way that you might want to try and earn some money or get some money, like loose hanging fruit, what do they call it? Picking low hanging fruit. You would drive the price up in an attempt to try and elicit a bunch of options to be purchased and then collect the premiums on those as you drive the price back down. So watch for that going into next week as it looks really, really barren going into next week. And there's more. Actually, that's not true. I was going to say something that's not true. It's really barren. There's not a whole lot of contracts over here. In fact, there's almost less than 50,000 contracts that are out of the money. Very, very low. NASDAQ is up 0.26, Dow Jones is down 0.6, and S&P 500 is down 0.28. The market is currently declining over advancing, with 3,426 decliners to 3,090 advancers. The US dollar is currently, let me wait for it to update. Looks like it's down 0.31%. Oil is up 1.75. Mortgage-backed securities are down anywhere from 0.39 to 0.64% down. SPY down 0.22. Looks like everything just updated after I said that. Oil's actually down 1.6. We've got a mix on mortgage-backed securities, and the dollar is down 0.21. I don't know why it took so long for that to update, but VIX is up 1.14, VTI down 0.24, IWD down 0.61, Tesla is up 1.01, Amazon up 0.15, Cinemark is up, down 0.89, Doge is up 2.53, Bitcoin up 2.36 at 16.8 a coin, GME is down 0.23, HYMC is down 0.18, Hood is down 0.27. CS Credit Suisse is down 3.37. NCMI is up 2.06. Ape is down 8.05, and AMC is down 2.18. Inflow versus outflow for the day-to-day on AMC is roughly $2.3 million more inflow than outflow for the day-to-day on AMC. 4.82 million shares traded so far this morning. Let's see what kind of pace that is that we're on here. After 48 minutes of trading, puts us on a pace for 39.32 million shares traded by the end of the day today on AMC. In pre-market, I suggested somewhere between 10 and 30 million. I'm actually surprised to see it as high a volume as it is right now. It's actually very, very surprising to me. Taking a look at the 1 hour time interval, we have more selling pressure than buying pressure with an RSI of 37.28, which is below average. On a 30-minute interval, there's more selling pressure than buying pressure with an RSI of 34.26, which is below average. And on a 5-minute interval, there's equal amounts of buying and selling pressure with an RSI of 33.16, which is below average, after having signaled for a big portion of this morning having been oversold. Taking a look at Ape, oops, that's not Ape. My phone got in the way there. Taking a look at Ape, we have about $700,000 more inflow than outflow, with 13.64 million shares traded so far for this morning. Definitely some additional volume going on this morning, which I had kind of talked about earlier this morning when I gave my volume predictions. And I had noted that there was some unusually large amounts of volume showing up. I guess I just mathed that wrong. Hold on a second here. Wait a minute, what? Why am I mathing this wrong? Oh. Wow. Something's not right here. I don't know why I feel like my calculator is either wrong or I'm hitting something funky. It should be 50 minutes of trading. Wow. Okay, based off of this pace right now, we would be normally on a pace for 107 million shares traded so far for the day. There is exceptional large amounts of volume that's occurring right now. I don't think that's going to last throughout the day. I did mention that I felt like there was some elevated volume that was kind of unwarranted. And I did increase. Normally, it seems like most of the time my Ape prediction on volume is somewhere between 5 and 25 million, so I raised it to 15 to 35 million. Obviously, we're on a much, much higher pace than that right now as it stands. I don't know. I don't know what's going to happen right there, but there's definitely some additional volume that's occurring right now. On a 1 hour time interval here, we've got more selling pressure than buying pressure with an RSI of 23.04. Which is signaling oversold. On a 30-minute interval, there's more selling pressure than buying pressure with an RSI of 21.66, which is signaling oversold. And on a 5-minute interval, more selling pressure than buying pressure with an RSI of 30.2, which is basically signaling oversold. Taking a look at the 1 hour time interval for Ichimoto. lagging line is below price line. Conversion and base our conversion is below base, and price at 94.65 looks to be the low now. It's so very close to tripping that 996 or 9945. Very super close. There it is, 9.63. I just saw it. I'm pretty sure that they've tripped it now at this point. SSR. The big buy pressure points for the day today would be at $1.20 and $1.30. So on the 1 hour chart, it looks like $1.20, and on a 4 hour chart, which you have lagging line below price line, conversion below base, that value would be $1.30. Taking a look at AMC. On the 1 hour chart here, they've managed to push. So we had the thinning portion of the cloud happening right here. The next thinning portion of this red cloud is going to be going into tomorrow in the later half of the day. So we've got currently lagging line just below price line. Conversion has come down and touched base based off of where we're at right now in price at 726. Let's see here. We've got one of the big push points that I see for AMC is at $7.60 for the day to day, and of course they're going to try and avoid that like at all costs. There is a big thick portion of the cloud showing up right here, so I wouldn't put a whole lot of faith into seeing price rising up above $7.60 today, as we did not break through the thinning portion of the cloud as of last night. I mean, you could see the attempt. The attempt was there, but never got into the cloud and stalled out. So the next chance that we might see price moving up through the cloud at that $7.50 range would be leading into tomorrow, which would make sense because max pain is at 750. I could see price moving into that kind of that price range either tomorrow or even Friday. So the big attempt right here is to just, nothing to see here is what they're basically trying to tell the market. Nothing to see here. Don't look at this. It's not a thing. We do have a green cloud right here. Normally price likes to break through the thin portions of the cloud. They're trying to push this price down through a thick portion of the cloud, which should represent a pretty tough feat to accomplish. I don't even think that this price, I would be surprised to see this price drop down below this green cloud here. I would expect to see price kind of stay within the cloud and then perhaps rising leading into next week. We didn't get what I wanted to see earlier this week. I wanted to see price kind of rise above, I think it was 760 or 740. No, I think it was 760. Maybe it was $8. Maybe it was $8. We tagged 799 earlier I guess that was late last week. I wanted to see price kind of stay around that like 750 or higher range, but they managed to drop the price down into the cloud and get buying support to kind of look the other direction from outside investors. They took away the buy signals. It doesn't. I'm looking at Ape right now, and I don't see. It doesn't look like they hit it though. It should have been 960. I thought I saw 963 for a brief second, but apparently I was looking at it wrong. Maybe it was. I don't know. I don't know what I was looking at, but it didn't. It looks like it didn't actually hit the line or the mark it needed to hit. It depends on what you. I mean, I never pre-order Lambos. Down we go. I don't, I wouldn't expect anybody to do that. Massalorian, good to see you, buddy. I saw your video last night. I watched it. Believe it or not, I'll tell you what, Mass, your videos are some of the easiest videos to sit and watch for me. Because I have such a short attention span, and you make them like high impact information in a short period of time, and that's exactly what with my short attention span, you meet my needs, buddy. I tell you, it's really easy to sit there. So I was watching your video all night last night, all the way through the end. I made it to the end, and then you gave a shout out to me and a bunch of other YouTubers, and thank you for your hard work too, Mass. I hope you. I know sometimes it doesn't feel like you're appreciated in the community, and I get that. And some of you all are probably going like, How could you possibly say that? If you guys saw both sides of what it is that we hear and we see, sometimes it can feel like you're not appreciated because I think the general tendency I think for people is to always focus on the negative and not necessarily the positive. So you can have 100 people telling you you're doing a great job, but if you've got 30 of them who are saying you suck or I can't stand you or whatever, it's really kind of I'm sorry, Mass, it was 16 minutes. I think I said 20. 16 minutes is great, man. You packed it all right in 16 minutes, and it was like perfect for me. But yeah, 30 people, telling you suck or whatever, and it's it does play a toll. It doesn't, I think it might be harder on some people than others. I mean, you could see what had happened to Trey after he was doing it for so long, and he had, I don't know, what did he have, like 17,000, or actually I think he had hundreds of thousands of people who were subscribed. And it's like I'm sure his numbers are way higher on people who are telling him he sucks. So I'm sure it plays a toll, and so I just hope, Mass, that you know that I appreciate you. You play a vital role in the community and giving information in a short period of time, meeting the needs of people like me who have short attention spans. So thank you, appreciate that. Hayden says, cap it off with a no FOMO. I love you, man. No FOMO. Well, you deserve them, Mass. You deserve the kind words because it's tough. It's tough. I know, like, there's nights where I don't get very good sleep because I stay up. You guys would think I was crazy if you knew how many hours of sleep I get sometimes. Sometimes it's only like 3 or 4 hours of sleep, and it's like it's really hard to get up the next morning and go like, yeah, I'm gonna get pumped up and let's go. So, but I'm here. I'm here every single day though, and hopefully I don't show that, because I don't want you guys to feel that. And I know every once in a while it comes across as, I come in low energy, and you can probably feel it. But uh, that's just because if ever it seems like that, just know that it's probably because I've had lack of sleep. It's so much easier if I am in the right frame of mind because I had 6 hours of sleep. It makes it so much easier for me to be more positive and upbeat. Gary Keating says, "Good morning, Casey. Can you please explain how the flux capacitor works?" Uh, no. I'm just saying. Hey, thanks, Brett. I appreciate it, man. I'm not trying to get you guys to like, uh, throw shout outs to me or anything like that. I'm just saying, I'm just trying to talk to Mass here, man to man, YouTuber to YouTuber. I'm trying to let him know that I care. I care about you, man. I love you. No FOMO. American Trader says Casey Shaw sucks, squeeze, bang, blows. Thanks, American Trader. Appreciate that. Anthony says, hey, Casey, here's a thought. So if pre-ape shorts can only cover clothes with one AMC and one ape, can they force Adam Aaron to sell them ape by claiming they can't cover clothes without him selling to them? No. No. That's not his problem. That's not his problem at all, Anthony. And they can't force him to do anything. Broke Ape said 750. You said yes. Yeah, I said 750 today too. My lower price prediction Broke Ape was 750 both yesterday and today. American Trader says I don't think it matters how much sleep you get. You're still crazy to me, buddy. Thanks, appreciate that. Harry Paris says Casey and Matt's the new Notebook. No, no. Mass, you may not get the joke there. The joke, so I forced everybody. I do movie trivia at the end of the day every day. So like the last 30 minutes of trading for the day, for actually probably the last, starting at 2:30 my time or 30 minutes before market closes my time. We do a little bit of movie trivia that lasts for about 20 minutes, and I do like 10 movie questions. And right now we're doing movies, specific movies. And I made everybody suffer Monday. We're doing ladies Day on Mondays, and so we did the Notebook trivia, and which I think I impressed myself. I think I scored believe it or not, I scored a 69% on the quiz when I took the quiz myself. Um, but yeah, it was it was um, it was painful, but it was kind of funny to watch people try to get the answers right. Who are the FTD police, and why are they asleep on the? I don't think that they are. All right, throat yogurt. I'll try to stay right here where I am in time. I won't go back to the future. Uh, that, that's kind of rude, Mr. Mills. I mean, it's not kind of. It really is. I'm not even gonna lie. It's not kind of. It is definitely rude. Yes, anybody can do the trivia. If you want to show up then too, Mass, you're more than welcome to participate. Pantheon's won, I think 2, maybe even 3 weeks. I can't remember if it's 2 or 3. We've got a gentleman in here by the name of Censored Content who's the all-time champion. I can't remember the name of that guy. That guy that is now, or at least I think is now, filled in the position for Jeopardy as the host. Uh, he's Censored Content's that guy. So whoever that is, I don't know. I can't remember what his name is, but um, and then Pantheon's like the runner-up to getting that. And right now, I have to say you're kind of late into the week. A lot of people have points already this week, and but yeah, everybody's allowed to participate. I will tell you this: if you decide to come in today, Mass, for the trivia, um, I'll give you a little heads up. Um, the best I can give you is that it's going to be Adam Sandler related. I'm not saying somebody told me I should do like in general Adam Sandler movie trivia, but I'm going to stick to a movie. I'm not saying which movie it is, but it will be Adam Sandler related. Hayden said, "Lose your man card trivia." Only on Mondays, though, Hayden. Only on Mondays. I gotta give the ladies a chance. I gotta give them a chance to be able to have movies that they know the answers to. I mean, I'm not saying they don't know the answers to other movies, but I know those rom-coms they're gonna prefer answering some of those. They've probably seen more of them. Cuddy Cut says, can you provide me Ichimoku settings? I don't think it's 92652 because on my E-Trade chart bit doesn't match yours. 92652. That actually sounds really close to right. Let me pull it up here real quick here. I think those are that last number sounds wrong. 920. It should be 92632, I think. Hold on a second. 926 and 52 is right. That is correct. But what's going to make a difference is you need to be looking at it on a 1 hour interval or a 4 hour interval. Ideally, 1 hour and three. The way I used to use it was 1 hour and 3 hour, but 4 hour works too. It doesn't really matter. It's good enough. Teresa says, I just subscribed to Massalorian. Oh, no. That's not the one I wanted to read. I wanted to read Belle Biv DeVos. Belle Biv DeVos says, I watched The Notebook on Valentine's Day thinking it would be romantic. Big mistake. She was crying for like an hour after the movie. Teresa, there's actually a lot of good YouTubers out there still left. You got to find them. At 1:30 today, Doug, Jerome Powell's going to be talking. I will be live streaming that at 1:30 today. What is my favorite movie line ever? It's actually it's kind of a monologue. I don't know. It's not a monologue. What do you call it when somebody does like a long little like reading of something? I'll tell you what my favorite one is. It's the one with James Earl Jones where he's talking in Field of Dreams and he's talking about building. It's at the very towards the end of the movie when the daughter of actually, is it Kevin Costner? Yeah, the daughter of Kevin Costner falls off the bench or whatever, and then I'm going to ruin the movie for somebody. One of the baseball players comes rushing off the field, and he's a doctor, and he helps, helps bring her back, and then James Earl Jones starts talking. Oh man, I get chills. Yeah, they will come right. Oh man, it's me says it's me. He's like it's they will come. All you had to say was they will come Ray, and I get chills right off of that. It's me. I love that. That entire speech by James Earl Jones is probably one of the most epic speeches next to maybe some like I don't know. I don't think it's a monologue though, MC Prosperity, because he was talking to somebody. He was talking to Ray, but he was also kind of almost in a way kind of talking to the audience as well. So it's kind of interesting, but I don't know. Maybe I don't know. I don't think it's a monologue. I think it's something else. But yeah, I'm not going to be watching the summit interview today, though, Doug. I think you got to pay for that. The Wind says his voice is legendary, and I agree, man. James Earl Jones, hands down, is probably one of my favorite movie voices out there. I mean, I could listen to that guy read something every single day of the week and never get bored of it. Turtle says Shawshank Redemption, the sewage pipe scene. Man, I'll tell you what. That's one of my other most favorite movies is Shawshank Redemption. You just nailed like probably 2 out of the top 10 of my favorite movies ever. Or not 2, but you nailed my second one. Field of Dreams, Shawshank Redemption, those are definitely in the top 10. And I love so many parts in that sewage. The whole movie. The whole movie's great. Well, Teresa, welcome. I hope you find a home here or wherever it is. It's always available to you. MC Prosperity says James Earl Jones will be forever remembered for Darth Vader. More than likely, yeah. I know he will be remembered for that, but in my mind, there's so many other parts that he's. I mean, my favorite one. He's my favorite movie quote of all time. Soliloquy. I can't even say the word, Jathan. Soliloquy. Soliloquy. Curtis, let me check something out real quick here. Because I can tell you where usual turnaround points are at in synthetic price failures. So let me pull up Ape real quick here. Let me plug in the value that we went down to 0.947. That is a 48.25% drop in price. On the screen right now is every single upwards and downwards synthetic price failure that we've seen so far on Ape since the creation of it on the 22nd of August. We've got a 50.3% was our first dip, then a 42.7, then a 49.9, then a 63.3, then a 52.04, then a 26.47, and now a 48.25. I don't know about you, but this 48.25 seems pretty darn close to the average. I don't know if you took if I took the averages of those. Let me just add them up and see. I have to watch my. Normally I could just enter these in really quick, but now my number 4 sticks, so I have to like actually look over and make sure that anytime I hit a 4, that it's not duplicated. 1, 2, 3, 4, 5, 6. So our average price failure that we see on Ape is 47.45%. And right now, hitting 0.95, that puts us at a 48.25%, which is damn near close to the average amount of price failure that we typically see before returning upwards in price. Do note, a price failure with the amount that we've come down to right now, all we have to get back up to see newer highs is going to be $1.09. I just noticed that on the Excel spreadsheet here. 109 will be the if the value that we hit this morning is the lowest, that would be the definition of a turnaround point would be about 109, as it would be 15% up from the bottom that we found so far. Big Tramp, I'm not so congratulations, Aaron. I'm gonna delete what it is that you wrote there, and it's not because it's not. I'm doing it more for your protection than anything. I prefer if you guys didn't put values that you put in. Saying that you bought more is perfectly acceptable. I just don't want people to see when you're buying lottery tickets. So Big Tramp says, "Are we still tracking suck, squeeze, bang, blow, Casey?" And I'm not. Ever since the dividend, things aren't tracking correctly. The cycles that we normally used to see are not tracking at all. All right. Sorry, I know, Aaron, you probably put that number in there before you heard what it is I had to say, but just be careful, man. It really I've seen instances of people being targeted, um, specifically because of the fact that they post how many shares that they have, and I don't want that to happen to you. So for you, I'm just trying to help you out here. It's nobody's business other than your own. Nobody has the right to know how many shares you have. That should be for you and you only. Vicus, I just talked about it. Go a little bit back, like go back like 3 or 4 minutes, and I just kind of went through the average price failures that we've seen from the past. We're really close to we're pretty much right on top of where it is we've seen on average on our price failures, the turnaround point. Kenny G, congratulations on your 10 shares. That's kind of the running joke around here, Aaron. We all own 10 shares. So if you want to put out a number, put out 10. I just bought more shares, 10. I have 10 now. Hey, Mass, take care, man. Ooh, Gus says put a trampoline up on Ape so it'll trip. All right, Gus. How big do you want your tramp? And it's good to see you, Gus. 10 shares, 2 weeks. Pro Jeweler knows. Arby says, damn, I only got 9. Oh man, Arby, you got one more share to go. You're gonna got one more share, Arby, and you're gonna be caught up to the rest of us. Joe says, no, I have 13. Look at Joe. Joe's trying to be all like, I got more than you all. I got 3 more. You go, Joe. Delayed Noise says I just increased my shares from 10 to 10. You should have put 10.01. Hopefully, Gus. I gotta wait. I gotta wait for Gus to put in how big of a tramp. I gotta know how big you like your tramp, Gus. Small, medium, or large. A lot of new people here too are wondering like, what the hell is he talking about, tramp? It's a long story. It's a long story, and when the big tramp shows back up on the page, it'll all make a lot more sense. Corey Jones says, "What the f, yo? I picked the DeLorean like a month ago, man. That's dope." I know, right? Pantheon helped me out, man. He was working in the garage real hard. I mean, I told him, I said, "Hey, we need to go back to the future and grab the old vehicle." I don't think I was specific enough in telling him what vehicle it was that I needed to have. And so I think it was basically me saying we need to go back to the future and pick up the old big tramp. And so I got this instead. So we're working here on Back to the Future. Gus says medium. Medium-sized tramp coming right up on Ape. Give me just 1 second here. We'll draw it out. And we have 10 more minutes left here. Anybody else notice that we're not barcoding today on Ape? I don't know if anybody else has noticed that or not. I'm waiting for it to happen. I would imagine that it'll probably happen as soon as we hit 9.945. But it's kind of interesting that we're not barcoding like usual. So the question is what time are we going to see price hit 945? Normally, I would say it's going to be like in about 40 minutes from now. Yeah, that sounds about right. Let's put it around here. So here's the story. For those of you who are new and don't know what the heck I'm talking about when it comes to a big tramp, you're going like, huh? Big tramp? What? What is this big tramp stuff? I am the world's worst artist. Can't draw to save my life. I know how many sides are on an octagon and a pentagon, and for some reason or another, One day when I decided to draw a big old stop sign, like I think we probably won't see price rise too much higher or too much lower than this. I decided to draw a stop sign and made a pentagon. No idea why that is. Just, I guess, mental, mainly. You know what, Gus? I think that's actually kind of a small tramp. What's the time frame on this? 11:19 to 12. Oh yeah, this is definitely a small tramp. Hold on a second here. We're gonna have to extend this bad boy out. So the story is that as I was as I was trying to draw this this big tramp uh, or stop sign, um, I couldn't because I drew this. And everybody said, "Hey, that looks like a trampoline," and the big tramp was born. One of the most frustrating things that I ever experienced in my entire work career is that working in engineering, and anybody who's listening who's an engineer or works in engineering department will understand what it is that I'm talking about. Most engineers are usually pretty. I mean, they're decent sketch artists. Like they can sketch stuff out pretty easily. And so not having the ability to be able to sketch something very well because I have like stick figure drawings puts me at a severe disadvantage because it basically sets me apart from all of my peers. And, and so it was probably like one of the most frustrating things because I just don't have the capacity, I guess, perhaps maybe to draw things like that. It does look like we're getting a little bit of a wedge going on here, guys. So anyways, yeah, I can't draw. Really sucks. I wish I was better at it, but I'm just not. MC Prosperity says, while you're in the future, can you pick me up Gray's top stock picks of the last 50 years almanac? Thank you. We'll do, MC Prosperity. We'll do. Ricky Bobby says, hey, Casey, what's the cost to borrow on Ape? Cost to borrow on Ape is currently at 10.15 is your average. Your max is 10.49 and min is at 7.94 when I updated it about an hour ago. I will be going through the numbers here in about 5 minutes, and I'll give you an updated number for that here in just a little bit. Deborah says, I always wondered how the big tramp came about. Well, it was funny because, you know, it was a running joke for a long time that I was drawing trampolines instead of stop signs. And then somebody said, you know, I think it actually might have been Thick. I think Thick Flair might have sent me this picture of the big tramp. And I was like, dude, that is so awesome. I'm like, I definitely need a vehicle like that on the page to where I can store I'll just say I store my tramps there. And so it just kind of became this, it kind of grew. It just became a thing. And next thing you know, we had big tramps. Kevin says, tramp sounds sketchy. It sure does. That's the best part about it. Who doesn't like sketchy? Everybody wants to touch the hot stove. Steven Peterson says that's the old Chrysler symbol. You're not wrong. Just got to draw some lines in the middle. Down We Go says you can't be good at everything. No kidding, right? No kidding. I'll tell you what though, Down We Go. I would gladly give up. Um, I would gladly give up one thing I'm good at to be better at drawing. Um, or being or even artistry or anything having to do with like artistic type art, whether it be painting, pottery, glass. Well, I don't care what it is. Could be anything, right? But where you're using your hands physically to try and make some kind of art. I'll tell you what. This is the most saddest story ever. Well, it's not really that sad. I got way sadder stories, but I made for Mother's Day in what grade was that in? I think I was in seventh grade. In seventh grade, I took art class. The teacher had an urn in there. We all made pottery pots, little pots. We were supposed to make these little pots, and then the goal was to fire them and then paint them and then fire them or glaze them or something like that, and then fire them again or whatever. We went through the whole process, and it was supposed to be for as Mother's Day gift for our moms, and I spent every waking minute into making the perfect face for my mom, and I was so proud of it. And it is a hot piece of garbage. I mean, I kid you not, guys. I ain't gonna lie. It is a. I wish I had a picture of it. It is a hot piece of garbage, but to me, it was awesome. I loved it. I couldn't imagine it being any better. It was the best. It was by far the best thing I'd ever done in my entire life, artistry wise. And the teacher gave me a C, I think like a C plus on it, or a C minus or something. I don't know. I got a terrible grade on it, and I was devastated because that was my Mother's Day gift to my mom, was a piece of C art, and it just made me feel so, like, I don't know, I guess deflated, because that's what I was. Pro Jeweler says glass blowing, dude. Glass blowing looks so awesome to me, man. I would love to try glass blowing. It looks like a lot of fun. Vikas, it's going to be the failures to delivers, man. Curtis says I went to school with a guy who ended up working for Disney Pixar. The dude was an incredible artist. I would give up my talent in something to absorb talent in artistry like that, like just being able to draw. MB says, Casey, you were making pot in seventh grade. Yes, sir. And I gave it to my mom, and my mom liked it. My mom, she's like any other great mom out there. She put it up on her kitchen windowsill, so that she could see it all the time. That hot piece of garbage. In fact, I wouldn't be surprised if she still got it sitting up somewhere. I don't know. Maybe she does. Maybe she doesn't. Did your mom get hooked on the pot? You should ask her. I know, Yale. See, you always end up appreciating the things that you're not good at more than the things that you're great at. Um, so yeah, I would trade. I honestly, I really truly would trade my ability to be able to sing and play guitar or any kind of music, or being able to write music to be able to draw. I don't know, maybe just yeah, 50% better than I do. MC Prosperity says, "Don't feel bad, Casey. I flunked finger painting. I got more on my shirt than I did on the page." Pro Jeweler says, "I'll take that class with you, Casey." Man, dude, let's do it, Pro Jeweler. I've told my wife. I said it's on my bucket list. We're taking the glass blowing class. Man, that's hard to say. Glass blowing class. It's not that hard. Maybe if I tried it 10 times in a row really fast, it'd be more difficult. But I am all about that, man. I want to learn how to blow some glass. That does not sound right. Stop while you're ahead, Casey. Stop while you're ahead. I want to learn how to blow me some glass. Oh man. Well, I'll tell you what, Yale. If you know how to draw or paint or something, I'll trade you guitar lessons for or I could try. I could teach you how to play bass too. I could trade you bass lessons for art. I don't know, drawing lessons or something. Let me see here, Bird Eye. You said ape, right? Hold on a second. 100,000 share order. I do not see a 100,000 share order on Ape at all. Man, I'll tell you what, the order book is much different on Ape today than it usually is. All those 30,000 contracts that are all at the very top are way different. It's actually being allowed to be traded today instead of barcoding it. Yeah, Highway Frog, I don't expect that it is easy work, but the ability you want to learn how to blow, Casey. uh, yeah, unfortunately. Turtle says, I live in Colorado. Everyone here's side job is glass blower. I think it's more like a glass sucker. Don't you mean a glass sucker than a glass blow? I'm just curious. I mean, I hope they're not blowing. All right, I'm gonna take you guys over to the other page here before this spirals out of control any worse than it already is, and we'll take a look at the numbers here and see what's going on. I'm not gonna be able to see what it is you guys are writing, so hold those thoughts until you see the DeLorean tramp back up on the page here again. Also, two-factor authentication. If you have it, great. If you don't have it, it could help prevent somebody from getting into your account that shouldn't be in your account. And when you're setting that up to test it out or try it out, see if you like it, make sure you set up a secondary phone number just in case something should happen and you need to get in and you can't. Let's take a look at the numbers here. I'm going to move a couple pages around real quick here first. Make sure I took you guys over to the other page. And let's check out and see what's going on here. Alrighty, starting with off-exchange numbers sitting right here next to my head. Let's take a look and see what we got going on. Normally by this time of the morning, I would expect to see about 49% going through off-exchange on a normal day. And somewhere around like 11 to 12% through CBOE EDGX. Right now, off-exchange is at 51.29%, EDGX at 12.46. That total comes out to 63.75% of our volume going through those exchanges. I would expect to see 60%, so we're about 3.75% higher than where we should be by this time in the morning. CHX volume this morning, this is our third day in a row of elevated CHX volume for AMC. Currently, our 30-day average is 0.29%, and we are at 3.12% of our daily volume going through CHX on AMC. That's 3 days in a row, guys. I don't know how we don't see price improvement following this. Every time I've seen this in the past, within a few days afterwards, price starts ripping. So this is right now the total amount of volume going through CHX is 206,415 shares. I think it was 2 days ago it was about 400,000. Yesterday it was about 100,000. Today it's 200,000. So there's definitely some forced covering that appears to be going on right now. On Ape, looks like there's about 64.87% of our volume going through the off-exchange EDGX at 10.14. Grand total is 75.01%. That's about 15% higher than where it should be. CHX volume Also elevated on Ape as well. It is a normal 30-day average is 0.09% of our volume going through CHX. Today it's at 0.39%, 68,000 shares, almost 69 thousand shares going through that exchange. GME, CHX volume, nothing to report significant. And HYMC, CHX volume is elevated, normally 30-day average 0.08%. Today it's at 0.27. Taking a look at Vortex. As of an hour ago, there was 151,000 shares having been borrowed for the day-to-day on AMC. It's now 1.44 million. That's going to have the effect of raising the short share interest of the free float to 21.46%, cost per average at 51.04, max at 62.25, and min at 43.38%. Shares on loan for the day-to-day is up 900,000 shares day over day on loan to 180.27 million. Ortex is estimating about 309,000 shares of that to be new short interest on AMC. On Ape, an hour ago it was 1.53 million shares having been borrowed for the day. It's now 1.47. It's kind of the effect of it shouldn't really change the short share interest of the free float too much. It's showing up at 9.2 or 9.96% right now. Cost per average at 10.15, max at 10.49, and min at 7.94. Shares on loan for the day-to-day is down by 300,000 shares and closed short interest down to 51.53 million shares. Taking a look at options. Highest amount of options were purchased at $7.50. There was 3.9 thousand contracts an hour ago. It's now 6.2 thousand contracts. On puts at a $7 strike, there was 1.9 thousand contracts an hour ago. There's now 2.8. Market's still indicating a closing price of somewhere between $7 and $7.50 for AMC by the end of the day today. Taking a look at the combined price of the two, we currently have AMC and Ape average price is at $8.21. It's about 30 cents lower than what it was at market open. And we do seem to be consolidating a little bit in between $8.16 and $8.25. We did find some support, a double bottom on 8.16, and looks like we're kind of consolidating a little bit. Hold on, I gotta sneeze. Whoa, I have violent sneezes. That one hurt. Looks like we're consolidating right there in between those two Fibonacci retracement levels, 618, 786 that I've got showing here. I feel like in the later portion of the day today, we were supposed to have a breakout going up, and that is kind of really close towards the very end of the day. In fact, actually, I got 1902 is where I drew my box at. I never usually look at the time until after I draw the box, and so it just so happens that it's right at kind of market close is where I drew the box at as a potential point to where we may break through this descending level of resistance that we've been seeing from a past. So I think we'll see, I think there's a strong chance that within the next, either by the end of today or sometime going into tomorrow, we may see a test on that. Orders by Fidelity customers. Ape was, I believe, 10th on the list earlier. It's still in 10th most heavily traded stock according to Ortex. 90% buy to 10% sell ratio. Those are extremely high numbers. Extremely high. GME is currently sitting at is sitting at a very nice 67% buy to 33% sell ratio. AMC, likely due to the fact that it's got low volume, is not showing up on the top most heavily traded 30 stocks on Fidelity. Trigger price for SSR for the day-to-day on AMC would be at $6.69. Ape, I think, did not trigger at 0.945 as of yet that I can tell. The total amount of shares borrowed so far for the day-to-day has been significantly higher than what it has been in the more recent past. We're now seeing another 100,000 shares having been borrowed, putting us at 550,000 shares borrowed for the day today. It does look like they did return some ETFs earlier, but did borrow off the rest of the shares. 39.5% fee is what we're at currently for borrowing. NASDAQ is up 0.2. Dow Jones is down 0.53, and the S&P 500 is down 0.2. We currently have a declining market right now with 3,707 decliners to 2,911 advancers. And the US dollar is, where is it? I feel like I gotta wait for this to like update or something. It seems like it takes a while. The US dollar is showing down right now, 0.21. Oil is down 1.68. Mortgage-backed securities are kind of mixed right now. BlackRocks are up 0.03, but Vanguards are down 0.16. SPY is down 0.1, and it looks like it's improving currently. VIX is up 1.1. VTI is up 0.1, sorry, down rather, 0.12. IWD is down 0.42. Tesla is up 1.15. Amazon is down 0.02. Cinemark down 1.23. Doge is up 2.54. Bitcoin is up 2.62. GME is down 0.7. HYMC is down 1.27. HUD is down 0.82. CS is down 4.4. NCMI is up 3.87. Ape is down 7.1. And AMC is down 2.52% for the day today. Inflow versus outflow. AMC has approximately $600,000 more inflow than outflow for the day today. 15.78 million shares traded after 103 minutes of trading, putting us on pace for 59.74 million shares traded by the end of the day today. That is way higher than I would have expected in volume. Pre-market volume did not express that at all. These numbers are unwarranted. Oh no, it's because I'm looking at SPY. My bad, guys. I just looked up at the price. I was like $3.94. Okay, sorry, my bad. Sorry. We're currently trading $1.3 million more inflow than outflow. My bad. I apologize. 7.4 million shares traded so far after 104 minutes of trading, putting us at 27.75 million share trading pace. That's more like it. I said somewhere between 10 and 30 million shares traded by the end of the day today. I do believe it's going to be a low volume day on AMC. On the 1 hour time interval, we have more selling pressure than buying pressure with an RSI of 35.91, which is below average. On a 30-minute interval, there is more selling pressure than buying pressure with, actually, hold on a second. Nope, it's equal amounts of buying and selling pressure with an RSI of 32.86, which is below average. And on a 5-minute interval, more selling pressure than buying pressure with an RSI of 38.87, which is below average. Taking a look at Ape, we have approximately $1.8 million more. Actually, it looks like more like 1.9, almost $1.9 million more inflow than outflow for the day today. 20.24 million shares traded so far. This is exceptionally large volume today, guys. Way more than I would have expected, and is representative of something changing right now. After 105 minutes of trading, it's putting us on a pace for 75.17 million shares traded by the end of the day. I did up my volume prediction from my normal 5 to 25 million shares and suggested that we would see an elevated amount of volume occurring today, but I only increased it to 15 to 35 million. Based on these current numbers, I don't think I'm going to hit, but I wouldn't put it past them to try and starve the volume for most of the day, trying to keep out as many buy orders as possible from coming in, especially at these prices. On a 1 hour time interval, there is approximately, there's more selling pressure than buying pressure with an RSI of 24.74, which is severely oversold. Actually, it's not severe. It could be worse. It's heavily oversold. On a 30-minute interval, more selling pressure than buying pressure with an RSI of 26.87, which is oversold. And on a 5-minute interval, more buying pressure than selling pressure with an RSI of 43.57, which is slightly below average. I don't think Ape has hit SSR, and it's not barcoding like usual. Something is different today than usual. The algorithms are not trading this like it usually trades. We are in my box for the breakout. However, I wouldn't say that this really broke out. It's simply it started to kind of break out to the bottom, but then started heading up. We have falling volume, and I think this is falling price, if I'm not mistaken. Let me just verify it. Yeah, falling volume and falling price means a bullish move upwards, and the trend channel is also pointing to the bottom side of the wedge, which usually means a breakout going up. We'll have to wait and see here. It's not quite making it out of it yet. It's definitely surpassed my box, but it's trying to. You can see it's trying to maintain this level of resistance. But if it does break beyond this, it may find newer highs. Man, my wife brought me some coffee this morning. I'm gonna have to go hit the restroom real quick here, guys. You're gonna have to excuse me for a second because that coffee's hitting hard. Let's see here. I gotta go hit the restroom real quick, guys. I'll be right back. All right, I want to put up this poll here because we got a big tramp. But I gotta ask this question here. All right, so you're trapped. Actually, let me rephrase this. All right, I just rephrased the question because I think asking it in this way may produce different results. Trapped on an island with an unlimited amount of this would keep me happy. Coke, Pepsi, or other. And I'm okay, I prefer if you guys would choose between Pepsi and Coke. But I know that if you just cannot stand the taste of either, like Turtle's saying, soda is gross. Down we go says cocaine. No, no, Coca-Cola. You know what's so funny the other day? We were talking about something at the dinner table, and somebody mentioned some. I think my wife mentioned something about cola, and I said it's because it's called Coca-Cola, and then I suddenly realized as it came out of my mouth, I was like, wait a minute, it was Pepsi Cola. I don't. It's so funny. It's been so long since I've called Pepsi Cola that I completely forgot that Pepsi had cola on the back end of it as part of the name. Why am I saying Coke? Because it's just you guys. Jupiter's over here. Coke is real good. Throat yogurt. I knew people were going to say Dr. Pepper, but I prefer you to choose between Coke or Pepsi as if you had to choose. Of course, if other is going to be your choice, then I'll understand. Ooh, Yale's talking my kind of speak over here. Coke in an ice cold glass bottle. Mmm. It is the best, isn't it, Ariel? It really truly is. And when you say a cold glass bottle, you're talking about the kind where like if you hit it too hard, it's gonna freeze into crystals. Like that just near freezing point, cold Coke. Super good. Cocaina. There used to be cocaine in Coke. I heard that's true, but I'm not sure. I haven't verified it lately. I feel like the internet's always changing that one. Root beer floats are good too. Only reason I ask is because Dana was in here earlier mentioning what did she mention? She mentioned, oh yeah, she said Coke, and it kind of got me to wondering. Like I kind of thought like, well, I wonder what you guys prefer as a whole. If I were to do a poll, and I'm actually really not surprised to see that most people are choosing 53% of you are choosing something other than Coke or Pepsi. But yeah, Pro Jeweler, if your choice is Mexican Coke, then just pick Coke. Musical Companion says there is no Dana, only Zool. Jupiter says when Amy's squeezed, we all will be sitting on an island drinking Coca-Cola with ice. Mark my word. I'm ready for it. I'm ready for it, Jupiter. Make it so. Blake, you said what's going on? What do you mean what's going on? Elon said yesterday Coke is better than Did he say that? What? That's kind of weird. I did not know he said that. No joke. I did not see him say that. I'm gonna have to report this poll. You would. You poll reporter. Oh, hold on a second. Hold on. Coke and rum. Bird Eye says, anyone know what Days to Cover was when AMC ran up last? I can tell you. Give me just a second. I'll look it up for you. Musical Companion. I'm going to buy myself the Big Tramp. I don't know if you've seen it or not, but I will buy the Big Tramp. Check DM, please. All right. I got to look up two things here. Hold on a second. I got to look up the Days to Cover, then I'll check my DMs. Let me look this back up. And I'm assuming when you say what were DTC when price ran up last time before June's run up, I'm gonna assume that's what you mean. Let's actually look at it together. That way you know I'm not just pulling your leg or something. So let's see here. Days to cover. We'll do this one here. Based off of actually, you know, we could do a couple different ones here. I'll do days to cover on the 3-month on loan amount. That's usually what it's done calculated by. But we'll also do it by days to cover based off the 3-month estimated short interest. So we'll take a look at both of those just for the fun of it. We'll scroll back here in time, and leading up to it, one of the higher points. Oh, hold on. There we go. One of the higher points that we got to was 1.74 on loan amount, which is almost exactly where we're at right now. Wow, these numbers are very, very similar. And actually, days to cover on the 3-month estimated short interest and on the on loan amount are currently even. For some reason or another, that shouldn't be the case because the on loan amount is more than the short interest. I find that very odd. I don't know why it's reporting it like that. I do not know why it's reporting it like that. Estimated short interest. Huh. I don't know why it's reporting it like that. Let me zoom in on this just a tad. Sometimes, okay, yeah. Sometimes what happens is that oh, the numbers are much higher right now. Hold on a second. I didn't realize I was looking at I was not looking at our current status. I was looking at I was looking at a different period of time. My bad. Sorry about that. We're not at the current levels. We're actually higher. So it was 1.72 and 1.11. I forgot I had moved the bar over all the way to the side. We are currently at 7.24 and 4.42. That makes more sense now. I was trying to figure out. I was like, wait a minute. There's no way our number is exactly the same right now with our current numbers. I see what I did wrong there. Yeah. So current numbers 7.24 and 4.42, depending on if you want it based off of short interest or total amount of shares on loan. And then back prior to June's run up, the highest numbers were 1.74 and 1.04. And prior to the January run up, I would say that they were right around 2.42 and 1.87. So our numbers are much, much higher right now than any other point in time. And if I could expand this just a tad bit, right now it's kind of lagging just a tad bit here. Those are what our numbers look like right now in contrast to everything that I can pull from the past. Pretty large numbers. And if you throw something in here like cost to borrow as well, way up there as well. Cost to borrow just leading into the run in May got up to about 19.93% going into it, and right now we're at 36.19, so we're a much higher rate of cost to borrow right now. We have seen higher cost to borrow rates leading into the January run where it was more around 152%. Island of Dr. Moreau says all we need is volume. Yep. It'll come. It will definitely come. It'll when they're forced to actually start finding shares at the market to buy, you'll see that happen. All right, checking my DMs now. Give me 1 second. So here's the Elon Musk had previously stated, I love Diet Coke, especially the fountain kind from a theater. Now Elon and CEO Adam tweet out the exact same time. Oh, and Elon tweets out about Diet Coke. I know where you can get the fountain kind. Elon AMC. Well, I didn't know that they tweeted that. Let me see Adam Aarons. Oh, apparently Adam Aarons got a new tweet. He retweeted something from a while back. Here we go. This is one of my best picture. This is my best picture of 2022. Guess what fabulous movie AMC is bringing back to more than 400 of our U.S. theaters in partnership with Paramount. AMC will play Top Gun Maverick. Starts Friday, December 2nd. See it again on the big screen for tickets. Looks like they're going to go for another run on those in December. Apparently, there's some more money there to be made. Maybe they feel like they haven't actually got everything that they need out of the marketplace. But it does sound like there is some kind of partnership with Paramount that he's mentioning here. Jerome speaking today. He is talking about economic outlook, inflation, and the labor market, and that starts at 1:30 Eastern Standard Time. And I will be live streaming it here. Yes, Bird Eye View Photography. If anyone wants to buy AMC, it has to go to a vote with shareholders first. Yes, that's correct. Ready for some MOASS. It's been 2 years and they have been forced to do things in the past. Apparently, you don't remember June of last year. Perhaps you don't remember January of last year. Yesterday, Elon answered an AMC question with a popcorn box. Six Sun says, Casey, how come they're not pushing AMC down like they usually do? Hmm. Hmm. It may be because of the fact that if there's additional buying pressure that's created through downwards price movement, that it may cause price to, become uncontrollable. That's my best guess. Why is Adam Aarons saying 400? Hold on a second here. He may be saying that they haven't sold any more shares. I mean, you gotta throw on a tinfoil hat there, Blake. Deborah says because Ape's a bigger threat right now. I mean, that kind of seems like that might be the case. Yeah, Kokomojo says Ape is what will cause the squeeze. It pays off debt. That's where the fight is. I agree. I mean, you can see how heavily it is that they're trying to control price there on Ape and push it down. The idea here is to squash any kind of attempt at whatsoever at AMC becoming taking away their one last ability to be able to say that AMC is a good shorting position. Yep, we're on 205 days, Turtle. Bird Eye, when you say last run up of 150 to 2.3, what in regards to Ape, or what do you mean by last run up? Ooh, AMC Jakey says, is Powell going to make AMC fall again? I don't know. It might. I was kind of suggesting that they were pricing in Powell's speech today. I don't know if they on Monday and Tuesday, so I don't know if that's the case or not. Yeah, Gorilla, I don't listen to Al. Hey, Keto, that's awesome, man. I unfortunately, for the most part, have never really relinquished the hold that those drinks have on me. Anthony says no options in Ape. How can they drop? Because I think the honest truth to it, Anthony, is it's the same way that they drop the price on any stock. They borrow shares and then they sell them into the market at a lower price, and it's the same exact method that they drop the price on any other stock, and it's not always through options. And block orders going through off exchanges to suppress price. Casey, how we doing? What's going on with Ape? It is down to 0.9637. It looks like they're trying to drop it 0.963. It looks to me like they triggered SSR, but let me look at it again. I might be wrong here. They haven't tripped SSR for the day today yet. It looks like it's awfully close, and we did get that price run that broke out of that wedge. It stalled out though at about 9.9874. Came back down again. So, but you can definitely tell that Ape is trading normally today instead of barcoding, which I find to be very, very interesting. We haven't seen that in a hot minute. Volume is super, super high today compared to usual. And you can tell that there's a difference in how the shares are being traded. I'm not sure why that difference is occurring, but you can tell that there's definitely more volume occurring right now than usual. There's a definite change happening. Yeah, Bird Eye View's correct. AMC is Ape. Selling and buying them is pointless. Yeah, you're not doing yourself any favors if you're buying and selling shares of the same thing. That's not going to help you out in any kind of way. In fact, it'll just more than likely probably cause you some kind of taxation in the future that you don't want. but it is your money and your choice. No, I wouldn't say it's easier for them to do it, actually. Anthony, I would actually say that it's harder for them to do it without options. But, I think that there's still methods in which they can drop the price through spoofing. John Hannaford says another 150,000 shares through CHX for AMC. Oh man, this is getting spicy. That's a lot. Hold on a second here. I gotta refresh this. No, I'm not gonna do it. I'm not gonna do it. That is a lot. That's 300,000 shares then. 350,000 shares that's gone through CHX for the day. Anthony saying, well, they dropped it over 90% with no options. It seems easier. Anthony, what you really need to understand is that they can make the price whatever they want whenever they want. And the problem is since there's less short interest on Ape, that's what makes it more. That makes it easier for them to be able to run less risk at a price run. So there's a dual thing kind of happening with Ape, right? If they let price run too far, they run the risk of Ape blowing up in price and Adam Aaron being able to become debt free with the company by selling shares into the marketplace. If they also don't drop the price, then they run the risk of too many people buying into Ape and uh, creating this massive buy pressure that's not a good thing too. So they got to keep the price low. They've got it so low right now that I would imagine the buy pressure is so high right now that I can't. I'm actually kind of confused why they would take it this low because this is really going to create a ton of buying pressure. But the same thing goes with AMC as well because they can also do the same thing with AMC at any given time. I've already proven on multiple occasions that they could have dropped AMC's or Ape's price to within less than $1 a month ago or over a month ago. You got to stop focusing on price. That's really not what this is about. This isn't about price. This is about psychological warfare and trying to get people to sell their shares. How do you? You need to place yourself into the position of somebody who needs shares, and you need to understand what is it they're trying to accomplish and how are they going to get there. What could they possibly do to get you to sell your position, and how are they going to do it? Once you understand that, and that price is just simply a method in which they can control the buying and selling of positions, then you start to understand why price is manipulated the way that it is. Nope. I don't believe that to be the case, Anthony, and you would see it in return. Like if Adam Aaron was truly and honestly selling shares, then I think you would see return shares. I mean, why wouldn't they just be returning shares if that was the case? You have to, if he's selling shares into the marketplace, then those shares have to be you have to see those shares somewhere. Where is it that you see evidence of shares being sold into the marketplace? If you don't have any evidence of shares being sold into the marketplace, then you have nothing. You're just saying, I think it's happening because you just think it's happening. But if you see evidence of shares being sold in the marketplace, price movement has nothing to do with where shares are being. Price would be moving up, Anthony, if he was selling shares in the marketplace. Somebody has to buy those. That's upwards price momentum, right? Like that makes sense. If you think Adam Aaron's selling shares, then the price should be going up, not down. If there's any sign if there's any sign of the fact that he's not selling shares in the marketplace, then it's the fact that the price is moving down and not up right now. AMC is not Tesla. I'm not saying it is Tesla. I'm just talking about supply and demand. If there's a big demand for shares out there and Adam Aaron starts selling them, the price is going to start rising. Last time he sold shares was on the 20th of last month. Price rose 18% on the day that we saw about 15, well, it was about 13 million shares that were returned on that day. 18% upwards price movement. Can you explain what SFX is? No. Wait, what do you mean? Well, I've gone down that road before, Anthony, and you know, it's a dangerous road that you're going down. What you're saying is true. If selling shares makes the price go up, then how about half of the apes volunteer to sell then? The problem is who's going to volunteer to do that? Why should we have to be the ones that sell shares into the marketplace in order for us to see price improvement? How about we just not do that and they just allow price to be what it's supposed to be naturally? There's nothing here that says that we need to do something in order for us to gain price improvement. Price improvement should come naturally like it's supposed to, but it's not. And so I would challenge that, and I would say that's the wrong thought process because nobody's going to want to sell their position, and it's not. I don't think we should have to. We need to fix a system that's broken here. Yeah, I'm trying to figure out too, Deborah. I think he meant. I think he made him at FTX. I'm not sure. Oh, CHX. Yeah, CHX is what it is. CHX is just a different exchange where there's usually like never any volume that goes through it, and usually when there is volume that goes through it, it looks like it's some kind of forced settlement exchange. Not always, but for the most part, it does seem like there's forced settlements that go through there. There is also I've also seen evidence that it is just closing of positions as well, not necessarily forced closing, but just closing of positions and the settlements occurring through those exchanges. Perjuler says, "Can you go into the future and come back and see and let us know when?" 2 weeks. Let's see if SSR triggered. Hold on a second. Nope. So close. Not quite. But we are starting to get our barcoding though at 0.95 cents. Finally. Finally starting to get our barcoding. Because those shares are valuable, Anthony. Those are the shares that are going to remove his debt. He doesn't need to sell shares. He only needs to sell in small increments along the way. It's the best. I mean, if you look at how if you were to do it the most successful way possible, you want the market to be able to pick up those shares with each time that you sell those shares into the marketplace. So you don't want to sell too many at once. It's a really difficult balance that you have to play when you're trying to affect stock market price based off of supply and demand, and you don't want to be dumping like tons of shares all at once. Is there a new tweet, Blarke, or is it the one I just read off a little bit ago? Yeah, he's got a new tweet here. He says, "My screening Orlando sold out so quickly. I'm going to personally host another screening of Avatar: The Way of the Water the very next night, Monday, December the 19th at 6:00 p.m. in nearby Tampa at AMC Veterans 24. Interest in this movie is sky high. 4 tickets," and then he provides a link there. Nine more minutes, guys, and we'll take a look at the numbers again. Actually, Kate, I'm actually surprised that they actually hit the trampoline. Normally, whenever I draw these trampolines, they always avoid them like the black plague. It's very not not very often that we see these things get hit. All right, there we go. They started moving it back down again here. It looks like they're gonna make the final attempt to break that 945 price level. Let me just change this just a tad. I think it's just a tad bit too low. Oops. There we go. They got it down to 0.947. So close. So very close. Turtle, no impact. Yeah, I'm signed up for the 16th. I'm actually going to be shutting down the stream early on the 16th because we're going to, the family, we all got a bunch of tickets to go see it. So we'll be heading out on the 16th a little bit early to go check that out. The movie time's at 3:10, so I'm going to have to end about an hour early so we can get there on time. Steven says, psychological warfare. We knew this was coming. I'm going to stay patient through the adversity and continue to stick to my guns, buy, hold, and wait for 2 weeks to come. Gorilla says, you guys think Adam Aaron puts hints in his tweets? I don't know, man. I'm real on the fence on it. Like, I feel like sometimes he does, and then other times I feel like he's just saying things. Like, there's the Bruce one. I don't know if you remember the Bruce one with the shark. I'm almost positive that he was putting out a sign there. I'm not sure if you guys know this or not, but the head of the board for Credit Suisse, his name is Bruce. And I think he was kind of, I really do feel that he was kind of signaling a little bit there because the whole Credit Suisse thing was going down right at that time. And it was right around that time that Credit Suisse put out that $1 rating, I think it was on AMC. So I feel like in some ways he does put some messages in there, it's really difficult to tell when they're messages and when they're not. Um, I don't know why it's not obvious Ape has been a disaster so far. So what in particular is a disaster about it? If the only answer that you have is the reason it's been a disaster is because the price movement has been down, then I would say that's actually a success. It's draining more money out of hedge funds to keep the price low. So that's actually a success. I wouldn't agree that just because they drop prices. I mean, they've been dropping price on AMC ever since the run up in June of last year. So it's not like it's anything different. But I think that it's applied more pressure on them to keep price more well maintained, which is costing them more money. Sorry, Apex, but I am going to the movies, man. I'm going to the movies on the 16th. Yeah, I agree, Tech We Love. I don't think every single one of his messages has some kind of like code in it. That's not a bad car, I guess. Aren't they kind of old though? Those Dodge Vipers? I feel like they're kind of older cars. I've heard a lot of people have problems with them like spinning out and stuff. But I mean, if you're gonna just kind of like, if it's just gonna be like an easy rider and to chill and look cool in, sounds like fun. Just be careful driving it. Don't step on that gas pedal too fast. Casey, what's a fair price for Ape? Ape and AMC are the same thing, and quite frankly, I think that a fair price for AMC shares, I think a fair valuation price for the company would be probably somewhere between $35 and $50, 30 and $50, somewhere in there. And Ape should be valued equally to AMC. The split value kitten is, I think it was 0.365, or 36.5%. Professor Shifu, it's always a possibility. Yeah, I'm getting a Hellcat. Definitely. Well, I don't know. I'm kind of torn because I found out, Blake, that I can't get my Hellcat in stick shift, so I might have to go with a shaker, which is, a step down, but it is, at least I get to drive. I don't like the looks of the shaker, to be honest. I might actually buy the exact same car I exited with, which was an RT Plus. I like the hood better. It looks better to me. Well, out of curiosity, Ryan, why do you see as a percentage of AMC? Those shares they should have equal value to AMC shares. And the reason I say that is because those shares can be voted to be merged back into AMC shares. It's just an extension of AMC shares. There should be no difference in price. They should be pretty darn close to the same. Tendies plus plus says if you can dodge a wrench, you can dodge a dodge. Oh man, that's funny. Turtle, they look great on the outside. I totally agree with what you're saying there. I actually love the look of the new Ford Broncos on the outside. Have you seen the inside? Because man, they look stupid. It's just dumb. They look stupid. It's really kind of sad how, I mean, all they had to the inside the interior isn't that bad looking. All they had to do is just kind of make it a little more relevant, I guess, to I don't know. They could have done something. If you just look on the inside of one of those new Ford Broncos and tell me if you feel the same way or not. Because when I saw the inside of it, I was just kind of like, it's kind of, I don't know. I feel lacking. It's empty. It's bare. It's not. I don't know. It's not cool looking. Tendies plus plus says I'm a Camaro guy. Ah, that's all right. Nobody's perfect, Tendies. Then AMC will run when the conversion happens. No, I don't think so. Like a box. Yes, dude, they do. I was in one the other day, plain as hell. Yeah, I mean they're really bad. I love the outside of look on those, but the inside's just it's so just empty, and I feel let down when I was looking on the inside of one of those. And I was just like, man, because I wanted one. I legit wanted one of those, Blake. And then when I saw the inside of it, I was just like, I wouldn't feel excited getting into it every day. I would get into it and be like, yay! It just there's no excitement whatsoever getting on the inside of one of those. Man, it is so close, guys. It's 0.9457. It is really super close here. It is time to take a look at the numbers, but I think I'm going to wait here. I think they're going to trip this. It was really, really darn close to my big tramp here, but looks like they're going to try and trip it. Two weeks. What do I want on the inside? I don't know, man. I don't know, Gorilla. I'm not a designer for cars. All I can tell you is I felt like it was lacking. Maybe more chrome. I don't know. I really don't know. I'm not a car expert or anything. Did they stop trade? What happened here? Hold on a second. I'm looking at the time of sales here. Man, they are trading it like right on the hairy edge. Tons and tons of shares going through right on the hairy edge of tripping SSR. There's 9.455. I've got 945, so I feel like it's got to go down just a little tiny bit more. Man, this is crazy. I'm gonna take my DeLorean off here just so you guys can see this on the. Hopefully, you guys can see it on the page. Let me see what it is you're seeing. Yeah, you can kind of sort of see it. Time and sales. Notice the order book. Notice the order book how there's a 300 bid on 9455 and then the 5 shares sitting at 9452. Once they break past that 9455, it'll be real simple to get that price down to 9452. They'll just have to allow the sell side to get to that price level, which will happen. Somebody keeps throwing up sell orders at 9456, which prevents it from dropping down and triggering the SSR there. I feel like I don't want to transfer over to the other screen to take a look at the numbers. I want to see it trigger. I want to see what happens. I want to see what happens when it does trigger. Somebody keeps like super loading up 9456 on sell orders. So we're probably seeing, I would imagine there's a little additional amounts of volume that are probably going through here at 9455 or 56 rather. It'll be interesting to see how much volume went through at 9456 today. And they just keep on stacking the orders in to keep that price from hitting that. All right, I think I'm going to cut to the numbers. I'm not going to wait for it. Hold on a second. All right, I'm gonna go ahead and switch over to the other page here, guys. Looks like they keep backfilling the orders on the ask side in order to keep the price from dropping down to that 94.50 range to trip that SSR there. They're gonna hold that price right there and barcode it. It looks like. So I'm gonna go ahead and check out the numbers and we'll come back and take a look at this here in just a minute. Man, there's 10,000 shares there now. Almost 11,000 shares. They got at 94.56. They're backfilling that big time. They do not want it to go down to that and trip that. Apparently, somebody doesn't. It's hard for me to know who's particularly doing that, but my guess is that if I had to guess, there's probably a lot of long institutions who are doing this. They're probably trying to fill orders at a lower price than what they had people purchase for. Hold on a second. I think I got to sneeze here. Hold on a second. Sneeze? No sneeze? Maybe? So, do you remember how I've told you guys before we took a poll to see are people more willing to buy or sell when the price is stagnant versus going up or going down? This is going to help drive down that volume by basically like parking the price like right here. And what you're going to end up seeing happening is like a lot of the orders that were placed as price was falling down are going to start getting filled right here at this point just before SSR gets tripped. And so somebody's going to be making money on the fact that they sold those orders at a higher price and they're actually filling those orders at these lower price levels. I don't know. I can't say for certain that this is going to be benefiting long institutions or short hedge funds by doing this. It's difficult for me to say. I would say that it probably would favor long institutions more than anybody, as I'm sure hedge funds would love to drop the price down to trip that SSR so they can start creating short exempt volume. Or it may actually be benefiting both parties by doing this. But we will come back and take a look at these numbers here. I'm going to take you guys over to the other page. I can't see what it is you guys are writing until you see the DeLorean tramp back up on the page again. Two-factor authentication. If you don't have it set up for your account, you may want to consider getting it, as it could keep somebody out of your account that shouldn't be there. And while you're setting that up, make sure you have a secondary phone number that can receive the code in case something happens to your primary. Not a bad idea to have backup for your backup. All right, let's see what we got going on here for our numbers. Starting with off exchange for the day-to-day, which is sitting here right next to me, we've seen a significant drop in the off exchange amount here. The reason for that, part of the reason for that would be is the fact that we're seeing more elevated amounts of volume going through exchanges that we don't normally see it going through. For example, like CHX is a good one to bring up. What does that look like? Well, off exchange is currently showing 49.49% of our volume going through AMC with CBOE EDGX at 12.24, putting us at about 61.73% of our volume going through those exchanges. That's, I would say that's pretty normal. That's maybe about 1% higher than what I would expect for this time of the day. Or really close, maybe even just 0.75%. But the CHX volume, and I know you guys can see it right now because it's pretty high up on the list here. Our CHX volume is 4.11% of our total volume when our normal 30-day average 2 days ago was at 0.25% or 0.25% a day. So we are well exceeding the amount of CHX volume than we would normally see by quite a bit. We had 2 days ago 400,000 shares go through there. Yesterday was about 100,000. I think it was a little over 100,000 shares yesterday, and now we're seeing 358,000 shares there going through today. This I think is going to produce some upwards price movement on AMC here in the near future. Taking a look at Ape, we've got 66.35% of our volume going through off exchanges, and EDGX at 9.69 for a grand total of 76.04%. That's probably about 15% higher than what I would expect to see at this time of the day. So a lot of price discovery being hidden through those exchanges. CHX volume is at 0.52% of the daily volume when we normally see about 0.1%. So it is definitely, it's 5 times more elevated than what we are used to seeing, and is about 128,000 shares, almost 129,000 shares so far through CHX. That is very abnormal. We don't typically see that much volume going through that exchange. GME, CHX volume, nothing to report significant, and HYMC also, CHX volume is actually pretty high on HYMC as well. Normally they see about 0.08% of their 30-day for a 30-day average, and today it's at 0.43%, making it about 5 times the amount of volume going through CHX than it normally sees. Taking a look at Ortex. An hour ago, AMC had a borrow of 144,000 shares. Wait, that's so wrong. 1.44 million shares. It's now down to 0.635 or 635,000 shares having been borrowed for the day today. That's going to have a slight effect of lowering the estimated short share interest, the free float, to 21.39% since there was a drop in that borrowed change amount. Cost per hour average at 51.38, max at 71.19, a minute 43.38. 900,000 shares more on loan today than there was yesterday, and it's at 180.27 million shares on loan. 309,000 of that Ortex is estimated to be in new short interest. Taking a look at Ape, as of an hour ago, there was 1.47 million shares having been borrowed for the day today. It's now 0.486. So 486,000 shares. That's less than it was an hour ago. That's going to have the effect of lowering the short share interest of the free float to 9.91%. Cost per average, it was over 10 earlier. Cost per average is at 10.15, max at 10.49, a minute 7.94. Shares on loan for the day today is at 51.53 million shares. Day over day, that's 300,000 less shares in short interest that was closed out. Taking a look at options. An hour ago, highest amount of volume at a $7.50 strike is still the same. There were 6.2 thousand contracts an hour ago. There's now 10.6. On puts, at a $7 strike, an hour ago there was 2.8 thousand contracts. There's now 3.4. Orders by, or not orders, what am I saying? This is what we look like on our charts right here. It does look like, let me check this out real quick here. So 932, 950 is 20 minutes. This is not a pennant and flag. Let's see where we heading to here. So I had a much larger time frame. What appeared to be a bearish triangle that looked like a dropout would have been somewhere around $8.25 combined price between AMC and Ape, maybe even $8.16. It does look like we got the dropout going down instead of up. I would have expected it to see it go at the other direction on this one. We are seeing a test of newer Fibonacci retracements that are down here at 803. Looks like we're getting close to that. I'm going to draw out a line here, a level of support that appears to be forming right now. So it almost looks like we have based off of what I'm seeing here, it almost looks like a descending broadening wedge. If this is the case, I would expect to see, normally, it would have dropped out much earlier than this and seen a return. Normally it would have dropped down somewhere over in here. This is kind of an unusually long amount. I do have 2 touch points on the top. I have 3 touch points on the bottom. This should be a bullish breakout. And again, I'm gonna keep this box drawn where I've got it. I do think that there's still going to be a bullish break after this box or around that time frame. Taking a look at Fidelity, we have Ape is doing really, really well on orders, and we've been in the top 10 for the day today on orders. 3, 6, 9. We're still in 10th right now. Ape has a 91% buy to 9% sell ratio. AMC and GME, or AMC hasn't been on the list at all today, but GME has made it onto the list with a 64% buy and a 36% sell ratio. Looking pretty strong. Don't know what buy sell ratio is for AMC for the day. Trigger price for SSR for AMC is at $6.69. There are no shares available left to borrow, and Ape triggers at 0.945, and as last I saw has not triggered yet. Fees are last seen at 39.5%. They have borrowed all the shares that are left available to borrow, which totals about 550,000 shares borrowed for the day today. Strong push right now. NASDAQ is up 0.04, Dow Jones is down 0.62, S&P 500 is down 0.32. We have 3,855 decliners to 2,844 advancers. The US dollar is, let's see, the US dollar is currently up 0.31. WTI is down 1.08. Mortgage-backed securities are kind of split right now. We've got some up 0.02, some down 0.019. SPY is down 0.29. We've got VIX up 2.01. VTI is down 0.33. IWD is down 0.62. Tesla is up 0.22. Amazon is down 0.67. Cinemark down 2.16. Doge is up 2.3. Bitcoin is up 2.35. GME is down 1.91. HYMC is down 2.37. HOOD is down 1.36. CS is down 5.17. NCMI is up 2.59. Ape did break 10% finally at 10.47% down, and AMC is down 4.72. Inflow versus outflow. We did trigger TD9 here on AMC, so we may see a return back to simple moving average here. On AMC, we did see about $1.1 million so far through inflow versus outflow. 10.24 million shares traded so far today. Oops, hold on a second. After 170 minutes of trading, we're currently on pace for 23.5 million shares traded on AMC for the day today. Projected amount should have been somewhere between 10 and 30 million, so I think we're on pace for that. On the hourly, that's based off of pre-market numbers, by the way. On the hourly, we have more selling pressure than buying pressure with an RSI of 28.23, which is signaling oversold. On a 30-minute interval, more selling pressure than buying pressure with an RSI of 26.92, which is signaling oversold. And on a 5-minute interval, more selling pressure than buying pressure with an RSI of 28.06, which is signaling oversold. On Ape, we have, wow, $3 million more inflow than outflow. 27.73 million shares traded so far after 171 minutes of trading, putting us on a pace for 63.2 million shares traded by the end of the day today. In pre-market, I suggested somewhere between, what did I say, 15 to 35 million. I don't think I'm going to be right on my volume prediction. I think we're going to obviously be a little bit higher than the 35 million. I did say that I felt like there was going to be additional volume today. I just didn't realize it was going to be this much. It does seem to have kind of come out of nowhere. On the 1 hour time interval, we have More selling pressure than buying pressure with an RSI of 21.13, which is pretty heavily oversold. On a 30-minute interval, we have more selling pressure than buying pressure with an RSI of 22.38, also signaling oversold. And on a 5-minute interval, more selling pressure than buying pressure with an RSI of 33.28, also heavily, actually below average. Take a deep breath, guys. Take a deep breath. I know it's tough. I know it's tough. It is just the price, though. I know it's very, very difficult to watch these kind of things. It's counterintuitive to anything that you possibly know in trading. You got to do what you think's right for you. I can't convince you to do what it is you want to do. It's entirely up to you. But you're definitely it's gonna take your breath away watching some of this stuff. And if you think this is tough now, you just wait. It's gonna get tougher. Not many people understand how difficult it's going to see price drop 70% on a run up. Watching it drop more than 70% on a run down before we ever even reach it to the top. So, I mean, this is the kind of training that causes you to kind of hopefully understand that these swings in prices are only temporary to try to influence you to make decisions, force you into making decisions. Volatility is increasing quite a bit here. We did hit that 9.4, and look at that barcoding right afterwards. 0.94 definitely did trigger SSR for the day-to-day on Ape. They'll probably park price right here. Massive amounts of volatility compared to what we're used to seeing. I'm not sure if you guys are like blowing it up in here or not, but I just like switched back over to like the main page where you guys are commenting and everything, and it's like just blowing up in here. It seems like I'm not sure if it was because I switched pages or whatnot, but it seems like a whole bunch of comments went through. It should be 1:30, no? High Energy Review says Jerome Powell speaking at 1 p.m., so hold on tight. Hold on a second. Let me pull it up here because I'm pretty sure I've already got it set up to link to it. And I see 1:30 is when the speech is supposed to happen. So, which would be an hour from now. And I will live stream it here. Yukon says, hold hands, ladies and gents. Down we go says, I wish we had some Xanax. I don't think that they're laughing at us, Anthony. In fact, I think they're really, really pissed off at us. Griffin's mom says, you're such a great pep talker, Casey, and I really appreciate it, reminding us things will take our breath away, and we really just need to hold on through that. I mean, I'm not telling you you got to make the own choices for yourself, right? But you know, I don't feel like I'm a good pep talker. You know, we need to get Lowboy on here. We need to get Lowboy on here so he can remind everybody because he does such a great job of reminding everybody about you know what's truly happening here and how these movie theaters are doing great. I did some calculations last night, guys. Apparently, one of the space calls I was in last night, they were talking about. I think it was about 40,000 people were looking at their order numbers, and there was about I think they were at 40,000 orders on that merch that was showing up on AMC. And so I just kind of was like running some quick numbers just because I was kind of curious. I was like, okay, well, if they had 40,000 orders and the bare minimum is probably about $20 an order, I was just kind of doing the math on that. I was like, that's close to $1 million. And I'm sure that the minimum order was probably more than $20. So in the last 48 hours, I would assume that AMC has probably made close to at least $1 million on merch, which hopefully will kind of push them towards getting my socks back up on the page again. Because please let me know if anybody sees the socks show back up on the page again. I want them. Jim says I bought some AMC coffee cups. Man, I want those socks. I want the beanie. I want the beanie too. I hope my wife's not listening right now, but I want the beanie and the socks. Those are. I want a pair. I want a pair of each of those for her. I don't know if she'll wear them or not, but I think the beanie is something she would definitely wear. The socks are more or less just kind of like one of those stocking stuffer kind of things that would be funny. But Lucas says I bought the socks. Lucas, I was trying to get so long people to admit that somebody had purchased the socks yesterday, and nobody would admit to it. You're the first person I've seen who truly admitted that you bought the socks. And man, I'll tell you what, man, I'm so jelly. I was gonna go buy a pair yesterday on my break, and I'm a little bit unhappy that I was unable to get a pair of those because they sold out so quick. Skinnies, 10 shares. That's it. Some people say they got 11 or 12. I guess you might be able to increase it by one or two. MCon says I bought the mugs and broke the handles off. Man, those mugs don't look like they'd be easy to break the handles off of. I feel like you'd have to like saw them off. Thanks, Casey, for keeping us calm. I don't. Am I keeping you calm? I don't know. I I hope just being a part of a community helps. That's my biggest hope. Coke, Pepsi, and other in the poll right now. We've got Coke winning the tie. The difference between Coke and Pepsi. Coke is winning right now more than double what Pepsi has. 61% of you people out there, you apes, you dirty, filthy apes, are drinking something other than Coke or Pepsi. And mad props to you if it's something that's healthy. If it's not, screw you. You didn't partake. If you're not drinking water or healthy tea that has no sugar in it, then you didn't do that poll correctly. Blake says, Casey, I got some tinfoil stuff about Elon. Spit it out, man. Jim, I'm telling you, man, the amount of shares that are out there makes no difference. There are stocks that are out there. Go look up CAR. CAR is a great example. Institutions own more than 100% of the shares that are out there, but CAR still trades every single day volume. That is not how a marketplace works. A marketplace is not trade based off of how many shares are supposed to be out there. It trades based off of how much liquidity that's been created. Because it's forced to trade no matter what. It has to complete orders, otherwise it fails. It breaks down and it dies. And nobody wants a broken market, so they give them the ability to be able to create liquidity. So, two things that you have to get out of your head, and so many people have been thinking about this wrong. Price is not, it's not reflective. It's not a true reflection on what the value of the company is. Number one, and number two, the amount of shares that can be traded or in existence can always be over 100%. It can always be over 100% and means nothing. Absolutely zilch. Attendees plus plus, Casey, you're always talking to people I've blocked. Sorry, man. How do you know they didn't block you? I don't block people. If I block them, they don't get to come back. What did Hayden say? My other hookers and blow? Wait, what? I missed it. I don't think I did the poll correctly. I didn't know we were talking about drinks. That's funny. Yes. Welcome to the stock market, Jim. Welcome. Why do you think we're here? We're trying to fight what's wrong. I'm glad. I'm glad you're finally realizing what it is that we've been figuring out for over the last 2 years now. But welcome to the club. Welcome to a completely fraudulent market. Congratulations. I think you may have just won some kind of award there. I don't know what it is, but at least your eyes are open to the truth, and that's a good thing. The truth is always what wins. Brian says, "Would you wear AMC underwear?" Only if they're boxer briefs. I'm smoking weed and doing push-ups, not financial advice. That sounds like the most crazy mix of difference differing things. Like I can't imagine doing exercising and smoking weed. That just seems not right. Uh, the munchies that you get after that have to be insane. I can only imagine. James of Arizona says, "Y'all complaining now? Wait till the market fails as a whole, and we see $5.50 easy." I'm telling you guys, it's gonna get rough, man. You guys are gonna have to suck it up. Yeah, that is definitely something is wrong with you now for sure. I know for a fact there's something wrong with you now, high energy. You're listening to me, you're doing push-ups or yeah, push-ups, and then you're smoking weed. Like there's something wrong with you. Welcome to the channel. You found a home. I knew a lot of guys that smoked before we played basketball swore by it. That's crazy. I just can't imagine doing that. That just seems very, very crazy to me. All I want to do is watch movies. Whenever I used to do that, it was movie time. Ape says if the market fails, that's a lack of total liquidity, which would actually help AMC. I agree. All right, I got to go to break, guys. Danny says, Casey, mama ain't raised no bitch. That's right. Grandpa Barney says, Casey. What's up, Grandpa Barney? I'll wait till you say something. It looks like you're trying to get my attention, so I'll wait for you. Hey, me too, High Energy. You found the right spot. This channel actually used to be called AMC and ADD, but then I felt like Ayo kind of challenged me and says like you use your ADD as a crutch, and I was like, yeah, I think I do, and so I stopped calling it that. So now it's AMC and APE. Casey, the lower they drop it, the more I can buy for the same amount of money. Bring it on, biatches. I mean, look, this is the most amazing part to all of this. Uh, Raise your hand if you thought there was a chance that you were going for a smidgen of the money. For those of you who got in at really high prices, how many of you who got in at those really high prices thought that you would ever be able to have the opportunity for a smidgen of the price to be able to uh, double down. You know what I'm saying? Like there's legitimately like there's the opportunity to be able to increase your portfolio at these kind of prices is insane. I quite honestly wish I had still been working because I would be buying with you guys. I didn't think that we'd be seeing these kind of low prices again, and it makes me kind of sad that yeah, I think this Peloton's gonna have to go. I'm gonna have a talk with my wife tonight and be like, I think the Peloton's got to. I don't know, maybe she's listening right now. She might already be hearing it. Peloton might have to take a sell order on that. Down we go says sell a Peloton. Yeah, I'm telling you, man, I'm gonna talk to her tonight about it. Alrighty, guys. Cause man, I'll tell you what, these are insane prices, and it seems worth it to me. Alrighty, guys, I'm gonna go to break. Let me put up my note. That's not it. We should take bets. We should take bets on what are the chances that we see Ape trade sideways for the rest of the day today. Literally at 0.94. That's the exact penny that it had to get to in order to trip SSR. That's insane. All right, so yeah, that's gonna be an interest. I'm actually gonna post that up. I think as a poll when I get back from break, and we'll poll on that. So I'll put it over here. We'll be back at, I'm going to make it 12:20. I'm leaving a little bit late here. So I normally come back at 12:10, but I'll see you guys back at 12:20 because I need 40 minutes. It's good for me. I'll see you guys in a little bit. Here comes the music. It's kind of loud. Let me make sure I'm not going to blast you guys out here. Okay, that's good. See you guys back here in 40 minutes. And music coming in 3, 2, 1. I lied. I'm back. I was gonna go till 12:20, but my wife just sent me a message. She's coming back home from her appointment. She's bringing me some food, so I want to take my break at 11:10, and I want to watch that video with you guys right now. Let's see here. Yeah, I noticed that too when I was on break, guys. I tried to watch a video and I had YouTube shut down on me as well. I'm on an iPhone trying to watch. So there's been reports of this. It looks like maybe 3 people now at least that have having problems with YouTube shutting down on their phones. I didn't try to watch anything else after. Wow, what the heck is going on with Ape here? Wow, 490,000 shares traded. What the heck? Wow, that is something else right there. I don't think. What's going on with time and sales? All right, so I've got a little bit of a theory of what's going on right now. I'm gonna have to throw on my tinfoil hat. And they're trading in fractional share. They're trading in fractional amounts right now, guys. I'm looking at the time and sales on this. Let me take my DeLorean off here for a second. They're dealing with in fractional amounts, 94.02, 94.01, and I mean this is fractional share trading. So much so to where it's gonna trade out like this. It's insane. 31.47 million shares traded so far. I have a theory. I have a theory on what's going on, especially with seeing CHX volume rising on both AMC and Ape. And I'm going to share my theory with you guys. But you're going to have to put on a big tinfoil hat as I talk about this because I think it's going to, for some of you, I think it's going to scare a little bit. I don't want it to scare you because it's actually not a bad thing. It's actually a really good thing. So try to hear me out first before you start getting all crazy on me and start throwing bananas and poop. So hold on to your bananas and poop here until you hear me out here. If there was a institution who had a position that they could close out or positions that they could close out in mass at these prices and perhaps exit out as many as their positions as possible while keeping price at these let's have it, Mr. Poopy Pants. At these prices, this would be the time to do it. With these prices as low as they're at right now, this would be the time to close out those positions. Now, here's the problem with this is that we're not seeing it in the numbers, and I'm going to go over numbers here in just a second. I'm not seeing crazy amounts of closing positions happening at this time yet. So unless we're seeing massive amounts of shares being returned, it may be an unwinding of swaps that are occurring at this point in time that they're trying to maybe perhaps unravel at these prices. And so the flip side to that is, and this is the part where it's supposed to be a good thing, not a bad thing, is that Tater Tot says crooks. The flip side to this though that I want you guys to realize is that the price improvement should come as soon as that's completed. Once they've closed out as many positions as possible at these price points, that would lead to the price rising after that, and there will be institutions that get trapped at these numbers. I promise you, there's tons and tons of short interest still out there, guys. We're not seeing any kind of like massive closing of positions in short interest. So just remember that I'm talking about swaps here that are probably being closed out at these kind of positions. So don't I think, I mean, it seems to me that that would make the most sense. They've dropped price down quite a bit here, and this is, you know, they're trapped. Don't get me wrong, Tater Tot. I'm not saying that they're not trapped. That's not at all what I'm saying, and I knew that's how people were going to take it. That's not what's exactly going on here. I think you're seeing something a little bit different than what it is. They're trying to close out as many positions as possible here. This is the Hail Mary. If they don't close out all their positions right now, they're going to get screwed, and they know it. And I think that's what you're kind of seeing have happen right now. I think what you're witnessing is you're witnessing somebody rushing for the door. And the problem is that when one institution starts running for the door, they all run. And when they all start running for the door, that's when you start seeing price improvement in mass. So I think that's kind of what I'm seeing right now. Yep, Ken says the door will be jammed. Absolutely. So, but I mean, again, remember tinfoil hat here, guys. But I think that what you're seeing here, this would make sense to me. If they've got the price down to a point to where they feel like they can close out as many as their swap positions that they have as possible, and they can afford at these kind of prices, and this is their one and only opportunity to be able to get out of this as quickly as they possibly can, while sustaining low prices, then this is what it would potentially look like. They would be closing out as many positions as possible and just absolutely just dumping, and just they're, you know, leave, get out soon, quick, fast, and avoid the chaos. Remember, guys, those are in fractional amounts. Look at the total price right now. It's at 0.93. 0.945 is what we need to break through. So I know it looks like leaps and bounds right now, but what I really need to do is the chart. The chart's a little deceiving here right now. This is really what it would look like. We started out back here. It's really not as bad as you would think. It's just that because I have the chart zoomed in as much as I do, it looks like a bunch more than it really is. Because right now they're dealing in fractional amounts. So my guess is, and this is why I'm saying partially what it is that I'm saying, is that if they're dealing in swaps and they're trying to remove the amount of swaps that they have, especially in like Ape or something like that, you're seeing fractional amount of movements happening here at very, very, very small amounts of value. And so this is how they close out as many positions as possible without affecting price too much, and exit out as many of their positions as they possibly can before it goes absolutely nuts. I think that's what this would look like. So let's take a look at the numbers. I'm going to take the tinfoil hat off now. We'll take a look at the numbers and see what's going on, see if we actually do have closed positions, because I doubt we do. Richard says, AKA the kitchen sink. Richard, I really think that the kitchen sink would come later at higher prices. That's when they're going to make their money for the rest of the positions, right? They're not going to be able to close every position that's out there. But if they can close as many as they possibly can before they let the price rip, and then they start borrowing some more shares again as the price starts to rip at low values, they can sell those at a higher price and then close out some of the other positions with the difference. So that's what it is kind of looking like to me right now. Again, tinfoil hat. I'm not promising you that's what this is, but that's what it kind of looks like. Professor Shifu, I can't. The only thing I can say in regards to what is a better buy right now, Ape or AMC, it's there is no. I can't answer that, man. I'm not a financial advisor. It's your money. It's your choice. All I can say is that both AMC and Ape both need buying pressure in order for them to maintain price. So it's entirely up to you, though. I know you want me to tell you what to do, but I can't do that, unfortunately. So let's take a look at the numbers, guys. Ortex data is live. I have to update it though, so let's go take a look at the numbers. I won't be able to see what it is you guys are seeing right now or saying. So hold those thoughts until you see the Back to the Future DeLorean tramp up on the page there. Two-factor authentication, if you don't have it for your account, you may want to set it up as, oh shoot, hold on a second. My wife's texting me. Let's see here. Oh yeah, two-factor authentication. It could help somebody staying out of your account that shouldn't be in your account. When you do sign up for it, make sure you set up a secondary phone number in case something happens to your primary. You'll have a backup set up and available for you. Let me move a couple of these screens around and we'll take a look at these numbers here. See what you guys are going to see. You're looking at the Ape chart, or at least you were looking at the Ape chart. And I'm just going to show you this real quick here. When you're looking at the Ape chart, it looks like really depressing and everything, but really the price is $7.97. We're about a little less than 50 cents. Actually, it is right around 50 cents. I think lower than where we were. Not quite, almost 50 cents lower than where we were in total. So it's really not as bad as it looks on the charts when you compare the total value of AMC and Ape currently. But let's take a look at and see what we got going on here with these numbers. Off exchange for, and so here's where I'm going to show you guys why I'm stating what it is I'm staying on. Let me build the case for you. The case is that if there's some swaps that are occurring in closed settlement positions, where would you see that? There should be a couple different places that you should see closed positions settling. One of them is going to be in CHX. It's going to be through that exchange. And so let's take a look at it here. Let's take a look at AMC. We've seen 2 days now in a row where we've seen settlements happening through CHX. And now today is the third day. We have 3 days in a row now where we've seen settlements that have been going through that exchange. In my opinion, they're settlements. Off exchange volume for the day to day on AMC is 49.95%. EDGX at 12.29. Grand total 62.24. That's exactly where I would expect it to be by this time of the day on a normal trading day in those exchanges for that amount of volume going through there. CHX volume 2.78% of the daily volume when normally we see 0.25%. So it's very, very high. 4, 8, 9, 10, 11, like almost 11 times the value, the amount of volume going through there. So I feel like I'm seeing heavy settlements that are occurring in that exchange. So something's happening. Taking a look at Ape, 65.97% going through off exchange on Ape. EDGX is at 8.84. Grand total is 74.81%. That's about 12%, almost 13% higher than where it should be. Again, CHX volume pretty high on this one. Normally, it's about 10% of the daily volume goes through CHX on Ape, and it's at 0.45, so nearly 5 times the amount of volume going through that exchange. So some settlements are occurring, from what I can tell. On GME, we've got CHX volume negligible. HYMC CHX volume is elevated on that one. It's about 5 times the amount of volume today than it normally is. Vortex. This is the report. This is the reported stuff that everybody sees, right? No, I'm probably the only person who's talked about CHX volume and being forced settlements going through there. The stuff that everybody else looks at is going to be what's here showing on Ortex, and as of right now, it's showing on AMC only 411,000 shares having been borrowed for the day-to-day. It doesn't show, it's not showing major returns. But I'm telling you that we're seeing large amounts of volume that's going through CHX that doesn't normally go through there. That seems pretty significant to me. Short share is just the free float at 21.38%. Cost per average at 51.17, max at 71.19, and minute 43.38. Shares on loan for the day today is at 180.27 million shares. That is 900. Did I write that right? It looks like 945,000 shares day over day more. Why did I write 945? I don't think I guess maybe I did write that down right. 945,000 shares more on loan today than yesterday. What is that? Oh, I see what it is. It's 900,000 shares more than it was on loan yesterday, and 309,000 shares of that was estimated by Ortex as being new short interest. Taking a look at Ape. An hour ago, there was approximately 486,000 shares having been borrowed for the day today. It's now 528,000 shares. That's gonna that's not really gonna do much. The short share interest, the free float, which is at 9.93, cost per average at 10.1, max at 10.49, minute 7.94. Shares on loans at 51.53 million shares. That is 300,000 shares less on loan today in short interest than there was yesterday. And let's take a look at the options. An hour ago at a $7.50 strike for calls, there was 10.6 thousand contracts. There's now 14.9. On puts at a $7 strike an hour ago, there was 3.4 thousand contracts. There's now 5.1. Market is indicating a closing price somewhere between $7 and $7.50 for closing on AMC for the day today. Current price between the two is set, added together is at $7.97. We have found a little bit of support here at $7.95 on this Fibonacci retracement. And let's see here. Orders by Fidelity customers. Ape has approximately 91% buy to 9% sell ratio, looking very strong. GME was on the list earlier, it still is. It's got a 70% buy to 30% sell ratio, and AMC is also on the list. AMC has a 67% buy to 33% sell ratio. So all of them are looking very, very strong on the buy orders. We're not having a problem with retail selling here. That's not what I'm seeing. SSR triggers at $6.69 for AMC. Ape triggered today at $9 or $99, 94 cents, 94.5 cents is where it triggered. No new shares available to borrow for the day-to-day on AMC. They've all been borrowed at a 39.5% fee. ETFs have been a few ETFs, about 10,000 were returned earlier this morning. NASDAQ is up 0.29, Dow Jones is down 0.46, S&P 500 is down 0.18. We currently have 3,781 decliners to 2,946 advancers. The market is declining over advancing. I have the U.S. dollar rising in price. It's up 0.03%. Oil is down 2.41. Mortgage-backed securities are down anywhere from 0.17 to 0.18. SPY is starting to head up, starting to break upwards here. VIX up 2.01. VTI is up 0.32. We're starting to see a big run here in the market. IWD is down 0.11. Tesla is up 1.47. Amazon's starting to run 2.16. We're seeing some big movement here. Cinemark is down 2.12. Doge is down 0.75. Bitcoin is up 2.36. GME is down 1.26, HYMC down 5.17, Hood is down 0.22, CS is down 4.56, NCMI is up 0.89, Ape is down 11.42, and AMC is down 4.58. There seems to be some activity where like the whole market just at least a couple different tickers started moving all at once and started moving pretty quickly with the SPY there. Taking a look at AMC here, we have currently about $500,000 more inflow than outflow for the day-to-day. Volume at 13.97 million shares having been traded for the day so far. Let me see here what that turns out to be a pace for. What is that, 45 minutes? Yeah. After 240 minutes of trading, I love these pins. These dry erase pins, they're awesome. They smell so pretty. I don't know why I use pretty. Whatever, who cares? Divided by 240, let's see. We're on pace for I can't even do the math right now. I think I just blew my brains out with the smell of the dry erase marker. 23.1 million shares is what we're trading for on a pace on AMC for the day-to-day. On a 1 hour time interval, there's more buying pressure than selling pressure with an RSI of 39.83, which is below average. On a 30-minute interval, there is more buying pressure than selling pressure with an RSI of 39.99, which is below average. And on a 5-minute interval, there's a divergence of buying and selling pressure occurring right now with RSI at 58.62, which is above average. Taking a look at Ape, there's approximately, wow, there is so much more inflow here on Ape than there is outflow. That's pretty impressive. We've got about $4.6 million more inflow than outflow for the day-to-day on Ape. 33.83 million shares traded so far for the day-to-day after 242 minutes of trading, putting us on a pace for 54.51 million shares traded by the end of the day today. We will be exceeding my 15 to 35 million elevated volume that I kind of was predicting in the pre-market, that we would see more volume today than usual. I was not suspecting that we would see this much more volume, though. This is a little bit more than I would have anticipated. On the 1 hour time interval, we have, man, that looks really close to the same. I'm going to say just slightly more selling pressure than buying pressure with an RSI of 20.18, which is signaling oversold. On a 30-minute interval, more selling pressure than buying pressure with an RSI of 21.03, which is signaling oversold. And on a 5-minute interval, more buying pressure than selling pressure with an RSI of 25.99, signaling oversold. I think my wife just picked up food and walked in the door. So what I'm going to do is I think I'm going to replay the video that I was sharing earlier this morning. This is, in my opinion, this is almost mandatory watching by all of us. I think every single one of us need to see this video. This is a really highly important video, and kind of I think it's just important to know about what our future may or may not hold for us. And I do. Oh shoot, yeah, that's right. Powell's speech. I'll put that on while I'm eating. Thank you very much for reminding me of that. I'm going to it right now. We'll watch Powell live. Thank you guys. Appreciate that.
Projections. I will return to policy at the end of my comments, but for now I'll simply say that we have more ground to cover. We're tightening the stance of policy in order to slow growth in.
I'm going back to the beginning. Sorry. I want to hear it from the beginning.
Audience here, packed house, great to see. Marks, Mr. Powell.
And shrinking what paychecks will buy. Or
right.
Price stability to the U.S. economy.
Here we go. Turning up the sound.
Thank you, Glenn. It's great to be here today. It's great to be back at Brookings. So today I'm going to offer a progress report on the FOMC's efforts to restore price stability to the U.S. economy for the benefit of the American people. And that report must begin by acknowledging the reality that inflation remains far too high. My colleagues and I are acutely aware that high inflation is imposing significant hardship
straining budgets, and shrinking what paychecks will buy. This is especially painful for those least able to meet the higher costs of essentials like food, housing, and transportation. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. We currently estimate that 12-month PCE inflation through October ran at 6.0%. While the October inflation data received so far showed a welcome surprise to the downside, these are a single month's data, which followed upside surprises over the previous 2 months. As Figure 1 makes clear, down months in the data have often been followed by renewed increases. It will take substantially more evidence to give comfort that inflation is actually declining, and by any standard, inflation remains far too high. For purposes of this discussion, I'll focus my comments on core PCE inflation, which omits the food and energy inflation components, which have been lower recently but can be quite volatile. Our inflation goal is for total inflation, of course, as food and energy prices matter a great deal for household budgets. But core inflation often gives a more accurate indicator of where overall inflation is heading. 12-month core PCE inflation stands at 5.0% in our October estimate, approximately where it stood last December when policy tightening was in its early stages. Over 2022, core inflation rose a few tenths above 5%, and it fell a few tenths below, but mainly it moved sideways. So when will inflation come down? I could answer this question by pointing to the inflation forecasts of private forecasters or of FOMC participants, which broadly show a significant decline over the next year. But forecasts have been predicting just such a decline for more than a year, while inflation has moved stubbornly sideways. The truth is that the path ahead for inflation remains highly uncertain. For now, let's put aside the forecasts and look instead to the macroeconomic conditions we think we need to see to bring inflation down to 2% over time. For starters, we need to raise interest rates to a level that is sufficiently restrictive to return inflation to 2%. There's considerable uncertainty about what rate will be sufficient, although there's no doubt that we've made substantial progress, raising our target range for the federal funds rate by 375 basis points since March. As our last post-meeting statement indicates, we anticipate that ongoing increases will be appropriate. It seems to me likely that the ultimate level of rates will need to be somewhat higher than thought at the time of the September meeting and the summary of economic projections. I will return to policy at the end of my comments, but for now I'll simply say that we have more ground to cover. We're tightening the stance of policy in order to slow growth in aggregate demand. Slowing demand growth should allow supply to catch up with demand and restore the balance that will yield stable prices over time. Restoring that balance is likely to require a sustained period of below-trend growth. Last year, the ongoing reopening of the economy boosted real GDP growth to a very strong 5.7%. This year, GDP was roughly flat through the first 3 quarters, and indicators point to modest growth this quarter, which seems likely to bring the year in with very modest growth overall. Several factors contributed to this slowing growth, including the waning effects of reopening and of pandemic fiscal support, the global implications of Russia's war against Ukraine, and our policy actions, which tightened financial conditions and are affecting economic activity, particularly in interest-sensitive sectors such as housing. So we can say that demand growth has slowed, and we expect that this growth will need to remain at a slower pace for a sustained period. Despite the tighter policy and slower growth over the past year, we have not seen clear progress on slowing inflation. To assess what it will take to get inflation down, it's useful to break core inflation into 3 component categories: core goods inflation, housing services inflation, and inflation in core services other than housing. Core goods inflation has moved down from very high levels over the course of 2022, while housing services inflation has risen rapidly. Inflation in core services ex-housing has fluctuated, but shown no clear trend. And I'll discuss each of these items in turn. Early in the pandemic, goods prices began rising rapidly as abnormally strong demand was met by pandemic-hampered supply. Reports from businesses and many indicators suggest that supply chain issues are now easing. Both fuel and non-fuel import prices have fallen in recent months, and indicators of prices paid by manufacturers have moved down. While 12-month core goods inflation remains elevated at 4.6%, it has fallen nearly 3 percentage points from earlier this year. It is far too early to declare goods inflation vanquished, but if current trends continue, goods prices should begin to exert downward pressure on overall inflation in coming months. Housing services inflation measures the rise in the price of all rents and the rise in the rental equivalent cost of owner-occupied housing. Unlike goods inflation, housing services inflation has continued to rise and now stands at 7.1% over the past 12 months. Housing inflation tends to lag other prices around inflation turning points, however, because of the slow rate at which the stock of rental leases turns over. The market rate on new leases is a timelier indicator of where overall housing will go over the next year or so. Measures of 12-month inflation in new leases rose to nearly 20% during the pandemic, but have been falling sharply since about mid-year. As Figure 3 shows, however, overall housing services inflation has continued to rise as existing leases turn over and jump in price to catch up with the higher level of rents for new leases. And this is likely to continue well into next year. But as long as new lease inflation keeps falling, we would expect housing services inflation to begin falling sometime next year. Indeed, a decline in this kind of inflation underlies most forecasts of declining inflation. Finally, we come to core services other than housing, and this spending category covers a wide range of services, from healthcare and education to haircuts and hospitality. This is the largest of our three categories, constituting more than half the core PCE index. Thus, this may be the most important category for understanding the future evolution of core inflation. Because wages make up the largest cost in delivering these services, the labor market holds the key to understanding inflation in this category. In the labor market, demand for workers far exceeds the supply of available workers, and nominal wages have been growing at a pace well above what would be consistent with 2% inflation over time. Thus, another condition we're looking for is the restoration of balance between supply and demand in the labor market. Signs of elevated labor market tightness emerged suddenly in mid-2021. The unemployment rate at the time was much higher than the 3.5% that had prevailed without major signs of tightness before the pandemic. Employment was still millions below its level on the eve of the pandemic. Looking back, we can see that a significant and persistent labor supply shortfall opened up during the pandemic, a shortfall that appears unlikely to fully close anytime soon. Comparing the current labor force with the Congressional Budget Office's pre-pandemic forecast of labor force growth reveals a current labor force shortfall of roughly 3.5 million people. This shortfall reflects both lower than expected population growth and a lower labor force participation rate. Participation dropped sharply at the onset of the pandemic because of many factors, including sickness, caregiving, and fear of infection. Many forecasters expected that participation would move back up fairly quickly as the pandemic faded. And for workers in their prime working years, it mostly has. Overall participation, however, remains well below pre-pandemic trends. Some of the participation gap reflects workers who are still out of the labor force because they're sick with COVID-19 or continue to suffer lingering symptoms from previous COVID infections or long COVID. But recent research by Fed economists finds that the participation gap is now mostly due to excess retirements, that is, retirements in excess of what would have been expected from population aging alone. These excess retirements might now account for more than 2 million of the 3.5 million person shortfall in the labor force. What explains these excess retirements? So health issues have surely played a role, as COVID has posed a particularly large threat to the lives and health of the elderly. In addition, many older workers lost their jobs in the early stages of the pandemic when layoffs were historically high. The cost of finding new employment may have appeared particularly large for these workers. given pandemic-related disruptions to the work environment and health concerns. Also, gains in the stock market and rising house prices in the first 2 years of the pandemic contributed to an increase in wealth that likely facilitated early retirement for some people. The data so far do not suggest that excess retirements are likely to unwind because of retirees returning to the labor force. Older workers are still retiring at higher rates, and retirees do not appear to be returning to the labor force in sufficient numbers to meaningfully reduce the total number of excess retirees. So, the second factor contributing to the labor supply shortfall is slower growth in the working age population. The combination of a plunge in net immigration and a surge in deaths during the pandemic probably accounts for about 1.5 million missing workers. Policies to support labor supply are not the domain of the Fed. Our tools work principally on demand. And without advocating any particular policy, however, I will say that policy to support labor force participation could, over time, bring benefits to the workers who join the labor force and support overall economic growth. Such policies would take time to implement and have their effects. For the near term, a moderation of labor demand growth will be required to restore balance to the labor market. Currently, the unemployment rate is at 3.7%, near 50-year lows, and job openings exceed available workers by about 4 million. That is about 1.7 job openings for every person looking for work. So far, we've seen only tentative signs of a moderation in labor demand. With slower GDP growth this year, job gains have stepped down from more than 450,000 per month over the first 7 months of the year to about 290,000 per month over the past 3 months. But this job growth remains far in excess of the pace needed to accommodate population growth over time, about 100,000 per month by many estimates. Job openings have now fallen by about 1.5 million this year, but remain higher than at any time before the pandemic. Wage growth, too, shows only tentative signs of returning to balance. Some measures of wage growth have ticked down recently, but the declines are very modest so far relative to earlier increases and still leave wage growth well above levels consistent with 2% inflation over time. To be clear, strong wage growth is a good thing, but for wage growth to be sustainable, it needs to be consistent with 2% inflation. So let's then sum up this review of economic conditions that we think we need to see to bring inflation down to 2%. Growth in economic activity has slowed to well below its longer-run trend, and this needs to be sustained. Bottlenecks in goods production are easing, and goods price inflation appears to be easing as well, and this too must continue. Housing services inflation will probably keep rising well into next year, but if inflation on new leases continues to fall, we will likely see housing services inflation begin to fall later next year. Finally, the labor market, which is especially important for inflation in core services ex housing, again accounting for more than half of the category, shows only tentative signs of rebalancing, and wage growth remains well above levels that would be consistent with 2% inflation over time. So despite some promising developments, we have a long way to go in restoring price stability. Returning to monetary policy, my FOMC colleagues and I are strongly committed to restoring price stability. After our November meeting, we noted that we anticipated that ongoing rate increases will be appropriate in order to attain a policy stance that is sufficiently restrictive to move inflation down to 2% over time. Monetary policy affects the economy and inflation with uncertain lags, and the full effects of our rapid tightening so far are yet to be felt. Thus, it makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down. The time for moderating the pace of rate increases may come as soon as the December meeting. Given our progress in tightening policy, the timing of that moderation is far less significant than the questions of how much further we will need to raise rates to control inflation and the length of time it will be necessary to hold policy at a restrictive level. It is likely that restoring price stability will require holding policy at a restrictive level for some time. History cautions strongly against prematurely loosening policy, and I'll close by saying that we will stay the course until the job is done. Thank you.
Thank you very much, Chair Powell. I think you spared me the chore of asking you to pick between 50 and 75, so I won't have to ask you that. Thank you for your last paragraph. But I want to talk a little bit about wages and inflation. So, as you said, wages are rising faster than is consistent with a 2% inflation rate, assuming reasonable productivity. You said in November that wages are not the principal cause of prices going up. But for many workers, real wages have been falling lately. So I wonder, isn't there room for wages to rise a bit faster so workers can make up lost ground? And what level of wage increases do you think is consistent with a 2% inflation target?
Okay, so I guess I would start by saying that the inflation that we saw at the beginning of this episode back in March of 21 was not really related to wages at all. It was related to tightness in goods markets, largely due to supply chain issues. Over time, though, inflation has now spread broadly through the economy. And while I would still say that the inflation we're seeing now is not principally related to wages, we think that wage increases are probably going to be a very important part of the story going forward, particularly as it relates to that third category of core services ex housing. So we think it is an important thing going forward. And ultimately, in the service sector in particular, where wages and benefits are by far the largest cost, wages need to go up. And of course, we want wages to go up. We want wages to go up strongly, but they've got to go up at a level that is consistent with 2% inflation over time, making basic assumptions about productivity. So if you look at the principal wage measures that we look at, I would say that you're 1.5% or 2% above that with current wage increases. So particularly the employment compensation index and the average hourly earnings index. Look at those two. It's about 1.5% higher than what would be consistent, making various adjustments, including for productivity, from nominal wages. So, and as we look at the labor market today, including today's JOLTS data, what you see is a labor market that there's a real imbalance between supply and demand. There are 1.7 job openings for every unemployed worker, everyone looking for a job. The so-called jobs workers gap is about 4 million, meaning if you look at all of the available jobs, including people who are working, and then look at people who are in the labor force or looking for a job, there's a 4 million shortfall. So you're in that world, and we think that there's a job for moderating demand in there and getting the labor force back into balance.
You don't think that there's a possibility that we should have a period of catch-up of wage increases above the sustainable level, and that businesses with relatively fat profit margins can absorb some of that without passing it through?
So that's the question of the worker share of profits and that kind of thing is not really related to this. Right now, people's wages are being eaten up by inflation. So what you want to do is you want to have inflation stable and then have a very strong labor market where the biggest wage gains are going to the people at the bottom end of the spectrum. And we had that at the end of the very long expansion that ended with the pandemic. That's not what we have now. Now, for most workers, the increases they're getting in wages are being eaten up by inflation. That's actually not true at the bottom end, where wage increases are higher than inflation. And that's a good thing. But if you want to have sustainable, strong labor market, where real wages are going up right across the wage spectrum, especially for people at the lower end, you got to have price stability. And until we restore that, we can't get back to that place where we kind of were for the 2 years before the pandemic hit.
And did you take, when you looked at today's JOLTS data, which measures the vacancies and quit rates, did you find that encouraging?
More or less in line with expectations, but that's
going the right direction.
That's a good thing, right? Yeah. So I guess job openings came down by several 100,000 to where they are now, and yeah, that's a positive thing. As you know, the relationship between job openings and unemployment is a very fraught one, and job openings right now, compared to unemployment, are at near their all-time high levels. So it has been our view that there's a possibility that in this highly unusual situation in the labor market could come back into balance to some extent through a decline in job openings, and that there's been a typical relationship between increasing unemployment and declining job openings, but that our thinking has been, and many labor economists share this, that you could get a decline in job openings that wouldn't produce the same increase in a smaller increase in unemployment than is typically the case looking back in history because of the very outsized level of job openings. And we've kind of seen that so far, but it's way too early to say that that'll work.
Traditionally, the Fed looked at the unemployment rate as a measure of labor market tightness, and we've seen recently that may be misleading. Unemployment rate is still very low, and as you pointed out, job vacancies are starting to come down. But to the extent that the Fed still relies on a Phillips curve kind of relationship, going forward, is the natural rate of unemployment a useless concept? What measures will the Fed use to judge labor market slack as we look ahead to policy in the coming years?
I think the way we think about it, of course, the standard way to think about it is it's the gap between the actual unemployment rate and the natural rate of unemployment that matters, right? And the issue really, it's not that framework doesn't make sense. It does make sense. But the issue is that the natural rate of unemployment is very hard to identify with certainty, even in normal calm times. But when there's a violent disruption of the labor market, it can move very substantially. And that happened at the beginning of the pandemic. The labor market was very much disrupted, and we assumed that the natural rate had moved up, meaning that for any level of unemployment, the labor market is tighter. So we knew that. And I think what was different in this cycle was really that you had to look at things like job openings and quits and reservation wages and just wages overall to tell you that the natural rate of unemployment had really moved up quite a lot. But I don't think it's a problem with the framework, but it is a fact, though, that it's very hard to pin down where the natural rate of unemployment might be when there's this massive disruption in the labor market going on.
So do you think that the JOLTS data, the job vacancies per unemployed worker, that's going to be a lasting measure of labor market tightness for you at the Fed?
Yes, I think people will tend to look at it.
Well, when you tell them you're looking at it, they tend to look at it.
They'll look at it.
I've noticed that.
That's right. I would just say in this particular situation, we think it's important, and we're going to find out empirically whether that was true for the reasons I explained. We think that we can see a big decline in job openings and less than you would expect of an increase in unemployment. So this was a unique in so many different ways. Right. This series of events was different from one in particular is just that so much of the inflation was due to supply side constraints, right, which is not a feature of the U.S. economy for a long time.
Well, but Vice Chair Lael Brainerd said the other day in a speech that she raised the question of whether long-term changes of the economy, like labor supply, deglobalization, climate change, could reduce the elasticity of supply, and that this may be a problem going forward. Do you share that?
So this is a great set of questions that we've all been thinking about a lot, and Lael's speech was really terrific on that. Augustine Carstens has given a couple of speeches on the same topic, including one at Jackson Hole this year.
The head of the Bank for International Settlements.
Yes, exactly. The question is, is the new normal going to be unlike this normal that we've had where supply side disruptions and constraints were relatively, you could look through them. The lore has been for a long time that you don't need to worry about that, it'll sort itself out, a supply shock from oil prices or whatever. Are we going into a situation a little bit like the 70s where there will be ongoing repeat shocks, and which would tend to put more upward pressure on inflation over time? We don't really know. It's a great question. But the question, I guess the real question is, if that's true, what are the implications? We still have a 2% inflation target, and we still have to use our tools to achieve it and to keep inflation expectations anchored. But it's very hard to know. It's very hard to know the answers to these things. We tend to assume things will go back to the way they were, just naturally, but that doesn't seem to be happening so far.
Right. Now you mentioned in your remarks that forecasts of inflation have, not only those at the Board of Governors, but in the private sector as well, have been lousy. Inflation has not behaved the way the forecaster said. So I wonder how you think about using forecasts of inflation and making policy. If you can't tell us, or if your staff can't tell you with some degree of confidence what inflation is going to be, 6, 12, 18, 24 months out. How do you think about that in deciding when you make policy decisions?
So I'll say that it is very difficult to forecast inflation now, and one of the reasons is just that the situation is so different from the normal one. And as I mentioned, a lot of it is just that the difficulty is just these supply side constraints that we've had. We had no experience in forecasting that. It was, this was a case of first impression. So that was very difficult. Nonetheless, we do make forecasts. We'll continue to make forecasts. The way I tried to get around that in my remarks was to say, let's put the forecasts aside for a second and let's try to identify the macroeconomic conditions that we think we need to see that would put downward pressure on inflation. So that's a way to think about it. We'll continue to make forecasts, but we're going to have to be humble and skeptical about forecasts, I think, for some time. And that calls for a lot of risk management. And the other difficulty, of course, is that monetary policy works with long and variable lags, in particular inflation is at the end of that train. And so if you're waiting for actual evidence that inflation is coming down, it's very difficult not to over-tighten if that's all you're doing. So we have a risk management balance to strike, and we think that slowing down at this point is a good way to balance the risks of
slowing down on the pace of rate increase.
On the pace of rate hikes.
I see. But it's still a problem if you can't use today's inflation rate to set policy and you're not sure what tomorrow's inflation rate is. You're saying the inflation forecast will be secondary to the economic conditions that you think are likely to generate more or less inflation. Is that basically?
Well, first of all, I'm agreeing that it's a very difficult situation in which to forecast inflation, and really very few professional forecasters have gotten it right. So I think we'll look at various things. We'll look at our forecasts. We'll look at the actual data. We'll look at, I gave you the three pieces and the elements of those three pieces of core inflation that we're looking at. We will, look at these macroeconomic conditions. For example, we will try to identify a level of a stance of policy that's sufficiently restrictive to bring inflation down. We can't identify that with great precision and confidence, but we'll look at the changes in financial conditions and the effects that those financial condition changes are having on the real economy. We'll look at all of those things and make a judgment, and it'll have to be judgment as to what that is.
Well, when you think you've talked frequently about the need to have policy restrictive, and that often is used as the definition of restrictive is above some neutral rate of interest, the one that will prevail when all is calm. And you gave a speech at Jackson Hole a number of years ago pointing out how identifying all these things, the natural rate of unemployment, the natural rate of interest, the problem is that we don't know what they are. So how will you know when policy is restrictive? How do you think about what the neutral rate is under the current conditions of the economy?
And the answer to that is that there isn't any one perfect summary statistic. So the way I think about it, and I think the way we generally think about it is, we make our policy changes and they affect financial conditions. Actually, it works the other way around. Financial conditions tighten in expectation now, different from what it used to be. So they tighten. And so we monitor the tightening of financial conditions. We look at the history of these financial conditions index and we ask how tight are financial conditions. We also look at the effect that tighter financial conditions are having on the real economy, particularly now interest-sensitive spending, but also other things as conditions tighten. We also look, so what are the financial conditions we look at? We'll look at the entire rate curve. If you think about risk-free, the Treasury rate curve, we'll look to see significantly positive real rates across the curve. And, you have that. You can argue about the short end, but you've got to pick some sort of a forward-looking reading for inflation. And I think, inflation compensation in the markets definitely reflects confidence in us bringing down inflation. So you've got real rates really across the whole yield curve. You also look, though, at credit spreads and what are private companies borrowing at, because most borrowing doesn't happen at the federal funds rate. It happens in many other places. We look at asset prices. We look at exchange rates, which are just another asset price. We look at all those things, and we try to make a judgment about whether looking at put some weight on the real interest rate curve, some weight on the other aspects I talked about. I think you have to make a judgment at the end, though, that you're restrictive.
So an estimate of the neutral rate of interest didn't seem to be one of the big factors in that list you gave?
No, it's in there. It's in there in looking at the real rate curve. So you'd look at the real rate curve, you'd want real rates to be above what we'd estimate as the longer run neutral rate.
Mm-hmm.
The issue is, the longer run neutral rate is a rate at a time of full employment and 2% inflation and the economy in perfect equilibrium. That isn't where we are.
Yeah, I noticed. Can I turn to the balance sheet for a minute? I'm going to turn to questions from the audience in a minute. What criteria are you going to use to decide when to end the shrinking of the balance sheet? Is it the economy? Is it whether money markets are functioning well? Is it whether the Treasury is having trouble raising money? How do you decide when you've shrunk enough, when you should end the shrinking?
So I should refer you to a document that lays all this out in detail that I really should be reading to you, but I'll paraphrase it.
Thank you.
If I don't get it exactly right.
No one will pay attention if you don't get it exactly right. Don't worry about it.
Pretty much wing it.
Relax.
So we're in an ample reserves regime, and what that means is that changes in the reserve level will generally not affect the federal funds rate. So there's more than enough reserves in the system. So we're not close to reserve scarcity. So what we've said is that we would allow reserves to decline until we're somewhat above the level that we think is consistent with an ample with scarcity.
Right.
And then for a while, what you do is you hold the balance sheet constant, and non-reserve liabilities grow while reserves shrink. So we sort of shrink gradually down to that. And then at a certain point, we're just going to call it. We're not looking to really go back into proving that they're scarce, because what happens is, and you saw this back a few years, the demand for reserves is not stable, and it can move up and down very substantially. So we want to stop at a place that's safe. Having a lot of reserves in the system is really a good thing. It's really a public benefit to have plenty of reserves, plenty of liquidity in the markets and in the banking system and the financial system generally. So that's how we would do it.
In the minutes of the last FOMC meeting, it said the staff had a forecast that it forecasts below potential growth, but not a recession. But then there was this interesting sentence where the staff said the possibility that the economy would enter a recession sometime over the next year is almost as likely as their baseline forecast. Is that how you look at it?
So I have resisted the temptation to handicap it.
Go on.
I think I'll continue to do that. But I get the way I think about it is I do continue to believe that there's a path to a soft or a softish landing. I do believe that. And
the definition of a softish landing is what?
Soft.
Unemployment goes up a little, but we don't have a recession?
Yeah, unemployment goes up, but it's not a hard landing. It's not a severe recession. You can think of unemployment going up, but not really spiking as it does in some recessions. So that's how I think about it. And I think the path is pretty clear. The labor market conditions soften. We see inflation, and the goods inflation gets better, housing services inflation gets better, and the labor market softens but doesn't go into recession, and you see inflation start to come down. And I think that's very plausible. I don't want to be the handicapper on it. And of course, our job is to try to achieve that. Mm-hmm. And I think it's still achievable. Although, if you look at the history, it's not a likely outcome, but I would just say this is a different set of circumstances.
Well, you said at the last press conference that you thought the path to that soft landing had narrowed. Has it continued to narrow, or is it widened? Or I don't know if you can have a wider soft landing, but
I don't know that it's changed since this is what, 5-6 weeks ago. Yeah. I was asked the question, has it narrowed? Is it still possible? And has it narrowed? I said, it's definitely still possible. And it has narrowed because if you look over the course of this year, nobody expected us to raise rates this much. No one expected inflation to be this strong and this persistent and this, to have spread so broadly through the economy. And so to the extent we need to keep rates higher or keep them higher longer, that's going to narrow the path to a soft landing. On the other hand, if we get good inflation data and we get evidence that all the things that I talked about, if all those things start to swing the other way, then we could very much achieve this.
In August 2020, you announced a new framework for monetary policy, the flexible average inflation targeting framework. And I wonder whether there's anything in that that you think we should be rethinking now in light of the recent experience?
So we said we would do another framework review in 5 years, and so that would be to bear fruit in 25 or 26. So that's what we're going to do. We're going to stick to that. I think we need to see this through a full cycle. We need to see the other side of inflation and what the economy looks like after this historic episode to really make good judgments about that. I will say, though, that aside from the framework itself, we implemented it through guidance of various kinds, and you know, we put in really strong guidance because there were a lot of doubters that we would ever achieve 2% inflation, if you remember. That was the main criticism. Little did we know. But one piece of guidance that we gave was, and I don't think this had anything to do with, or much to do, let's say it that way. It didn't have much to do with all this inflation we're experiencing. But the one piece of guidance that we gave that I probably wouldn't do again was we said we wouldn't lift off until we saw both maximum employment and price stability. And I don't think I would do that again.
Because?
I think it limited, it's the tail risk. You know, we tend as human beings to underestimate tail risk. And I think we didn't think, it seemed so unlikely. If you remember, 25 years of low inflation.
Right.
And many years after the pandemic, after the global financial crisis of inflation everywhere in the world, it's all disinflation. Just didn't seem likely. And yet here we are.
So it turns out that when you invite the chairman of the Federal Reserve to speak at Brookings, a lot of people email you questions. Most of them are questions I've already asked or questions that were so poorly framed that I couldn't even understand the question. But somebody asked me this one, and so I want to give that person an opportunity to get an answer. What do you like to do in the morning before you start work?
What?
Work. No, I'm a super early person, and I read a bunch of newspapers and drink my coffee in peace, and then that's what I do.
And now that you're chair, do you still ride your bike to the Fed?
Some. I ride down. Well, I won't tell you where I ride, but I do.
Yeah.
I ride.
The security guys thank you for that.
They're like, no. Yeah.
Okay, so here's the deal. We're going to take questions from the audience. You need to wait for a microphone to get to you because we have a lot of people online. You need to say who you are, and you need to remember that this is not an opportunity for you to make a speech or tell the Fed what it should do. It should be a question. It should be short, and questions end with a question mark. So come down here. Want somebody, Joe, and then Jonathan?
Thank you. Joe Beaulieu from Brevin Howard. So you've spoken both about risk management considerations and the inherent danger of inflation becoming entrenched. So I was wondering, how much do risk management considerations suggest a terminal rate higher than would normally be expected to achieve your policy goals?
So I think there are a number of dimensions, and it wouldn't necessarily, one of them would be potentially higher rate, but more I would think one risk management technique is to go slower, right? To go slower and feel your way a little bit to what we think is the right level. Another is to hold on longer at a high level, and not loosen policy too early. I don't want to over tighten. Certainly, my colleagues and I do not want to over tighten because I think that cutting rates is not something we want to do soon. So that's why we're slowing down and going to try to find our way to what that right level is. But theoretically, it's another dimension, but it's not. It wouldn't be my first choice.
All right, I'm going to pause it right there. I'm going to go through the numbers here real quick because I know I went and ate something with my wife real quick there, but I'm going to take my last break before the end of the day here. And so let me get through these numbers real quick, and I'll turn this interview back on here. So let me take you guys over to the other page. I'm not going to be able to see what it is you guys are writing, so hold those thoughts until you see the DeLorean back on the page again. Give me 1 second while I log into my broker. Two-factor authentication, if you don't have it, you may want to get it, as it could prevent somebody from getting into your account that shouldn't be in your account. When you set that up, set it up with 2 phone numbers in case you need a backup from something happening to your primary. Moving these screens over here, and we'll take a look at the data. Let's see what we got going on here. Starting with off exchange. Off exchange for AMC currently at 49.5%. Oops. EDGX at 11.45. Grand total between those two is 60.95%. That's a little bit less than what I would expect to see on a normal day. Part of the reason for that is CHX volume is extremely high, guys. 720,000 shares now going through CHX. That is extremely large amounts of volume. I'm just going to say the last time I think that we saw 1 million shares going through CHX, we ended up seeing a major price run. We started out 2 days ago with seeing 400,000 shares going through CHX. Yesterday was about, I think it was somewhere between 100 and 200. Let's see. Hold on a second. I can pull up the number here. Yesterday was 105,000 shares that went through. And then today now 720,000 shares going through CHX. I think somebody's covering, guys. I really, truly, honestly think somebody's covering at the prices that they dropped it down to. I think we're in store for a big run coming up here. Off exchange volume going through Ape for the day today is currently at 64.95%, and EDGX at 8.07 for a grand total 73.02%. That's probably about 10% higher than where I would expect it to be. CHX volume at 0.39%, or 4 times the amount, the daily normal amount of CHX volume we normally see on Ape. GME now has elevated amounts of CHX volume. 0.44 when it normally sees about 0.28% of the total daily volume. Not quite double the amount yet, but it's really darn close. HYMC also has elevated CHX volume, nearly 4 times the amount that it should normally see. I do believe that there are liquidations that are occurring in this market right now. If it's not liquidations, it's people who are closing out their positions willfully. I'm not sure which, but I'm seeing very heavy signs of CHX volume movement today across the board, and it's not usual. Taking a look at Ortex. An hour ago, there was approximately 411,000 shares having been borrowed. It's now 684,000 shares having been borrowed for the day today. That's going to have the effect of slightly raising that short-term interest of the free float to 21.4%. Cost bar average at 50.8. Max is at 71.19. Min at 41.83%. Shares on loan for the day today, day over day, is up by 900,000 shares, with 309,000 of that to be being new short interest. Shares on loans at 180.27 million shares. Taking a look at Ape. An hour ago, there was 528,000 shares having been borrowed. It's now 540. Not much of a change, so it probably won't affect the short share interest of the free float too much. Excuse me. Which is at currently 9.93%. Cost bar average at 10.24. Cost bar max at 17.85. Cost bar min at 7.94. Shares on loan for the day today is at 51.53 million shares. That is less shares on loan day over day in short interest that was closed out by 300,000 shares. Taking a look at options. On AMC at $7.50 an hour ago, there was 14.9 thousand contracts. There's now 19,000 contracts. There's definitely some elevated volume coming in on the call options at $7.50. On puts, an hour ago, there was 5.1 thousand contracts at $7. It's now 7.7 thousand contracts. Market's still insinuating that there's going to be a closing price somewhere between $7 and $8. Or sorry, $7 and $7.50 for AMC for the day today. Combined price of AMC and Ape is currently at $8.26. We did come down and test this level of support down here, this descending level of support that we see, and is bouncing off that and heading upwards. Wait a minute. Orders by Fidelity customers. Make sure I got you guys on the right page. Let's see here. Ape is, let's see, we are now 3, 6, 7, 8th. Eighth most heavily traded stock on the market with a 91% buy ratio to 9% sell ratio. Looking very, very strong here. Due to the increased volume, it's heading up higher and higher on the list here on most heavily traded stocks. AMC and GME had made the list earlier. It looks like AMC fell off since an hour ago, but both were doing over 40% buy sell ratios. GME is the only one on the list currently with 69% nice percent buy to 31% sell ratio. Still looking very strong on those. SSR trips at $6.69. Shares available to borrow at 0. Ape did trigger 0.945, 94.5 cents. Did trigger SSR. No shares available to borrow currently with ETF showing about 15,000 available. Last fees we're seeing at 39.5. Total amount of shares borrowed for the day-to-day was 550,000 shares, which is definitely more elevated than what we've seen in the more recent history. Taking a look at the market, we have the NASDAQ up 3.25%, Dow Jones up 1.13%. These are the forced liquidations I'm talking about, guys. This market just took a total jump the other direction. There are I'm really positive there's market-wide forced liquidations occurring right now. I'm pretty certain that's what you're seeing. NASDAQ up 3.22, Dow Jones is up 1.1, S&P 500 is up 1.97. We have 4,837 advancers to 1,941 decliners. The market absolutely just completely drove the other direction. This market's cooking with bacon grease and looking super hot and tasty right now. Let's give this a second to update here. Usually it takes a hot minute here for some reason for this to update. I don't know why when I switch over to this page, but as it stands right now, it looks like the US dollar, let me just click on it and see. Yeah, US dollar is down right now, 0.47. I don't know why it takes so long for it to update, but it did an immediate reversal on that. Oil is up now, 0.29. Mortgage-backed securities on BlackRock are up 0.54%, and Vanguards are up 0.34. SPY is up to 0.2. We're getting a total run on the market right now. VIX is down 4.39. VTI is up 2.01. IWD is up 1.19. Tesla's up 5.02. Amazon is up 2.99. Cinemark is up 0.78. Doge is up 3.2. Bitcoin is up 4%, breaking 17K a coin. GME is up 1.67. HYMC is down 5.48. Hood is up 3.49. CS is down 1.44. NCMI is up 3.55. Ape is down 13.8, and AMC is down 0.67%. I'm pretty certain you're seeing like a market-wide liquidation. That's what it appears like to me. On AMC, for the day so far, there's approximately let's just call it $800,000 more inflow than outflow for the day-to-day, with 18.07 million shares having been traded so far. We've got approximately 97 minutes left to trade. So 293, I think that's right. 293 should be correct. Let's call it 294. After 294 minutes of trading, that puts us on a pace for 24 million shares traded by the end of the day today on AMC. That will be within that 10 to 30 million shares that I suggested in the pre-market. We have had, I think, some elevated volume starting to pump in now. We are seeing almost, we're seeing over 500,000 shares in a minute. Oh no, these are 5-minute candlesticks. Never mind. Over a 5-minute period, we're seeing over 500,000. So we're getting close to maybe 100,000 shares a minute on average at this time. On a 1-hour time interval here, we have more buying pressure and selling pressure with an RSI of 49.89, which is pretty much average. On a 30-minute interval, there's more buying pressure and selling pressure with an RSI of 51.79, which is pretty much average. And on a 5-minute interval, there's more selling pressure than buying pressure with an RSI of 69.58 after having signaled overbought. Taking a look at Ape. Inflow versus outflow, there's approximately $7.3 million more inflow than outflow for the day today on Ape. 42.47 million shares having been traded so far after 295 minutes of trading, putting us on pace for 56.14 million shares traded on Ape by the end of the day today, well exceeding the 15 to 35 million that I had mentioned in pre-market. I think there's exceptional amounts of volume that's occurring today that was unforeseen. On a 1 hour time interval, we have more selling pressure than buying pressure with an RSI of 18.02, signaling oversold. On a 30-minute interval, there's more selling pressure than buying pressure with an RSI of 18.04, which is signaling oversold. And on a 5-minute interval, more selling pressure than buying pressure with an RSI of 13.48. All these numbers are super oversold values. I hope you guys are pumped, man, because this is kind of some exciting stuff that's going on right now. I know this is gonna be like a roller coaster ride, guys. It really is. Living through this, it's gonna feel like a roller coaster. Your emotions aren't gonna know which way to go, and really what you need to have is no emotions. You need to go into this whole process just watching. Know what it is that you're looking for. Go into this just watching. Because we already own the float. That's why, Jim. This is the exact the question that you're asking right there is the exact same reason why no stupid company would come in and try and buy shares when retail owns over 100% of the shares. No institution would do something stupid like that. Chris says, be stoic. I agree with Chris. Dr. Zena says, Shaw, if liquidations are going on now, when do you think we should see it affect our prices? I have a feeling that once everybody starts realizing that there's door rushing going on, that's when you'll start seeing the fighting going on who can get out of the door the quickest. And I have 2 weeks. 2 weeks. That's the only answer I got for you. Hot catch. That's what. Maybe. So AP, I mean, everything's off the table when you have liquidations occurring. Bird Eye View says May 20th ish. Citadel bought 9 million shares. Did they sell those yet? They actually returned them. Oh, May 20th. You're saying May 20th of this year. Good question. I don't know. It's a good question. I love that. High Energy says they can manipulate a stock, but they can't manipulate us. That is a great outlook. Captain Awesome says, according to the over 8 quadrillion tokenized shares that FTX got caught with to hedge against AMC, we own the float over 15 1,000 times. I don't know it's that high though, Captain Awesome. I don't really look at it. I don't think that's exactly how it works, because those are fractionals. I think you have to divide that by some number, and I'm not sure what that number is because I don't know what the fractions represent. Casey had YouTube jacket. What? No, I don't have a YouTube jacket. What? Who even has, like, what are you gonna? I don't know. No, I wouldn't wear that. I'd wear an AMC jacket. Yes, liquidations could equal new highs does not mean margin calls to MOASS, though. That is correct. Again, the only way that you know that you're getting MOASS is if you see people walking out of hedge funds with their belongings packed up in boxes. That's it. It's the only way that you know that MOASS has truly happened. So my calcs point to 4x, but now I'm thinking at least 20x the float. I mean, I don't want to say it. All right, so a while back when I used to do the calculations to figure it out, I came up with 19x. That was probably middle to late middle of the year. I want to say like maybe like October of last year. At least October. It might have even been a little bit before that as well. But trying to convince somebody that that's that there's proof of it, I think it's kind of difficult to do though. Yeah, one of the things you're gonna have to do though, Captain Awesome, is you're gonna have to find out how much of those those tokenized units, what kind of fractionals were they selling them in? Darren, I'm not gonna talk about that, man. I'm not going there. All right, I know you guys are I know you guys can't wait to hear what the rest of Jerome Powell. Don't sell the Peloton. Use while streaming. Use booze money. We'll see. We'll see, James. We'll see. No, 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 no. We don't want to wish any kind of harm on anybody, guys. We don't. I know it's real easy to want to like wish evil upon other people. Don't go there. Don't stoop to those levels, though. You're better than that. I know you are. Yeah. Bird eye view photography. That's might be a pretty good number. All right. It's break time, season curlies. Are you gonna be here? Are you gonna be here in 40 minutes from now? At like, will you be here in an hour towards the end of the day? Because I can roughly go over it at the end of the day. Or you know what? Screw it. Let's just go over it right now. Let's just go over it. All right. So we're gonna set up a little. I keep getting asked this question all the time, so let me just show you. You can't really do this now with the company that I'm showing you, but you could in the past. When I did it, it was perfectly possible to do it with the company that I used. But what we're going to do is we're going to create a ratio. We're going to take a look at ratios here and try to understand if there's a way to figure out how much of a float should be traded on a daily basis of a stock, irregardless of the price. And so what we're going to do is we need to find a stock that's out there that has very low shorting that's going on with it, has a very similar float size to the company that we're trying to compare it to, which in this case is AMC, and then seeing what the difference is between the two. I know a lot of people. The number one, and I'm not going to answer any questions until I'm done explaining this. But a lot of people are going to say like, you can't compare a stock price that has, say for example, if it's trading at $1,500 a day, you can't compare that to something that's trading at $50 a day or $40 a day or something like that. And I would challenge you and say that that's not true. For any stock that's out there, you can go and find this to be the case. The total amount of the float and the price makes no difference on how many shares are traded per day. What makes the difference on whether or not how much a stock is traded by their total float per day is based off of how much the stock is shorted. It is, you can find it. You can go through and you can verify and fact check this with everything that it is. You can go out there to any stock. The way you do this is you just simply go up to stock, and we'll use AMC as an example right now. You take the average 3-month volume, which in this case for AMC is at 24.9 million shares. You divide that by the total amount of the free float, which in this case is 515.7. Multiply that by 100, and it gives you a percentage. That percentage is 4.82 for AMC. That means 4.82% on a 3-month average of our total volume of the free float is traded on a daily basis. So, what is a stock that is not heavily shorted, that has a very similar amount of shares in the free float trade to AMC on a daily basis? One of the interesting things is back in the day when I first did this calculation, I used Amazon, and the reason for it is Amazon's not very heavily shorted. It's actually a really great gold standard to use. One of the most amazing things is that the total amount of shares that were in ownership of Amazon prior to their 20-to-1 split was they were trading about gosh darn, what was it? I think it was $2,500 a share back when I was doing the information. So they had $2,500 per share, and so you go over there and look at that. Actually, we can just go over and do it 20 times on it right now, and we'll take a look at Amazon, right? So right now their current price is trading at $94.77. Multiply that by 20, that would be about $1,895 per share. That's how much their price would be trading without the dividend that they issued, or the 20-to-1 dividend that they issued out. So, but we'll just go ahead and take their numbers right now. Their average 3-month volume is sitting at 73.91 million shares. Divide that by the total amount of free float, which is 9.2 billion. So in order to calculate this out, I'm going to have to move the decimal place over, to I guess three places, I think. Let me make sure that I think 3 places is what I need to move it over. So it'd be 9,200. So divided by 9,200 times, yep, that's the correct answer, times 100. And their total amount of their daily volume of their float traded is 0.8%. And you're going like, Casey, how in the world do you know that that's correct? Well, it's because I've already done this math before. They were trading prior to their split on a daily basis. They were trading 0.7, 0.8. It was really close to 0.8%. So wait a minute, Casey, how is that possible? How in the world could a stock that trades $1,800 a share trade the same percentage of their daily float when they're at $1,800 a share compared to when they moved down to $94 a share? How is it possible? It's because the total amount of volume that's traded on a daily basis is representative of how much the stock is synthetically traded. That is the answer. If you want the answer to know how synthetically a stock is traded, all you have to do is just do that very simple math problem. Super, super simple. Go out and check it on almost any stock you want to. Pick out 10 stocks, find out, do this math that I just did for you. Now you have the answer. You have a stock that you know that is not very heavily synthetically traded. You know that it's trading 0.8% of their total daily volume. Actually, you know, I think that number is wrong. 1, 2, 3. It should be 0.08. I'm pretty sure. I'm not mistaken. I may have moved the decimal not enough places. Let me see here. Let me think about this real quick. 9 point something billion. What was it? 9.2 billion. Ah, screw it. Let's just do the full math, just to make sure I got the math right on this. 9.2. Oh, I got to do the 73.91 million divided by. I just want to make sure I'm getting the math right here. 9.2 billion. Yeah, I had the math wrong. It's no, I got it right. It was right. 0.8. I did move the decimal 3 places over correctly. All right, so 0.8. 0.8% of their total volume is traded on a daily basis. Okay, so you got 0.8. If you know that that's how much is a normal amount, and I can pull up over here and I can tell you how much Amazon is being shorted by. Give me 1 second while I pull up on the screen here. Amazon, according to Ortex, has approximately 0.88% of their free float being shorted. 0.88. It's 81 million shares, which is practically nothing. It's a great one to use to try and compare to other stocks. All right, so we know we have an example of a company that's not heavily shorted, Amazon, and now we know that we have AMC. The question now is how do we turn this into a ratio to figure out how many shares AMC should have in total in order to figure out potentially what it would be trading at to get 0.8% of the float being traded. Who's the math whiz in here? Danny's listening. I hope Danny's listening. What's the math formula, Danny? Well, I'm not getting any answers. So I think I just did it correctly though. So what you're going to do is you're going to figure out how many times more the float is being traded on AMC versus Amazon. You're going to take 4.82 divided by 0.8. It's 6 times more. 6 times more. So you could multiply basically the float by 6 times. So if we multiply our float by 6 times, 515 million times 6, it comes out to what, about 3 billion. 3 billion. So we could reverse math that and see if that was correct. Because if that's correct, then if I take 73.91 divided by 3090, then I should come up with 0.8 percentage of our total float. So 6 billion amount. Let me just go ahead and write that down. 6 billion shares basically. So if we take the total float, let's see here. So 73.91 divided by 6,000. We'll just say 6,000 times 100. That's not quite right. That's 1.23. It's going to be a little bit more than 6%. I must have mathed something wrong here. Hold on a second. 16.59. Is that right? 16.59. it's way too much. Yeah, so it's gonna be somewhere in between that. It's gonna be about like 7 or 8 billion, right? So 8 billion shares. If you were to do 8 billion shares, let's see, 8 billion shares. So 73.91 divided by 8 billion shares times 100. That's going to be 0.92. So it's a little bit less. It's going to be a little bit less than that. It's going to be like somewhere between 7 and 8 billion shares. That's what it comes out to now when you do the formula now to try and come up with the same answer. However, if you go back and you look at what the numbers were back in last year, the numbers came out because of the volume that we were trading, so much higher volume back then than what we're trading right now. It actually came out to 19 billion shares. So there is, the potential possibility that there is less shares in synthetics now than there was last year. But there's still quite a few, though. I'm waiting for questions. I'm looking to see if there's any questions. I don't see any questions here. Dan says I glazed over when you started the maths. So that's really, I mean, if you just want to kind of like figure out now, what I would encourage you guys to do, because I kind of went around and I started when I was first trying to figure out if there was a way to maybe potentially figure out how many synthetic shares were in existence. One of the things that I started doing is I started looking around for a bunch of different stocks that were good stocks to try and figure out if what I was doing was correct, right? So I would go around, I'd look at stocks and I'd say like, okay, well, you can go to Cinemark, for example, right? Go over to Cinemark. You can look at Cinemark and you can say, okay, well, what's their formula come out to? So you go over to Cinemark, you pull up 3.14 million shares having trade on an average 3-month basis, divided by their free float of 108.27. Multiply that by 100, and it gets 2.9% of their daily float is traded. And I've mentioned to you guys before, and it's only because I've gone through and I've looked at a bunch of different companies. Anything between 0 and 3% is what I would consider to be in the normal range, right? And obviously, the higher it is, the more shorting that's occurring. But it's not in a danger zone of being heavily overshorted until it's over 3% of their daily volume. Once it gets over 3 to 5, anywhere between 3 and 6%, I would say 3 to 6 or 3 to 5%, somewhere around there, 3 to 5, 3 to 6% is definitely over leveraged. And anything over 6% is massively over leveraged. And I have seen, let me tell you guys, I have seen some massively high numbers. It's rare, but I have seen some really heavily over leveraged companies out there and are trading massive amounts of volume. That just does not make sense. And so when you look at this and you look at the fact that that Cinemark is trading 2.9% of their total daily volume, you can tell that they're being shorted. I would say this is really close to being over leveraged on this at 2.9% of their daily volume, being of their total float being traded on a daily basis. So what I would wager to say is that they're probably somewhere in the range of maybe like 10 to 15% short share interest of the free float. So then I can take that information and I can go over, and I actually don't know how much they're shorted by. So then I can come over to Ortex and I can verify it and see if that's going to be accurate at 2.9. It might be slightly less than 10. It could be somewhere between maybe like 8 and 15%, somewhere in that range. So let's check it out. CNK. Let's see what it's at. Shorts. Wow, it's actually much higher than that. It's 24.19% of their free float being traded. It's actually way higher than I would have expected. But the one thing that you got to note about this though is that even though their short share interest of the free float's at 24.19 and 25 million shares being in short interest, their utilization is super low right now. They only have 28.68% of the utilization. So that might be, so while there may be a lot of short interest on this particular stock, I would say that there's probably less synthetics and more just short interest. Obviously, the higher the short interest that's being reported and a number that's lower in their average daily volume that's currently being traded, they probably just don't have a whole lot of synthetics, but they do have a lot of short interest that's out there. So that's why I would explain that number is higher than where I would have projected between 8 and 15%. That's much higher than I would have expected. So more than likely, they probably see big fluctuations in the amount of short interest that they have. And let me pull this up here so you can see what it is I'm talking about. I would suggest that there's probably really large amounts of flip-flopping going on this one on exchange report. Yep, there's a little bit of little bit of up and downwards play going on here with the short interest. It looks like. So they've got some big movements going on here, but it doesn't seem like perhaps maybe a whole lot of synthetics that are out there. And let's see here, what's their and it's just recently that they actually started getting their estimated short share interest of the free float actually jumped from it was much lower back here. It was 18.32 back in October. And it's since then it's dropped or driven all the way up to 24%. So it's only been recently that this has actually driven up. And so remember the calculation that I'm doing is based off of a 3-month average volume. So if you take the average 3-month volume and you take a look at over the last 3 months what's happened, you can see that there's been a pretty large increase in volume more recently, which would explain why their short share interest of the free float's much higher right now than what it used to be on the average 3-month prior. See, we would be looking at the beginning of September, so right around here. And one of the lowest amounts that they had in short share interest, the free float, was 18.01. There's actually a little lower number over here at 17.02. So those numbers are actually more in line with what it was I was saying when I said 8 to 15%. So it's really this current volume that's causing the short share interest of the free float to be as high as it is, and so you can tell that there's this short share interest is more recent. It's a recent stacking of short interest. And then I can use another one. Let's take a look at like Tesla. Let's see what Tesla has. Tesla's got 77.2% of their volume being traded on a daily basis, divided by their free float of 2.66 billion, so 2660 times 100. They're at the same exact number as Cinemark. 2.9% of their daily volume is traded, which is just underneath that same number. I would probably tend to put Tesla on the same scale as Cinemark in regards to how heavily it's short. I would say the same number, 8 to 15% short share interest of the free float. percentage, but you know, it might end up being higher if there's more new or short interest that's been stacked. So let's take a look at it and see, because I actually don't know what it is. $2.77, so it's actually really, really low. So they may have had some more recent short interest that was closed out on this, and let's take a look at it and see. Oops, I pulled up the wrong number. They did. They had some short interest that was closed out, and it's only been more recently that it actually drove back up to higher numbers in the 2 to 3% range. So they're actually getting quite a large amount of volume that's going through here, and now it's kind of making me wonder, like, what would cause their? Oh, wait a minute, I'm not looking at the right. What am I looking at here? Hold on a second. Why is this showing? Ortex is not reporting any data on Tesla that's current. This isn't current data. What am I missing here? I'm missing something. Somebody help me out. Why are we not seeing current data on Tesla on Ortex? Why would that be the case? I don't monitor Tesla, so I don't know if they moved to like a did they move to a different exchange, or did they take their stocks off the exchange? Yeah, I the calculation that I ran the first time David Stevens was wrong. So why isn't Tesla showing up on this? Does anybody know? Did Tesla take their they didn't go private. I know they didn't go private. I'm kind of confused as to why I'm not seeing Tesla showing up with current. Okay, now it's showing up here. For some reason it was this is really weird. The way that this is being represented, the data down here, I can see that there's July through November in here right now. But down on the bottom part of the chart down here, it's saying July 21st to June, July 22. It's just kind of weird how this chart's showing up. But yeah, their exchange reported short interest is sitting about 78 million shares. So it's right about 2 to 3% of their total exchange reported short interest. I'm kind of curious what happened to their volume. Why is it 3 months, September? Looks like they had a kind of a little bit of an increasing amount of volume that's occurred over the last 3 months, but for the most part, though, short interest was pretty low and has just now started to increase. This is kind of an interesting one here. I don't know why this is trading at such a low short share interest of the free float, but yet it's showing 2.9% of their total daily volume being traded. It's pretty unusual. Considering the fact that this percentage is so low. Hmm. So one of the interesting things about their chart is that's different than most other charts that I've ever seen out there is that the shares on loan right now is only 23.19 million shares, yet they have 73 million shares in short interest. There's something kind of odd going on with this chart right here, and I'm not sure exactly what it is. That's very strange. I don't even know how that's possible. How is it possible that they have more short interest than they have on loan? That doesn't make any sense. 73 million shares on in short interest, but yet they only have 23.19 million shares on loan. That really doesn't make a whole lot of sense. And utilization is only at 1.16. Max Dog says crime. I have not seen this before. I mean, there was one other time that I saw that briefly on GME where they did have a higher amount of short interest than they had of shares on loan, which I kind of chalked it up as being a little bit of a reporting issue, which we all know that some of this data is self-reported. But to see this discrepancy like this is really kind of odd to see. Only 23.19 million shares reported on loan, and yet they've got 73 million shares in short interest, and I just don't know how they could. I don't know how they could achieve that. I really don't, and I'm kind of wondering now how long has it been like that for? Hmm. This is a new one for me, guys. I haven't seen this. Yeah, Darren saying Ortex is self-reported data, loads of room for manipulation. I agree. And that's why I definitely take it with a grain of salt, but I think it's better to have some information than no information. I just think it's really odd here that they've got 23 million shares on loan as reported, but 73 million in short interest, and I just don't know how. The only way you can really get short interest is by loaning shares. So your shares on loan should be at a very minimum at least as much as your short interest, if not more. So to see shares on loan less than is odd, to say the least. I don't know what to make of it. Dr. Zeno says it makes perfect sense. Don't worry about it, Danny. No big deal. I didn't really need you. I always get the formula backwards. I always do the conversion backwards for some reason. So once I figure it out and then I cross check myself, I realize, oh yeah, definitely divided that one incorrectly. We got about 5 more minutes before I take a look at the numbers. John says, Casey, I heard when mathematicians get constipated, they normally work it out with a pencil. I used to have a friend that said matchsticks. He says it works on his dog every time. I don't know what the hell is up with that, but SPY up 2.15%. It's taking a run. Mr. Mills, 2 weeks. My biggest fan says 0.9001. Really? Yep. Ariel says, Casey, do you think Ape is negative beta to the rest of the market now? I mean, it sure looks like it, doesn't it? It'd be pretty hard to say no, especially after where it's at right now. Thanks, Clark. Appreciate it, man. Mitch is saying, can Ape be delisted? I'm sure that it could. I think any security really could. I'm not worried about it though. Wait. I gotta pull up the movie trivia because we're gonna have that here in just a little bit, and I didn't get it ready yet since I didn't take a break. Excuse me. That came out of nowhere. All right, here. Give me a second while I find. Does this have answers? So I'm taking the test real quick here so I can get the answers to make sure I have answers ready for you guys for this quiz. This will be an Adam Sandler movie quiz day today. Hopefully it's an Adam Sandler movie that everybody's seen. Let's see. What, are you kidding me? No answers? Give me a second, guys. This is usually what I do on my break. All right, there we go. I got the answers out of this. I'll go ahead and give 2 bonus points right now to anybody who can tell me if anybody can guess the name of the movie. Actually, no. Let's hold up off on that. It's too soon. It's too soon for people to start looking up answers. I'm not going to tell you which one it is, but it won't be Happy Gilmore. I'll tell you that much. It's not Happy Gilmore, but I'm not going to tell you which one it is. I'll let you guys guess a little bit later. But it is 2:10, so let's take a look at the numbers so we can get through those and take a look and see what we've got for the final numbers for the day. I'm not gonna be able to see what you guys are writing until after you see the DeLorean tramp back up on the page again. 2-factor authentication. If you guys don't have it, you may want to get it, as it could prevent somebody from getting into your account that shouldn't be in there. Also, while you're setting that up, make sure you have a secondary phone number to put in there in case something happens to your primary. You always have a backup. All right. Let's see what we got going on here. Starting with off exchange. .58% of our volume going through off exchange for AMC for the day-to-day, plus the 11.18% going through EDGX. We're seeing about 61.76% of our total volume going through those exchanges. That's a little low. I would kind of expect around like 66%, so we're kind of down by about 5%. However, CHX volume is extremely high today. It's at 3.55% of our total volume on AMC, when we normally see about 1/4%. So quite a bit more volume going through CHX. Taking a look at Ape, off exchange for the day-to-day is at 64.52. EDGX at 7.44 for a grand total 71.94%. I think that's probably about like that's about 6% higher than where it should be by this time of the day normally. CHX volume also high on Ape. Normally we see about 10% or 0.1% of their total daily volume going through on Ape, and it's at 0.34%. I say they, it's us. I don't know why I said they. Taking a look at GME, CHX volume is elevated on GME as well, but not a whole lot. Normally it's 0.28% of the total daily volume. Today it's 0.34. And HYMC also has elevated CHX volume. Normally it sees about 0.1% of their daily volume. Today's 0.3. So elevated CHX volume. I do believe that there's been some forced liquidations that have occurred today. Hold on one second. I know you guys are probably looking at the data right now. That's actually Tesla that you're looking at right now. So let me fix that real quick here. Put it back on AMC. An hour ago, there was a borrowing of 684,000 shares for the day. It's now 728. It's not going to have a whole lot of effect on the short share interest, the free float, but that's being reported at 21.41% right now. Cost per hour average at 51.1, max at 71.19, and minute 41.83. Shares on loan for the day today is 180.27 million shares on loan, compared to about 900. That's about 900,000 shares more than what we had yesterday. Texas got about 309,000 shares of that is in new short interest. For Ape, An hour ago, there was an increase, there was 540,000 shares on new borrowed amount for the day. Now it's currently at 658,000 shares. That's going to have the effect of raising that short share interest of the free float very minimally to 9.94%. Cost per hour average at 10.3. Max is 17.85 and min at 7.94. Shares on loan for the day today decreased by 300,000 shares day over day and closed short interest to 51.53 million shares on loan. Taking a look at options. Highest amount of options for the day today, coming in for the calls at a $7.50 strike price. An hour ago, there was 19,000 contracts. There's now 22.3. On puts, highest amount of volume at a $7 strike. An hour ago, there were 7.7 thousand contracts. There's now 8.6. Combined price of AMC and Ape is at 8.17. We did drop down and test this lower level of support that we had. It bounced off of that and are kind of trading sideways right now, kind of between 810 and 825. I'm kind of guesstimating that there may be a breakout going upwards here in the near future, possibly in the aftermarket hours or pre-market tomorrow. Taking a look at orders by Fidelity customers. Ape has been doing really great numbers today and has been in the top 10 all day long today, most heavily traded stocks. Here we are, I think that's 10th. 3, 6, 9, oh wait. 3, 6, 7, 8, 9, 9th. 91% buying to 9% selling ratio. Super strong on retail's part. GME was really close to falling off the list, but is in 30th position right now with a 67% buy to 33% sell ratio. I do not see AMC on the list here due to low volume. SSR did not trip so far for the day today on AMC, which would have been at $6.69. Ape did trip today at 0.945. Shares available to borrow does look like they did return some shares today towards the end of the day. It looks like they've returned about 45,000 shares. Fees are back up to 40.4%. NASDAQ is up 3.48, Dow Jones is up 1.51, and the S&P 500 is up 2.36. We have 5,020 advancers to 1,800 decliners. The market is cooking with bacon grease because it's looking hot and tasty right now. The US dollar is down right now, 0.84. Oil is currently down 0.36. Mortgage-backed securities are up between 0.61 and 0.77. And SPY is up 2.43%. VIX is down 5.57. VTI is up 2.42. IWD is up 1.61. Tesla up 5.13. Amazon up 3.16. Cinemark up 0.33. Doge is up 2.91. Bitcoin is up 3.84. GME is up 0.86. HYMC is down 5.28. HOOD is up 4.03. CS is down 1.52. NCMI is up 2.18, Ape is down 13.57, and AMC is down 2.56. Who remembers me saying they were pricing in AMC, or not AMC, they were pricing in the market for Powell's speech for the day today on Monday and Tuesday. Taking a look at inflow versus outflow. Ape actually has more outflow now than it has an inflow with, or not Ape, AMC rather. $600,000 more outflow than inflow. 21.53 million shares traded so far after, let's see, we got about 40 minutes left to go here, putting us at 350 minutes of trading. We're on pace for about 23.99 million shares traded for AMC by the end of the day today. That'll meet that 10 to 30 million share expectation that I had in pre-market. On the 1 hour time interval, we have more buying pressure than selling pressure with an RSI of 44.91, which is slightly below average. On a 30-minute time interval, there's more selling pressure than buying pressure with an RSI of 46.78, which is slightly below average. And on a 5-minute time interval, more selling pressure than buying pressure with an RSI of 53.88. which is just slightly above average. Looks like Ape's got some news. Nah. Ape has roughly $10.2 million more inflow than outflow. Pretty massive. 50.75 million shares traded by so far for the day today after 341 minutes of trading? No, 351 minutes. Putting us on pace for 56.4 million shares traded before the end of the day today. In the pre-market, I was way off on this one. I said, and I don't mind being low. It's when I'm high I don't mind. But I adjusted my volume prediction from normal 5 to 25 million up to 15 to 35 million shares traded for the day today, and we are obviously much higher than that. Spiking volume is always a good thing. Usually you want to see price rising with spiking volume. Usually it's a bearish move when you do see spiking volume and lower price. The question is who's selling? If institutions are selling, then there's nothing much we can do about that. Taking a look at the 1 hour time interval, we have more selling pressure than buying pressure with an RSI of 17.61, which is severely oversold. On a 30-minute interval, there's more selling pressure than buying pressure with an RSI of 17.49, also severely oversold. And on a 5-minute interval, more selling pressure than buying pressure with an RSI of 26.71, severely oversold. Not really. 26.71 is just oversold. But it was severely oversold earlier and then shot back up just briefly and then came back down again. Wow. The Bollinger Bands look, man, that's weird. I don't think I've ever seen that before. The Bollinger Bands on Ape almost look like they crossed. Is that possible? What the heck's going on there? All right, let's see what you guys are writing here. I gotta grab a beer real quick and I'll be right back. Callie says they're selling back and forth. They sure are. Nana, I gotta go grab a beer real quick. Give me a second. I'm gonna go grab a beer and then we'll toast out the day and work into the trivia. Give me 1 second. I'm gonna hit the restroom while I'm at it, and then I'll grab a beer and I'll be right back. Yeah, I got a coughing fit going on there. I think I got something. I think there's some kind of allergies are going. We just. I feel like we just hit fall because all the leaves on our trees over here just started dropping like massive. I wouldn't expect that with fall that there would be some kind of pollen or anything like that, but for some reason or another, with all these leaves falling, maybe it's cedar fever or something like that. I have no idea, but I'm really congested right now. It's kind of odd. It feels like allergies. Alrighty. Pro Jeweler says ragweed. Maybe that's what it is. I don't know. All I know is I can feel it. I don't know if you guys can hear it in the way I'm talking. I feel like I can hear my, or at least I feel like I hear my voice being more raspy. And I can feel it in my chest. Like I just feel like a heavy pressure. And it's not good, man. I hate it. And the worst thing is beer always makes it worse, for whatever reason. But I'm gonna toast out the day like usual. Let's see here. Stop the meth. Thanks, Mountaineer. I appreciate that. Um, let's see. What am I gonna toast to here? What am I going to toast to? All right, it's time to do the. I don't have time to sit here and think about it too long. I'm going to toast to staying strong even when the wind's getting knocked out of you and you're watching price fall on a daily basis. Holding through that makes you a champion in my mind, and I appreciate you guys coming here and talking amongst yourselves. Even if you have your doubts and whatnot, I see I see that you guys are remaining strong, and I see buying pressure that's absolutely phenomenal. So to excellent buying and holding. Cheers. Javi the Great says to throat yogurt. All right, hit live, guys. Hit live now. Hit live now. Say ready. All right, first person to guess what Adam Sandler movie it is that I'm going to use for the quiz today gets an additional 2 points. So start naming the movies, and I'll tell you whoever gets it first. 51st States for Dutch. That is correct. That's going to be the movie. I know some of y'all, Dutch, congratulations on the 2 points. Some of y'all are going to be like, are you kidding me? Out of all the Adam Sandler movies, look, don't you start with me. I'm the one who gets to decide. I knew Danny had to be the first person. Danny had to be the first person saying, that's a chick flick. Suck it up, Danny. Suck it. It's got Adam Sandler in it. And it's also got what's her face in it. Food Dog says 51st dates. Casey loses man card. Nana says I'm out. Oh man. Oh man. All right. Here we go. First question. The character played by Adam Sandler known as Henry, what does he do for a job? Some of you guys are close. Yes, he works in an aquarium. I'm not going to give it to you, though. You got to tell me what he does. There it is. George Abdelmish, I can't spell that, George. I'm gonna put George ABD. Aquarium vet is the correct answer. I needed a little bit more specific. Working at a vet or working at the Marine Center did not count. I won't count that. George. Somebody was asking about the price of Ape and why it's doing so poorly. My best guess is that they've got to get this price down in order to try and get people to sell shares. To me, it looks like panic is what it looks like. All right, next question. Where does Henry meet Lucy? And if you can't, the spelling is going to have to be right, unfortunately. It's going to be a tough one. I need the correct spelling for it. The Waukee Lounge Cafe. That is not correct. The Hookie Lao Cafe is correct by Ken. Ken, I know what you've done, sir. You gave yourself away. You gave yourself away with that answer. You know how I know, Ken? Do you know how I know, Ken? Because I went through and just randomly answered questions and I just put in answers. And I know what you're doing right now, Ken. Don't do it. Resist the urge, Ken. All right. What does Henry order the first time he is at the Heike Lao for breakfast? What does he order? Who said waffles first? Censored content did. I'm gonna have to go back and rewatch the movie. I'm actually looking for something else as the answer because this is telling me that the answer is something different. Ken, you did it again, man. You're giving the wrong answers again. So I'm gonna have to look it up because that's how I kind of feel like I remember it too in the movie, that being waffles or something like that. But I don't know. Maybe I'm just not remembering it correctly or not. But the answer that's being given here is something entirely different than waffles. If it is waffles, I will find out for sure and give the point to censored content. But none of you guys have answered the correct answer so far, at least according to what this quiz is saying right here. It's not waffles. And I'll say it's not a food. Coffee by Katie May. All right, here we go. What is the name of Ulla's wife? Nice try, Jeff. Nice try. Oh, Ken, so close. So close, Ken. Oh, my biggest fan, so close. It's like a mixture of like my biggest fan and Ken's answers together. Moo Moo for Danny R is correct. Why does Lucy break up with Henry? I like the Jabib's answer there with amnesia. Dude Man Diaries is correct. She was holding him back. One, two, three, four, five. We're only halfway done here. What condition does Lucy have? Well, yes, it is amnesia, but they refer to it as something in the movie. It's called. It has a term. There was a term. You're right, though. It is amnesia. At least it seems like amnesia. Troy, very close. Not quite. It's not. It's close. Very, very close there. Goldfield syndrome by trip provoked is correct, or try provoked. I always say your name wrong. I apologize. How did Lucy's brain become damaged? Stupidity. What happened to her? What happened to her? She had something happen to her. Car accident for Jabibs is correct. One, two, three, four, five, six, seven. Three more questions. Doug is taking something. What's Doug taking? Steroids by Chad Hardy is correct. Why does Henry offer to let Lucy smell his fingers? Fish smell is correct by Chad Hardy. That is correct answer. And I think this is the last question. 2, 3, 4, 5, 6, 7, 8, 9. Last question. Here we go. This is the last one. I already decided what it was before I got on here. Lucy's studio had a picture of a person with a what instead of a head? You can do it. What did the person have instead of a head? Egg for Chris Griffione. That is correct. Let me add up the points for the day today, guys, and I will tell you the scores here in just a second for the week. Dutch, congratulations on your first 2 points of the week. George ABD, because I couldn't write down the rest of your name. Congratulations on your first point of the week. Ken, congratulations on your 4th point of the week. Katie May, congratulations on your 3rd point of the week. Danny, congratulations on your first point of the week. Dude Man Diaries, congratulations on your 2nd point of the week. Try Provoked. Congratulations on your first point of the week. Jabibs, congratulations on your second point of the week. And Chad Hardy, congratulations on your first 2 points of the week. In first place, censored content with 5 points. Tied for second is It's Me and Ken Win with 4 points. Third place goes to, let's see if there's a tie. No tie. No tie for third place. Katie May has 3 points for third place. Everybody else has either 2 or 1 points. Congratulations, guys, on your points. We have one more day. I'll try to make sure that tomorrow's movie is a little less chick flickish for some of you guys out there. I know I'm not going to make it like 300, but I'll try to make it a good movie for tomorrow. You bunch of whiners. All right, Darren. I'll make sure I get a box office winner. I'll make sure it's a box office winner so that the questions wieners, you bunch of wieners. So that it's, oh, Arby's saying a James Bond movie. Ooh, that's a good one, Arby. I like that. I don't know. What do you guys think? Do you guys think James Bond for tomorrow? Kind of curious. What do you think? Jeff says Marvel movie trivia. Chad said Kevin Costner. Did I start Brian off with minus 5 points? No. Why would I do that? Big Trouble Little China. Micah says the new Top Gun movie. I got a couple people that said yes on James Bond. That's what sounding makes, Doc. Gosh. I dare you to do that though. Next time they stick that tongue depressor in there, I dare you to go, gosh. Oh man, give me a second. I got a cough. Yes, Bird Eye View Photography. I checked it, and it kind of made me upset that I didn't get a chance to buy any of the socks or the beanies because I really wanted to buy those. Hey, Doctor, I saw that coming a long ways away. Darren says, "How about a festive one?" I was thinking about that the other day. Sorry, I was thinking about that the other day, Darren, and I was trying to think of what kind of festive Thanksgiving kind of movie could I pick. And quite honestly, like I can't really think of like any great Thanksgiving movies. I don't know about you guys, but I'm kind of curious, like what Thanksgiving movies can. I mean, there's a lot of movies out there that portray a Thanksgiving meal that will occur in it, but a lot of them are more kind of like Christmas type movies, and then they go straight into Christmas or something. But yeah, we'll save the Christmas ones for maybe like a week or two before Christmas starts. And I'm sure there's tons of Christmas movies we can go through during that time. I just don't want to start them too early. Yeah, we'll make sure and do Christmas trivia. Don't worry. So I don't know why I decided to poll you guys this, but as I was listening to Powell speak today, which by the way we didn't finish the questions, and I don't even know if you guys really care or not. Shoot. I forgot to play. I forgot to play that guy's video again. Doggone it! I should have done that earlier. Upper Echelon's video is linked to the top, guys, and I think it's a really important video to watch. There is like a minute and a half or so. It ends up being about a 20-minute video, and I think it's really, really important to watch. Go over there, check that out. I think it kind of lets you know what's happening right now, and I think what to expect for the future. And I since I don't have 20 minutes left here to play it in, I would just highly recommend that you guys play it. For those of you who didn't have a chance to hear it earlier this morning, if you don't want to click on it now, what I'll do is I'll play it tomorrow afternoon before or closer to the end of the day. Who wants to bet what the closing price on Ape's going to be? I'm going to go with 0.911. I'm guessing 0.911. The reason that I did the poll though is when we were listening to Jerome Powell talk earlier today. One of the things that I thought was kind of interesting, or one of the questions that was kind of in a roundabout way kind of asked was what should we expect? I guess cost of living to look like, which or something of that effect, and it kind of got me thinking about you know, with interest rates having been increased over this last year, what I would assume, or I would at least think that most of you guys would think that cost of living increases should be rising due to that as well. In other words, like let's say most companies, I think usually do like a 2.5 to 3% increase in cost of living as an average. That's kind of for most companies. So do you think that they should be adding a 1, 2, 3, 4% increase on top of that due to the fact that there's been an increase in interest rates that would raise the cost of living? And I personally feel like that's the case, and I think that should be something that probably should be factored in as well, with increasing pay due to cost of living rates being increased. Also, GDP numbers came out or should have come out today, and I don't think I really covered that with you guys very well today. But I do believe that they talked about it. So far, right now for the third quarter, we're at 2.9. Prior to today's numbers, it was 2.6, so we had a 0.3% increase for this last month's data on the Q3. So we've had an increase in GDP by 2.9% for the quarter. Oh no, it says annual rate of 2.9. Oh no, it does say percent in the third quarter. So and I wasn't actually, I mean, I was pretty sure when I was kind of thinking about it last night. Adam and I were talking a little bit about the GDP numbers coming out, and I said, I feel like, if GDP is going up, then that means that production is likely going up as well, which should be bad on inflation. So I went and looked it up to see if that was the case, and it is kind of the case. If GDP is rising, then you have potentially more production that's happening, and is potentially causing more inflation. So I think maybe with those GDP numbers that just came out for this month, with those numbers rising still, I don't think companies are scaling back on production, or at least not yet. At least it's not seen in the numbers yet. And Casey, what's the case? It's Kasem's. It's Casey Kasem's. But yeah, I don't think I still don't think that they have inflation under control yet. UPS guy says I got a cost of living increase in July. I believe I'll look tonight at what percent increase it was. Yeah, I was just kind of curious. I wanted to see what you guys' outtake was. Most of you guys are saying that the increase should be a 4% increase, which is actually really, really high considering what the rates have gone up by. I wouldn't expect that much, but I can understand why you guys would be saying that. What is the movie title of the 2012 documentary film directed by Neil Barsky about former New York City mayor? I have no idea. I feel like I should know, but I don't. GDP also goes up with final sales price increases. This is true. This is very true. Which I would assume, censored content, that what you're saying right there is that it could be a reduction in production, and with a reduction in production, I don't think I've ever said that in my life before. With a reduction in production, that could increase demand, which would drive prices up by what I'm estimating you to be saying. I think that would be correct. So it could be that GDP raise or elevated value could be based off of that. We're getting a bit of a big move there on well, not really big, but it's starting to move a little bit there on Ape. Our bottom, it looks like our bottom was 9.9%. Let me go ahead and put that into my numbers here. 0.9% is a 50.82% decrease in price. 1.04 is going to be the value that the price has to get up to reset synthetic price failure. Let me go ahead and move that down. Close enough. Right, censored content saying selling less for more. It's a much easier way than what I said. But yeah. What movie is it, Dr. Zeno? You got to just tell me what it is. Let me guess. It's having something to do with hot Koch. I don't think he dropped shares today. Jabib will tell it's Koch. How did I know? Dr. Zeno, that's funny, man. Jabib says difference in volume. I think he dropped shares today. I think you need a couple different things to kind of clue you in as to whether or not shares were actually sold into the marketplace. I don't just think an increase in volume necessarily dictates that there were shares that were sold. So I'd actually be looking for something different. But actually, if you guys really want the true answer here as to why Ape shares are moving down as much as they are, I think they're trying to bully Adam Aaron into selling shares at these lower prices. I really do. I think that they're trying to get him to sell shares and they're going to continue to drop it so long as he doesn't sell shares into the market. They're going to keep dropping the price more and more and more. I think they're trying to put the squeeze on Adam Aaron. I think we have a little bit of a standoff going on here. SSR did trip today, Tim. That's what the red line is. Alrighty, guys. It's that time of the day, and you know what that means. Let me make sure I'm not going to blast you out with music here. Ooh, I would have. Eat, sleep, drink, get plenty of rest. Tomorrow is Thursday. We got 2 more trading days left to go here. Spend time with your family, spend time with your friends. Take your pets for walks because they like getting outside too. But above all else, don't have a good night. Have a great night. Alright. I'm gonna try doing this. I don't know how good my video game sounds or my sounds are anymore, but I feel like the sound impression that this car made before it took off was like it was something like that. I don't know. That's what you're getting out of me. 88 miles per hour. Yeah.
T-minus 90 seconds and counting. T-minus 60 seconds and counting. We are transferring to orbiter internal power at this time. Discovery is now running off its 3 onboard fuel cells. Coming up on a go for auto sequence start. And we have a go for auto sequence start. Discovery's onboard computers have primary control of all the vehicle's critical functions. T-minus 17 seconds and counting. 15, 12, 11, 10, 9, 8, 7, 6, start, 2, 1, booster ignition, and liftoff of the Space Shuttle Discovery, returning to the space station, paving the way for future missions beyond. Discovery's onboard computers commanding the main engine nozzles to swivel, aiming the shuttle for its precise target in space for main engine cutoff.
Should have a good forward link now and
Dan, you sound good.
Discovery Houston, negative return.
Copy, a negative return.
say better things will come our way. No matter what they try to say, you were always there for me. Some way, when the sun begins to shine, I hear a song from another time and fade away, and fade away. Just close your eyes and I'll take you there. This place is warm without a care. We'll take a swim in the deepest sea. I go to leave but you reach for me. Someone said you tried to overpass me. Someone said we got it all wrong. Someone said we tried to overpass me. Terribly where I belong. So far and so long, so far away. So far, so wrong, so far away, away. Someday, when my life has passed me by, I'll look around and wonder why you were always there for me. One way, in the eyes of a passerby, so look around for another try. And fade away, very place where I fade away, very place where I fade away, and fade away, and fade away, and fade
When the night's getting cold, you're needing a shoulder. Puff out your chest and be a little bolder. All we do is we buy and hold. There will be shills who wanna steal your thrills. There will be friends who hold till the end. There will be doubt, fear and cloud, but it's all in your head. Those hedges are dead. Panic and fear really are near, but it's not ours to own. We have shown that all we do is buy and hold. Oh, there will be shills who wanna steal your thrills, and there will be friends who hold till the end, and there will be doubt, fear and cloud, but it's all in your head. Those hedges are dead. So when the night's getting colder, you're needing that shoulder. These apes got your back, we got each other. All we do is we buy and hold.